Okay, let's remember basic MSP. As you can see, when we are in a downtrend, the moment we break the final lower high to upside, that is our market structure break. Vice versa, in an uptrend, the moment we break the last higher low to downside, that is our market structure break. This is how simple to identify market structure breaks. However, there are two types of MSP, strong and weak. Identifying strong market structure breaks is easy. First, identify the deepest lower low. Second, identify the lower high, which creates the deepest lower low. If the price breaks that lower high at once with strong candlesticks and closes above it, then it is a strong MSP. Let's see an example. This is our deepest lower low. And this lower high creates the deepest lower low. Now, we have to break this lower high strongly. As you can see, we are breaking the lower high strongly before a pullback. This is a valid strong market structure break that we can trust. There are two types of weak market structure breaks that could be fake. You should be aware of them. I still consider them as market structure breaks, but I always take a note by saying weak MSP. So I should be aware and more cautious. Some people do not even consider them as MSP. So easy to spot them. The first one is very similar to strong MSP. However, instead of breaking the last lower high at once with strong candlesticks, price struggles a lot. You will see lots of wicks and quite a struggle. If the price returns from here, it is a weak MSP. Simple as that. Let's see an example. As you can see, we have long wicks that make the market structure break. However, we do not see candlestick closes or strong candlesticks above the last lower high price level. So, this is a weak MSP. It could be fake and not fully trustable. Second weak MSP. Where is our deepest lower low? Yes, here. Which lower high creates it? Yes, this one. So, until we break that lower high strongly, we cannot consider it a strong MSP. Sometimes price will struggle and make ranges. Breakout from the small range is considered a weak MSP. Again, to be valid and strong MSP, it should break the lower high, which creates the deepest lower low. Let's see an example. Can you identify the deepest lower low? Yes, this one. Which lower high creates that lower low? Yes, here it is. So we have to break this one for a stronger and more trustable MSP. Okay, step 2. Understanding the entry zone. Now, right after a strong market structure break, we can determine our strong entry zone. This is the secret of price action and smart money traders. The area between the last lower high and the deepest lower low is our entry zone. This is where we seek possible entries. For now, I will keep it quite large for you to understand. Later on, we will learn about how to make sniper trading entries with specific price action strategies. Why is this an extremely important entry zone? Because this is where all the market makers and institutional entries happen. There are order blocks, breaker blocks, mitigation blocks, high volume nodes, low volume nodes, imbalances, Quasimodo, optimal trade entries, Fibonacci zones, volume profile key points, supply and demand areas. So you can use sniper trading price action levels from any of those. I will teach every single one of them with example videos. Let's see an example. 1. Identify the deepest lower low. 2. Identify the lower high creates the deepest lower low. 3. Confirm a strong market structure break. 4. Draw your entry zone between lower high and the deepest lower low. This is so simple, guys. Price action and smart money trading are simple. You just need practice. Step 3. Patterns. Before moving on to the entries, I'll talk about chart patterns. Normally, smart money traders do not involve themselves with chart patterns. However, you are about to witness a key trading secret of chart patterns. Yes, it all depends on market structure breaks. Let's check a head and shoulders pattern. The same strategy again. Strong downtrend until the price hits a support area and struggles. Waiting for a market structure break. We determine our entry zone. Then price moves back to our entry zone. Finally, we are searching for a suitable entry. Another example, wedge patterns. Downtrend until price struggles. Market structure break happens with a strong candlesticks. Finally, price pullbacks to our entry zone for a possible trade entry. So, what I want to say is this. It does not matter if you are a retail trader, price action trader, smart money trader, or even if you trade only indicators. Market structure breaks are the core of all trades. Every single trader should recognize market structure breaks from 1,000 miles. Otherwise, it's impossible to make consistent profits. All of my real trades that you see in my posts, over 30%, 50%, or 100% profits, depend on market structure breaks. That is one of the first things that I look for before I start trading. Step 4. Entries. Yes, the most critical and probably the hardest part. As I said before, we'll learn every single entry area, such as order blocks, Quasimodo or Fibonacci levels in the next videos. Please subscribe if you are interested. The first entry type is using the same time frame without checking the low time frame. In my all videos, I talk about the importance of these three candlesticks: hammers, pin bars, and spinning top and bottoms. These specific candlesticks are critical for finding entries, especially with long wicks showing us the strong will of the buyers or sellers, and the following strong candle forming us a bullish or bearish engulfing pattern for entries. Let's see the example. As you can see in this example, price pullbacks to my entry zone right after a strong market structure break. Now checking for the pin bar and the next strong candle. I entered the trade with the bullish engulfing pattern. Don't worry, this video is about technical teaching. Next video will be full of trading examples. The second entry is the strongest entry type in the world, used by all pro price action traders. Finding entry zone in high time frame and finding entry points in low time frame. So for example, you confirmed market structure break at a 4 hours time frame and waited for a pullback. Then you go to the 5, 15 or 30 minutes time frame and look for a micro market structure break. This is how all pro price action traders enter a trade. This is how people make sniper trades with 100, 300 or 500% gains. Let's see an example. Right now we are looking at the same ticker. On the left, we are looking at 30 minutes time frame. Confirming our market structure break strategy. 1. Identify the deepest lower low. 2. Identify the lower high creates the deepest lower low. 3. Confirm a strong market structure break. 4. Draw your entry zone between lower high and the deepest lower low. Okay, now, when the price pulls back to our entry zone at 30 minutes time frame, you open the 5 minutes time frame, which is on the right. You see this little part? Yes, we are looking at this area in a 5 minutes time frame. And then you apply the same market structure break technique and enter the trade from the micro entry zone. Okay, let's check the Ethereum example. This is a great example to start with. I'll also do a mini introduction to order blocks in this market structure break example. As you can see, Ethereum is in a significant downtrend here, falling from $5,000. At one point in time, there was a support at $4,000. Please keep checking round numbers. You will notice that almost every asset struggles around big round numbers, natural support and resistance lines. We can easily identify the strong market structure break here. Let's break it down into step-by-step progress. 1. Identify the deepest lower low, magically around the $4,000, a round number. 2. Identify the lower high that creates that lower low. 3. Confirm the market structure break. So, is it a strong or weak MSB? Yes, it's a strong one because it breaks the lower high strongly and closes a candlestick above it. 4. Draw your entry zone. As you remember, the entry zone is between the deepest lower low and the lower high that creating the deepest lower low. How to enter this trade? You can either use a risky entry with a pin bar and a strong candlestick right after it, or you can use a low time frame analysis to find a micro market structure break to enter. Okay, you can easily spot the pin bar and right after a very strong candlestick that shows me bulls are gaining power. I wait until the candlestick closes and make an entry right here. My stop loss is around the bottom of the pin bar. The profit order is around 1.5 or 2R, depending on your risk management. However, don't worry, I'll show you how to target specific supply and demand zones in the future. As you can see, this is an almost 5% trade with 20x leverage. The end profit would be over 100%. Let's make a small entry to order blocks. I'll be shooting entire videos about order blocks and sniper trading examples in the future. What is an order block? It's so simple. It's just an accumulation of orders from market makers, special supply and demand zones. I got this question a lot. How do I draw my supply and demand zones? Yes, order blocks are one of the strongest supply and demand areas. Let's find the order block here. When security makes a strong market structure break, we should look for the lower low started that significant movement. As you can see right here, this movement creates a strong MSB. So, the last red candlestick before the movement is one of the strongest bullish order blocks. This red candlestick is our order block. I personally mostly take the body of the candlestick as our demand zone. Yes, the demand zone. Finally, you have learned to identify a demand zone. What we expect is that when the price comes back down here, there will be a reaction. In the future, you will learn more about order blocks, supply and demand zones. Do not worry. How to trade with an order block. You may use pin bar entry or low time frame style entry with micro market structure breaks. However, there is a third method, which is sniper trading entry. As you can see, price touched our order block demand zone and flew away. This is sniper trading. I sometimes set stop limit orders to these order blocks. So whenever the price reaches this order block, it triggers my orders. I do not suggest this to you until you reach some significant trading experience. However, as you can see, I could have doubled my profit with this. If you check this Solana example, I've used the stop limit order and triggered my order from the wick that you see. Because this was very close to order block zone and there were other elements supporting my entry. Let's talk about Bitcoin. Remember those times when everybody said that Bitcoin was gonna be $500,000 or $1 million? However, if you knew the market structure break and its importance, you would be taking profit or looking for a short selling here instead of buying it. Let's check it. 1. Identify the deepest higher high. 2. Identify the higher low. 3. Confirm the market structure break. 4. Draw your entry zone between the deepest higher high and the higher low that creates that. Why do we draw entry zones this large? Because we are in the beginning of this price action trading journey. Later on, we will make the entry zone smaller and smaller with order blocks, breaker blocks, Quasimodo and others. Let's identify the order block here again. This time, a bearish order block. Where is the market structure break? Obviously here. Which move created this market structure break? Yes, this deepest higher high. So this time, the last green candlestick that starts a big movement, a market structure break, is our strong bearish order block. This order block is a great supply area. As you can see, magically, the price hits our supply and drops 50%. Now you have learned how to draw supply area too. Great, you are improving really well. So, why trade mainly with price action and not with indicators? 1. Price is real time and the most significant storyteller of the chart. 2. Price helps us to make sniper entries with maximum profit and minimum loss. 3. Indicators are lagging. Most of them make you enter a trade late or exit early. 4. Indicators could be great helpers for your decisions. I use indicators only as helpers. My main decision always comes from the price and the volume. Finally, let's see an example of the combination of high time frame and low time frame analysis together. We will combine 4 hours and 15 minute time frames. As you can see, CTK-USDT is in a significant downtrend until the price hits $1. Magically, again, another round number. Let's go step by step one more time. 1. Identify the deepest lower low. 2. Identify the lower high that creates the deepest lower low. 3. confirm market structure break, take a note if it is a strong or weak. As you can see, a strong one. 4. Draw your entry zone, which is between the deepest lower low and the lower high that creates it. What is the next step? Open your low time frame and start looking for a micro market structure break in your big entry zone for a suitable entry. As you can see, 15-minute structure, a clear market structure break with a micro entry zone. Let's look at this. Entry zone in an entry zone. Now, this is a real sniper trading entry. You can make any kind of entry from the micro entry zone. What I suggest you, keep a larger stop loss point under the deepest low here. Again, I am a reaction trader most of the time. I do not hold positions for so long. However, as you can see how powerful are the sniper entries. 20% gain. Crazy with 20 times leverage. You could have over 400% profit here. But I do not suggest it. Just secure and lock your profits as soon as possible. The longer you are in a trade, your risks are getting greater. No one in the world is gonna know what will happen in the next minute. Never forget this. Now, what is an order block? It's the accumulation of orders from the market makers. Let's understand the idea. Assume an institutional bank wants to buy Bitcoin, which is worth like $100 million. If they buy it at once, they will disturb the market by causing huge price moves. So instead, they will split the money into small chunks like $20 million and buy it slowly without disturbing the markets. It is believed that order blocks are these buy or sell supply and demand areas where market makers' orders are piled up. Most of these price action concepts are created by ICT, Inner Circle Trader. Let's start with the bullish order block. I'll explain it step by step again. You already know what MSB is. After a nice downtrend, price struggles and creating our deepest lower low. So, which lower high creates the deepest lower low? As you can see, this one. The next step is confirming the strong market structure break. You already know all these and entry zones. Now comes the order block. So, which swing causes the market structure to break? As you can see, this swing. What should you look for? The last swing that causes the market structure break. So the last red candlestick that starts the swing, which causes MSB, is our order block candlestick. If you are confused, don't worry. Let's see an example. As you can see in this example, our strong MSB and deepest lower low are quite clear. Now can you tell me, which last red candlestick starts the swing that causes the market structure to break? This is our red candlestick, our order block demand zone. It all starts with this candlestick. And when the price comes back to this demand zone, we expect a reaction. Let's check the bearish order block. 1. Identify the deepest higher high. 2. Identify the higher low that creates the deepest higher high. 3. Confirm the strong MSB. 4. Identify the swing that causes the market structure break. 5. Identify the last green candlestick that starts the swing which causes the market structure to break. This green candlestick is order block, our supply area. Let's see an example. Our deepest higher high and strong MSB are already confirmed, as you can notice. Now, tell me this. which swing causes the market structure to break? Yes, you can see that this swing causes the market structure break. So, when did this swing movement start? Right here. The last green candlestick that starts the swing movement is our bearish order block and our supply area. We expect price react from here. Do not worry, this is just a technical video. The next video will be full of examples. Nothing is perfect in life. Trading is the same. Many times you will notice that MSB does not happen at once without a prior consolidation. Now I want you to tell me which swing causes a market structure break. Number 1, number 2, or number 3. As you can easily see, our market structure breaks with the number 3. So this time, our order block demand zone is this red candlestick, which creates the swing with the market structure break. Let's see an example now. As you can see in this example, there is a bit of consolidation before the market structure break. There are 3 swings. Does number 1 cause MSB? No. Does number 2 cause MSB? No. Does number 3 cause MSB? Yes. Now, this red candlestick is our order block. As you can see, price come back to our demand zone and reacted really well. Okay, now you identified the order block candlestick, but how to draw supply and demand areas from these order blocks? This concept heavily depends on the trader. If the candlestick has a huge body and small wicks, I only take the body of the candlestick as the demand or supply area. If the body is so small, I consider taking wicks with the body as a whole. The most important part of order blocks is the middle point. This is where pro traders place their stop limit orders for sniper entries. This is a risky way of trading, however, the reward is really high. Before we move on, I have to talk about break-off structure, BOSS. It is a very easy concept. Right after market structure break, if the trend continues by making new higher highs, each time the price breaks the previous higher high, we have a break-off structure. Now some traders call MSB as BOSS. But names do not matter. You can name it whatever you wish. Call it anything you want. I've seen many traders use higher lows or lower highs that cause a break-off structure as order block, supply and demand zones. Well, actually, there are market structure breaks at every single swing point. Just go in a lower time frame. You will witness another market structure break. So this means that order blocks are everywhere. But the question is, are they usable? We will learn soon. Another thing I saw is that some traders consider every single engulfing pattern as order block, supply and demand zones. If you go in lower time frames, you will again see that there are market structure breaks. Again, the same question. Can we consider every single engulf pattern as an order block? Don't worry, you will learn how to identify the highest quality order blocks right now. Quality order blocks part 1. Obvious strong market structure breaks are my number 1 preference to identify order blocks. I usually look for strong MSB rather than break-off structure or random engulfing patterns. Because these order blocks are so strong that they manage to change the market structure strongly. This is not an easy task. Generally, a market maker or a big catalyst such as news can do this. Quality order blocks part 2. I always look for big pumping moves with imbalances rather than slow expansions. This increases the quality of the order block. But why? Again, think about it. Can small traders and retail traders move the price like this? Usually, they cannot. So, there should be a reason behind it, such as market maker involvement, or there's a catalyst like big deals, contracts, or partnerships. Quality order blocks part 3. Okay, right after a big pump with imbalanced candlesticks, I would like to see slow pullback to order block supply and demand zones. This indicates a healthy price action. Otherwise, if you see pumps and dumps all the time, it means that it is quite an easily manipulated asset. Quality order blocks part 4. This is again my personal choice. I find order blocks stronger if they can break the market structure at once without prior consolidation or a range. Of course, the other types of order blocks are still good quality and usable. Quality order blocks part 5. Key levels are really important to make the order block stronger. Actually, key levels make every other price action structure stronger. So, what are these? Significant support resistance areas, SR flips, other price action supply and demand zones, round numbers, significant key levels like day, week, month, high, low, close, open, volume profile, high volume nodes. So combining these key levels with the order block makes the OB much more high quality. Quality order blocks part 6. This one is about entry quality. Market structure break does not mean the trend will change. Yes, it is a high chance, but not certain. Many times prices come back to test the order blocks again and again. I experienced that the first test back to order blocks have the highest quality reactions. Other tests could be unreliable or unknown. Okay, let's create my ideal super order block, but this is just my own opinion. 1. Strong market structure break confirmation. 2. Market structure break happens at once without prior consolidations. 3. Market structure break happens with big pumping candlesticks with imbalances. Do not worry about imbalance. I'll teach you in detail in the future. However, you can watch the best trading view indicators for price action video that I showed the imbalance indicator. 4. An engulfing pattern could be ideal for a higher quality OB. 5. Fast pump time than a slow pullback time for a healthy price action. 6. Key levels are very important, such as support resistance, day, week, month, low and highs, and volume profile, high volume nodes. 7. The first test to OP zone is usually better and healthier for entries. Okay, let's see the example. 1. Strong MSP happens. 2. MSP happens at once without prior consolidation. 3. MSP happens with a big pump with imbalanced candlesticks. 4. Nice engulfing pattern at OB point. 5. Fast pump and slow pullback for healthy price action. 6. Key levels. Actually, this is the area of the previous month's low. 7. The first test for OB demand zone. Yes, this is my ideal super order block. Of course, there will not be 7 out of 7 all the time, it is impossible. But please keep checking these parts as much as possible. Okay, let's talk about how to enter order block supply and demand zones. There are three significant entry types, and I use three of them depending on my time and risk management. The first entry is a risky sniper entry. What you do is so simple. Identify the mid-level from the high-quality order block candlestick and set your stop limit order. That's it. Our stop loss order at the low point of order block candlestick. This is the most rewarding entry type, but the problem is that there is no guarantee that order block will work. Price may drop even lower, who knows? The second entry type is that I mention all the time. First of all, identify a significant reversal candlestick around the order block supply or demand zone. For example, hammers, pin bars, or spinning tops and bottoms. And wait for the next supporting red or green candlestick to make an entry. Your risk-reward ratio will be more balanced, unlike high rewarding sniper entries. The last entry type is the most secure entry possible, which is used by all pro price action traders. The downside is it requires patience and time. You have to combine high and low time frames and find order block areas in a low time frames with a strong market structure break. As you can see, this chart is in 4 hours. If you go down to 45 minutes chart, you will notice a micro MSB and a mini order block to enter a trade. Yes, this is your best possible entry. However, as I said, I use 3 of these entry types depending on my time and risk management. How about scalping and quicker day trading? You can easily combine high time frames and low time frames even for scalping. Find OB in 1 hour chart, make an entry with a 15 or 5 minutes. Find OB in 30 minutes chart and make an entry with a 5 or 3 minutes chart as scalping. Or even find an order block with 15 minutes chart and make an entry with 2 or 1 minute chart, or use a sniper entries. Just go for high quality order blocks as much as possible. It all depends on you. I hope this session was clear for all of you. Thank you for joining me. The next video will be about lots of examples of trading order blocks. Please subscribe to the channel and leave a like for me. Thank you, take care, and see you soon. In our previous video, we discussed the best order blocks possible. This was just my idea. If you haven't watched it yet, please watch that video first. Actually, all the videos in the price action trading playlist to fully understand these strategies. What we are gonna do today is identify order blocks in high time frames like 30 or 15 minutes and find scalping entries within 1, 2, 3 or 5 minutes. I'll teach you a stress-free and relaxing way of trading. Instead of sitting in front of a computer for 10 hours, getting exhausted physically and mentally. Now you remember this strategy, which has 7 steps of quality checkpoints. However, it is not common to find this exact setup. So if I can confirm 3 or 4 high quality points is good enough for me. Before we move on, let's talk about the indicators that I'll be using. If you have watched both of my best trading view indicator videos, you already know that the best indicators that I usually use. My first indicator is higher high, lower low, live. Using this indicator to get a feeling of market structure and trends. The second indicator is imbalance finder. This indicator helps me to identify order imbalances. Price will always want to fill the imbalances. The last indicator is the volume profile for identifying key levels. This is a paid indicator. This indicator is not essential. If you do not have Pro Trading View, you can skip this indicator. Let's talk about the first example. I tweeted about this possible trade on Twitter and it worked very nicely. 80% profit. I keep getting the same question. I do not have any WhatsApp or Telegram or any signal services. I sometimes publish my analysis on Twitter, that's it. Okay, I'll go step by step again. We will do an initial analysis with a 15 minutes chart. Then we will look for a scalp entry in a low time frame. 1. Where is my deepest lower low? Yes, this is the one. 2. Which lower high creates my deepest lower low? It is very obvious, this one. 3. Can we confirm the market structure break? As you can see, it breaks very strongly. 4. As you can see, there are two swings. If you watched the best order blocks video, you can easily see which swing breaks MSB. Yep, this one. 5. Where is my order block? It is the last red candlestick that starts swing move. 6. Do we have an imbalance? Right here you can see the imbalance. Once there is an imbalance, prices will usually want to fill the imbalance. 7. Key level. As you can see, there is a very strong high volume node that acts as a demand area as well. It is so simple. Now I draw my demand area. Once you find your demand area, what do? Just set your alarm over that demand area. Open your TradingView list and keep doing this analysis for 10 to 15 cryptocurrencies or foreign exchanges. Keep setting your alarms. Use TradingView alarms or your broker's alarms like Binance, Bybit, FTX. Then it's time to relax. Go watch your movie. Try to watch a Johnny Depp movie. Do your business. Study if you're a student. Spend time with your family. Create a hobby and have fun. I am teaching you a stress-free, relaxing way of trading instead of staring at monitors for 10 hours and keep losing money. Okay, once you hear your alarms, what should you do? Go in your low time frame like 1 or 2 minutes and watch the price action. Confirm a micro MSP right here. And you remember the entry zones, right? Between lower high and the lower low. You can take any kind of entry from the entry zone. My stop will be below the deepest low area. My target was for this trade 1 hour to 2 hour ratio until this high volume node area. As you can see, there is a 5% move from here with 20x leverage or 100% profit. So you have to combine high time frame and low time frame analysis. Just keep focusing on market structure breaks with high and low time frames. This is how you should be scalping. My results have skyrocketed since I've been using the price action trading concepts. Because I'm not using a combination of indicators telling me to buy or sell. I'm using the price and volume to read the real story. I know you want a quick fix, like just put EMA 9 and 20, when it crosses, just buy it. Or just enter a trade when RSI is overbought or oversold. But think about it, how much money did you make with quick fix indicators? Now, let's talk about this quick 67% profit. What I used here, break of structure, rather than the market structure break. As you can see, where the boss happens. Can you tell me which green candlestick starts the swing move that causes the boss? Yes, there it is. This giant candlestick. So this area is my supply area. What else do we have here? Very strong volume cluster, a high volume node. You can identify this point even without the volume profile. When you see little consolidation ranges, those areas are actually natural supply and demand areas as well. Okay, where were we? Right, confirmed both and our bearish order blocked area. I used the sniper entry style here. I set a stop limit order for this, and my order was filled. But I do not suggest it. Always go into low time frames and try to confirm the micro MSB. So, what did I target here? Do you see this imbalance right here? Yes, this was my target. What do I always say? Price will always want to fill imbalances. Sometimes it will not be able to fill it, but it will attempt to fill it. I cannot express enough the importance of imbalances, so I will shoot an entire video about imbalances. And the result was obvious, a nice profit. I had zero stress and it was relaxing. Trading should be fun and it should not consume your life. Let's talk about this example. I tweeted this and it was an obvious demand area with an order block. I was sure that the price was going to hit my demand area and fly away. But it happened sooner than I thought. Let's analyze this example. Okay, you already know about MSB, OB, and entry zones because you watched all the videos in my free price action course, right? I want to believe so. Can you see this imbalance? When I tweeted this, my idea was that the price was to fill this imbalance and get into the order block demand zone, and I would have a great entry. I was so close. This is the reality. Sometimes imbalances are filled and prices react from there without entering your demand or supply zones. How can you fix this? Let's open the low time frame. Now we are in 1 minute time frame. Let's see what happened. Can you see it? It is amazing, isn't it? Market structure break is the core of price action trading. It is everywhere. What would I do is take an entry from this entry zone. That's it. If I was stopped out, I would wait for the price to enter my demand area and wait for another MSB and enter the trade again. Guys, forget about everything. Just use market structure breaks and entry zones. Then combine it with high time frames and low time frames. Your life will change. This is how you should scalp. No stress, no sadness, no panic. 1 or 2 good trades per day. There is no magical buy-sell indicator for scalping. Since I use price action methods for scalping, my profits become incredibly high. My losses are so limited. Scalping should be stress-free. You shall not stay in front of the computer for 10 hours away from friends or family. Okay guys, take care. Please subscribe to the channel and leave a like for me. Thank you and see you soon. Before everything, you should understand what causes such impulsive moves. There are generally 3 causes of such an impulsive move, which creates imbalance areas in the price. Number 1. Catalysts. What are these? For example, news, good news or bad news. Economic data such as interest rate changes or unemployment reports. What else? It could be Fed talks, rumors, partnerships, and deals. In my best crypto websites video, I have mentioned the Crypto Panic website. I check these websites before opening a position for news and events. The second possibility is retail traders, which is quite rare and uncommon. Retail traders usually do not have the financial capabilities and time-arranged organizations to pump the price like this. Unless it's a well-organized social media group that arranges a time-based pump or dump. There are so many Discord channels dedicated to this. You won't believe it. The last possibility is the market maker. Now, This is what we are after. We do not want news, we do not want social media groups to pump the price. We are after smart money moves. We are after a low time frame, high frequency trading and smart algorithms. That is what we focus on. Okay, let's talk about the order book, not order block. So you can fully understand what is happening with imbalances. Imbalances are also called fair value gaps, but I just call them imbalances. In the order book, you'll notice the incredible buyer interest. This is an unusual amount of interest, which causes the imbalance, because there are no matching sell orders. The price rises so fast in an unhealthy way. This is called unhealthy price action. These kind of moves are caused by market makers or big catalysts like really good or bad news. Here you can see the difference between balanced and imbalanced price action. In the first example, price is balanced, a healthy move with higher highs and higher lows. All buyers and sellers are satisfied. You call this a perfect trend line example. In the second example, price is imbalanced. Price moves are unhealthy. There is no proper trend line. Buyers dominate the sellers, and sellers do not have interest anymore. Not confused enough yet? Do not worry. You're about to understand the concept. For a moment, forget about charts, forget about Forex, and forget about cryptocurrencies. Just think about your life, because price action is all about your life. Think about your favorite coffee shop. You start buying a cup of coffee for $3. This was a balanced price for so long. In time, price steadily rose up to $5 due to worldwide inflation and cost of labor. But you understand this, your salary has also risen, and you are still buying your favorite cup of coffee. However, one morning when you enter the shop, the cost of a cup of coffee is suddenly $40. Will you buy the cup of coffee? No, you will not. Nobody will do that. Price has to come back where the imbalance started and correct it to bring the balance again. So people should buy more coffee. I hope this was clear enough. If you study economics, you'll know the supply-demand equilibrium, which is balance. Without a balanced price, you cannot sell anything. A phone manufacturer will not sell their phone for $5. And a customer will not pay for a phone $5,000. Prices should always be balanced sooner or later. Let's talk about the entries. You already know this. I'm not going to explain it again and again. The first thing to look for is big pumps and dumps. That cause the market structure break, MSB, or break of structure, BOSS. You should wait for these type of structures in a high and low time frame. Both of them should be high quality enough. People keep asking me which imbalance should I wait for, or should I wait for the order block? My answer is I do not know. However, there are risk levels for your entries. The riskiest entry is always the one that the closest to the break, especially if there are more imbalances below it. Imbalances in the middle between order block and the breakpoint have mid-level risks. The best ideal entry is if there is an imbalance and order block side by side and touching each other, or very very close. This special pattern is called dragon fruit because it is the sweetest spot to enter a trade. Why do I keep saying the same thing? If you can combine high quality setups in high time frames with the high quality setups within a low time frame, you'll have the most success. I've been doing this for so long. The best results come with the combination of high and low time frames. The downside is you have to be patient. There are types of reactions to imbalance zones. There's no precision in trading. Anything can happen at any time. Imbalance could be half filled, and the price may react. The imbalance could be filled, and the price may react again. Or imbalance could be fully filled and could be forced out of boundaries before the reaction. These are all acceptable. The only thing that is not accepted, once an imbalance is fully filled, it is no longer usable again. Second and other tests carry so many risks. I also use imbalances as targets. It is a simple idea. You just open your charts with multiple time frames and identify unfilled or half-filled imbalances. In my experience, it works well. As I said before, the price has two targets, imbalance and liquidity, which will be a lesson in the future. Let's see some examples. Okay, this is a high time frame example. Again, never enter a trade without confirmation from the low time frames. Now let's see it. The break is what is called a high quality break. First of all, it is so fast. It leaves pumping and large candlesticks behind. It leaves imbalance area behind. There are not many red bars during the pump. There are strong closing points above the break. You can see the imbalance here, which is in our entry zone. I'm only interested in imbalances in the entry zones for entries. And you can see the order block easily. Again, this combo is called dragon fruit. Finding an entry in high time frames is hard and risky. This was just an example of high time frame possibilities. Let's talk about the target. You can easily see that price reaches and touches this imbalance area as a target. One more time, price has two targets, imbalance and liquidity. If you backtest the currency pairs that you trade, you will see it. This video is about technical side of imbalance, which I had to cover for you, so you can fully understand. In the next video, I'll go over many real-world examples from TradingView. For now, let's see another example. In this example, we'll combine high and low time frames. The first thing you notice is the quality of the break. Incredible. Very strong big candlesticks with imbalance areas. You can notice that there are three nice imbalances and dragon fruit with an order block. Now, the imbalance that closest to the break has the highest risk. In the middle one has the mid-level risk. And the dragon fruit has the lowest risk. But again, where will the price return? Let's dive into a low time frame to see it. You can see that the high quality market structure break in the low time frame, a very high quality one with an amazing imbalance. Today I want to talk about the best possible stop losses. We will cover so many entry examples next week anyway. Why? Because stop loss points are more important than your entry point. You can take an entry anywhere, here a hammer with an imbalance, or wait for a touch to order block. However, your stop loss will determine the fate of your trade. The most ideal stop loss is above the entry zone, which is above the deepest higher high. But the question is, can you take this risk? It all depends on you. This is something you should calculate by yourself. The second ideal stop loss is other swing points after deepest higher high, such as this one, or above your order block supply zone. The last one is the one that you place right after your entry, closest highest wick. This one, which I sometimes do, it has the lowest risk. However, you can be stopped out instantly, as in this example. As a target, you can see the large imbalance area here. I'll cover these kind of examples with the TradingView again next week with much more details. Okay folks, we covered imbalances very well for day trading and scalping. In the next video, I'll go over many examples so you can see the real action. I hope you subscribe to the channel and like the video. Please take care and see you soon. Well, people asked me a lot to do a top-down analysis. Let's do a brainstorming today. When I open any chart in any time frame, the first question that I ask myself is, what is the price trying to do? I have three guidance: market structure, imbalance, and liquidity. When I opened the chart at 4 hours time frame, the consensus was a very strong downtrend. I'm a true believer in trends. Do not trade against the trend. However, when you are scalping 1-minute charts or day trade, you cannot just say the weekly trend is bearish and I will only wait for a short. You have to look at the most recent price action. You have to try to understand most recent days and hours. What do you see here? Do you notice the imbalance? In recent days, price was drawn to this imbalance area to correct it and bring a balance to the price. Again, price is always drawn to imbalances and liquidity. So my consensus for the recent price action was this. Price will be a little bit bullish and try to tap this imbalance or fill it, and it could return to be a bearish again. When I was trading, it was not filled or touched yet. Now you can see it. It is fully filled and reacted. Actually, it is a perfect fill. Now let's go in a low time frame and analyze more. Now let's check out the 10 minutes chart. Price was in an obvious uptrend, an extremely strong uptrend, forcing itself to fill the 4 hours imbalance. The imbalance was like a giant magnet pulling the price. You can see that price kept leaving large imbalance areas. All I had to do was wait for a strong pullback. People ask me if I wait all day long. No. When I opened the chart and analyzed it, it was already pulling back to this area. All I had to do was set an alarm and wait for it while I was working with my other jobs. Why does this one have a great setup? First of all, the quality of this break was amazing. It is so fast and really strong. It leaves pumping and large candlesticks behind. It leaves an imbalanced area behind. There are not many red bars during the pump. There are strong closing points above the break. As you can see, the pullback was filling all these imbalances to balance the price. Furthermore, it was leaving these giant imbalance areas for me as targets, so I could use them. Finally, the price came down and tapped the imbalance area in my entry zone. If you check out the coffee example from the previous imbalance video, you'll see the same thing. What I used here was the exact setup that I taught you in the imbalance video. Now, let's check the lowest time frames for micro entry points. Here is the first thing that you notice is the tap to the imbalance zone from the 10 minutes chart, which was the high time frame imbalance. Now, the next thing you do is wait for the market structure to break. This is a relatively strong market structure break, but what I look for is the imbalance areas. As you can see, it is a dragon fruit combination of imbalance and order block. From now on, you have two choices. First choice, wait for a pullback and confirmation candlestick like a pin bar or hammer and do a manual entry with a market order. Second choice, you set your stop limit order with risk management, risk-reward ratio, to imbalance or order block area and wait for the price pull back and fill your order. I always like imbalances more than order blocks. It's just my personal choice. This is how I become more successful. Where should you place your stop loss order? Well, for me, in this trade, the most ideal place was below this order block area. Now, for the target, my aim was this giant imbalance area. Imbalances just work really well. Go and backtest it, please. However, there were equal highs, which is a form of liquidity. And market makers were going to hunt these equal highs. This was just my idea. And the price started to drop before reaching the imbalance area after liquidity swept. This is when I took profits because, as I said, my main goal is making money. I do not care about being right or wrong. I care only about making money. Now let's talk about the second trade that I took. When I saw this powerful and really high quality break of structure, it was a good indication of a possible trade. Because liquidity was taken before and price pulled back. And the big imbalance area was not touched yet. It was staying there as a target. My idea was simple. Market maker was going to target this imbalance area in my mind. Some people ask me how do I know? I think this is an irrelevant question. Of course I do not know. I just prepare setups and execute. It may work or it may not work. Okay, both had a really high quality and impulsive move. The problem was that there was no imbalance in the entry zone, which is below the break, only the order block. So before entering this trade, I had to wait and watch the price action. Price comes to my order block area, which is nice. A very beautiful red hammer, and price reacted. But I was still watching it. I was not sure if it was fake or not. Once I see a bit of consolidation, I decided to take the trade with a tight stop loss. Unlike the first trade, I used a small amount of cash and made a manual market order entry. My stop loss was under this hammer, and my target was this giant imbalance area. As you can see, it worked really great with an impressive profit. Recently, I asked a question about risk management and stop losses. I wanted to point out one simple thing. You can even make money with a 30-40% win rate. If you use stop losses, that's it. I do not care about win rates, the most useless thing ever. If I make money with 25% win rate, I'll take it. Trading is only about one thing and one thing only. All about making money. I do not care about if you use indicators, bots, price action, RSI, Mete or ATR. I really do not care. Do you make money or not? That's all matters. Then why use price action? The reason that I use price action, it gives me the best entries and the best targets. It just increases my profit margin. The problem with indicators and chart patterns, you enter late and exit early, and you do not make much profits. Okay folks, another adventure ends here. As I mentioned before, 3 months of paper trading, 3 months of small amount of cash or risk, 6 months of profitable experience. This is how you are going to improve your day trading and scalping skills. I hope you subscribe to the channel and like the video. Please take care and see you soon. Okay, Quasimodo is one of the most commonly used price action patterns in the world. There are some traders out there only specializing in trading with the Quasimodo pattern. I also personally use it a lot as long as I encounter it. So, what is it? You know the market structure breaks. We need a market structure break for a Quasimodo to happen. Once an MSB happens, the previous higher high, before the deepest higher high, is our Quasimodo level, which act as another supply zone for us. Some traders only consider candlestick wick. Some other traders take into consideration the last whole candlestick that makes this higher high. The color of the candlestick does not matter. We only focus on the last candlestick that makes a high point. Okay, let's see an example. In this case, as you can see, market structure break happens. It's not the most amazingly powerful market structure break, but at least it has powerful dropping candlesticks. Now can you tell me which is the last higher high before the deepest higher high? As you can see, this one. And this green candlestick creates this higher high. As I said before, the color of the candlestick does not matter. First of all, draw a line from the high point. That is your Quasimodo level. Some traders only use this line. However, if you ask me, this is too precise and hard to encounter perfect trades. The other thing that you can do is draw a zone from the candlestick that makes the high. At least this gives you a zone. The problem is I do not enjoy drawing too many things in my charts. I personally use it both ways, drawing a line or a zone. As you can see in the example, the price comes to the Quasimodo level and gives us a good entry point. You can find QML with high time frames and low time frames. So, bullish QML has no difference at all. Again, the first thing that you should wait for is the market structure break. Then the second thing that you should do is identify the lower low that happens before the deepest lower low. And there you have it. This is your QML level and the QML zone. It's a simple price action pattern, guys, very easy to spot. Today I want to talk about the layer system. Have you ever used Photoshop? Then you know the layers. There is a way to identify strong and weak price action. I want you to think about a wooden stick that you can find in a forest and how easily you can break it. It is generally so easy, isn't it? Price action is the same. If you just find a single price action concept, like a single order block, without anything else to support it, it will be really weak and it may not hold your entry. However, think about 10 wooden sticks together and try to break them into pieces. Can you do it? No, you cannot. It will be so hard. It's the same with the price action. Imagine high time frame supply area, order block, imbalance, Quasimodo, Fibonacci, all in around the same price level. It does not have to be exact price level, just a similar price level. It will be super strong and it will give you much better entry and success opportunities. This is why I combine many things together in my trades. Now, as you can see here, this is a strong price action. It has a strong and high quality break. It has an order block and imbalance together, which creates the dragon fruit. It has a QML level just around the imbalance and order block. It also has a liquidation hunt from the market maker, another great sign. So if you have more signs, you'll have much better entries for your trades. Let's check out the previous example again with a different perspective. First, we have an alright market structure break. It is not the best one, but it will do. However, the first thing you notice is the imbalance. It's giant and amazing. The second thing to notice is the order block, a big green nice candlestick. Finally, the QML level from the left shoulder. Three price action concepts come together for this asset. It gives us a clear entry point. Okay, let's talk about a very common high time frame and low time frame combo. This structure keeps happening all the time with all time frames. The first sign of this structure is a high quality break with a really fast drop. Nice large candlesticks, imbalance areas, and order block. And the price slowly pulls back to our imbalance area. Probably market makers keep hunting liquidity during this pullback. Once it reaches our interest area, this is when you open low time frames. And you'll notice the same thing again. A high quality market structure break, micro imbalance, micro order block, and a possible Quasimodo level. One of the most amazing structures to enter a trade with large gains. I hope I have made everything clear. It is really about practicing. Okay guys, let's talk about this insane 500% trade. When I was just scanning high time frames with 43 to 1 hours, I noticed this insane drop. This was an obvious break, and it was not ordinary. It was extremely high quality. The first thing you should be doing is drawing the supply zone, which is the order block. In this case, this green candlestick, which is the last swing move, breaks the structure. It was also a giant engulfing pattern, an extra confirmation of a supply area. And this giant imbalance area needs to be corrected. However, I am more interested in the part in my entry zone. Let's talk about the targets. The first target was obviously this giant imbalance area. It was a massive price weirdness that needs a correction. And the order block that creates the imbalance. However, what I noticed was there were equal lows, way below the first target. So this would be my second target if the demand area did not hold. You have to keep looking for imbalances, supply demands, and liquidity areas for targets. There are two ways to enter a trade, one risky and one more secure. Let's talk about the risky entry that I've made. I was waiting for a long time for a clear market structure break to happen, and it did not happen. Once I saw these equal highs here, I waited for it to be hunted. My idea was shorting this from the middle of the 2 hours order block after the equal highs hunt. And it did happen. This is how I decided to take this trade from right here. My stop loss was above the order block. It was the safest place in my mind. I had two targets, this demand area with a large imbalance and another target that equal loves liquidity for the market maker. And it worked really well, as you can see. Now let's talk about the most ideal entry with Quasimodo, which happened right after my entry. As you can see, a really high quality break happened here with this amazing imbalance. And you can notice the QML level right here. Incredible, just aligning with the imbalance. And there is a micro order block right here, this giant green candlestick. So, Quasimodo, order block, and the imbalance. Remember the wooden sticks? Altogether, much stronger price action. A great point for an entry. Your ideal stop loss is above the order block. And the targets are the same. Imbalances, demand, and the equal lows. You can partially take profit from these targets. But I have to admit, trades like this do not happen all the time. You are usually better off with 1 hour to 2 hour or 30-40% gains. Okay folks, we did a lot today. Thank you for joining me with this free price action trading and scalping course. I hope that I can help you in your trading life to be more successful. Please subscribe to the channel and leave a like for me. Take care and see you soon. Okay, let's do a top-down analysis. Some people ask me to use the replay button, so today I'll do things a little different. First, I'll quietly analyze the asset, the price action with a replay button. Second, I'll explain what happened and what might happen. If you like this style, please leave a comment below. Let's replay what happened. Okay, let's talk about what happened here. If you're a day trader or scalper, before opening a position, scanning 1, 2, 3, 4 hour charts is a great place to start analysis, to identify the main trend. This is how I started analyzing Bitcoin for this trade. What did I do? I found the clearest structure within a 1 hour time frame. Can you tell me what you see here? An obvious downtrend, as you can see. Price keep breaking down. Can I find a long opportunities with this chart? Absolutely yes, I can find it. But it would require much more analysis and use of many other price action concepts. The best idea is to look for short opportunities rather than the long opportunities. Because global markets are also going down due to inflation concerns and interest rates. Now, as you can see here, we have a very strong break-off structure. And there are a couple of imbalance areas to be filled. This would be my entry zone. This is the main area that I have interest in shorting the Bitcoin. Let's go in 15 minutes time frame and analyze it more. I'm going into quiet mode. There's nothing wrong with your speakers, do not worry. As you can see here, we have a very clear structure break here, and incredible imbalance areas. However, one thing interests me the most. Do you remember the order blocks video and engulfing pattern? As you can see, there is an extremely powerful supply area here. Call it an order block, call it an engulfing pattern. I do not care at all. Call it whatever you want. What matters is the meaning. There's some supply here, pushing the price down very strongly. As you can see, something happens here. Price dropped strongly. This is a market maker movement. Somebody in a big institution or algo bots selling the Bitcoin. It's just obvious. Just forget everything here. Forget order blocks, forget imbalances, forget engulfing pattern. Just think about why the price drops this sharply. Because someone is getting ready to sell. This is where you set your alarms. The problem with the beginner traders is they are trying to get confirmations from indicators, such as RSI oversold, then buy, EMA 9 crosses below EMA 20, then sell, MACD cross happened, then buy again. Beginner traders are trained like robots. However, you should learn to read the price like your friend without any indicator. Keep asking the question, what is the market maker trying to do? What is the price trying to do? These are your questions. Now, I'll open the low time frame charts and look for a valid market structure break or a market structure change. Let me replay it while taking notes. Now, waited for a MSP here. However, as you can see, the MSP is not really high quality. It just concerns me a little. However, I have two confirmations. The first one is the QML. The second one is the 1 minute imbalance, even if it is a tiny one. These are little breadcrumbs of the market makers for us to take positions. My entry here is right after the 1 minute imbalance is filled and reacted after the QML zone. What I was waiting for is a strong drop, a nice hammer or pin bar, which can you see here. Let's see the possible stop losses. You must determine your stop loss much before your entries and take profit points. As always, the best stop loss is the highest swing point. This is the one. If you use the risk-reward ratio, this will reduce your reward, however, which will put you in a much more secure trade. The second possible place is the top wick right after your entry. This will increase your reward greatly. However, you are so close to being stopped out. These all depend on your capital and your risk management. I cannot guide you about how much risk that you should take. My target was this giant imbalance area, which was an obvious imbalance within 15 minutes as well. However, I closed this position early because I was over trading and I had other things to do. I locked my profits here. Later on, I put the Bitcoin chart on another screen to watch the price action for possible long positions, as you can see. As I said in the beginning, it's not the best option to open a long position in such a downtrending asset. There's a clear MSP for a possible long position with 15 minutes chart. However, I wanted to watch the price action in low time frames. As you can see clearly, there is no clear or powerful upwards movement with any kind of high quality MSP in low time frames. I said this probably 100 times. Best entries are found in low time frames. There is no entry here for a long position. Before we close today's session, you have to understand this. 2022 is quite tough for investors, swing traders, and even day traders. Expecting rallies for financial securities is quite hard because the Fed and many other central banks are raising interest rates and trying to do quantitative tightening, which is cutting the money supply and stopping injection money into economies. So as a result, investors will prefer to stay in cash or take profits from their investments. So as day traders, we should be looking for more short opportunities rather than the long nowadays. Of course, if there's a clear long opportunity, do not miss that. This is why I encourage you to read the specific news every morning, which are Fed talks, Fed decisions, economical data, interest rates, money supply, central bank reports, and so on. All these will give you market bias about the direction of financial securities. Okay folks, I hope that you enjoyed the video. As I said, we traders should try new positions with the risk management. Keep our losses small as much as possible. Would you like to subscribe to the channel and leave a like for me? For now, please take care and see you soon. Okay, let's talk about the breaker blocks. It is a really simple concept which is extremely useful. What is it? So every failed order block actually is a breaker block. If you are confused, don't worry. Let's look at this chart. We keep making break-off structures, creating order block zones to trade. However, if every order block worked, we would be the richest man alive altogether. This is why I stopped answering questions like, which order block will work? Okay, as you can see, our last order block creates our demand area after the break-off structure. The expected move was that the price comes down and reacts to our demand area. But this time it did not happen. It breaks down and creates a market structure break. Now, our failed demand order block becomes a supply breaker block. Price reaches to the new supply area and reacts. It is quite simple, guys. It just requires practice. Let's see an example. As you can see in this example, we were in a little uptrend. I specially choose this example. Even if everything is high quality, your trades will not work all the time. This is why we always use stop loss orders, so we never lose our main capital. Okay, price breaks above strongly. It even leaves an imbalance. And the last red candlestick that starts the move is our order block. Now what do you expect? Price comes to our order block and reacts from there. However, it's not the case all the time. As you may see, it fails, changing the trend direction with the market break. Now what happens? The order block becomes a breaker block. So our failed demand zone becomes a supply zone. It's just like a flip. Price comes to our new supply zone and reacts strongly. You can also notice it also fills those tiny imbalances before the big fall. Let's see how it works with the bearish order blocks. It's exactly the same idea. Once an order block forms with the last break of structure, many traders take it as an indication of a supply zone. What we expect here, obviously, price comes up and reacts to our supply area and probably creates another boss to the downside. This is the wishful idea. Sometimes order blocks will not hold and price breaks to the other direction. This failed supply order block instantly turns into a demand breaker block. As you may see, the price comes down to our new demand breaker block and reacts. Again, guys, it's so simple. With regular practice, price action trading will be a piece of cake for you. Let's see an example. In this example, price strongly breaks down with imbalances. And the green candlestick that starts the movement is the order block supply area. Actually, this is a really good setup. However, do you remember why I keep saying always combine high and low time frames together? If you do not do that, this will happen. Because you have no idea what is happening in low time frames. Maybe it keeps making break-off structures strongly without any weaknesses. Best results always come with the combination of high and low time frames. Okay, after this, it's quite easy. Our supply order block becomes a demand breaker block. Price moves up and comes back down to our new demand area and reacts to it. As a side note, do not delete your order block drawings from your charts. You can later on use them as breaker blocks. New supply or demand areas, it is quite useful. The concept of a breaker block is actually quite similar to SR flips, which are support resistance flips. So basically demand becomes new supply or supply becomes new demand. Unlike SR flip lines, we actually consider a large zone and area. It makes it much easier for us go down to low time frames for finding great entries. Let's see an example. If you look at this chart without order blocks, without breaker blocks, without any price action setup, you can see how the SR flip zone happens and the price reacts. Support resistance or supply demand flips are amazing price action concepts for additional confirmations for our layer systems. As you can see, the price makes a break here and creates our demand area with the order block. But the weak order block does not hold the price and it breaks downwards very strongly. And as you can see how the price reacts to the new supply area. It is incredible. You can see pin bar rejections, which is also a good old evening star candlestick pattern. However, the best idea is to open low time frames and confirm a micro MSB for the best entry, best stop loss, and the best target. In the final chapter, let's talk about how to identify the best breaker blocks possible. There are a couple of significant points to identify the best breaker blocks. 1. Weak boss. One thing that you may look for is weak boss. So what we look for is stop hunts rather than strong breaks. 2. Opposite strong break. A strong reverse break with the failed demand-supply area is a perfect indication for us. 3. Of course, are lovely imbalances. Seeing an imbalance with a strong break is always an additional confirmation for me. 4. Obviously, if you can identify an SR flip, it would be really great to see that, because in my experience, it works great. Okay friends, let's check these examples step by step. 1. Weak boss. As you can see, there's a really weak boss. This pattern is actually also called as swing failure pattern. It is for hunting stop losses for liquidity. And this nice red candlestick is our order block with the demand area. 2. Reverse strong break. Just look at this. One giant red candlestick. It just destroys the demand area at once. Now our demand order block becomes a supply breaker block. 3. Imbalances. I think I do not even tell you this anymore. One giant and amazing imbalance here. Very useful. 4. SR flip. This general area actually worked as a support zone. It was holding the price. Later on, with a strong break, it turned into a resistance zone. Finally, you can see how the price reacts from the breaker block. It is simple and amazing. You can also notice the pin bar rejection with the evening star pattern. All these price action patterns keep happening thousands of times a day for thousands of assets. With practice, you will catch them all. Okay folks, I hope you gained some knowledge about breaker blocks trading and how you can use it for day trading or scalping. If you have any questions in your mind, please leave a comment below. I'm happy to answer them. If you liked the video, please subscribe to the channel and leave a like for me. Thank you, take care, and see you soon. Okay folks, let's analyze this asset in high time frames with the silent mode and get an understanding of what is happening. Okay friends, let's talk about what is happening here. First of all, this asset keeps making lower lows. We are in a major downtrend. It is not just that. If you remember the last video and the Economy 101, we are in the quantitative tightening period, with most governments reducing the money supply and increasing interest rates, and this scares investors. It creates so many short opportunities for us in general. Of course, you should mainly focus on the charts. If it says it is a short, we will short. If it says if it is a long, then we will long. Let's continue. As you can easily notice, price keep balancing or at least touch the imbalances before each strong fall. Now general price bias is short. As always, trend is your friend most of the times. If these mini imbalances fails, there could be great short opportunities. Let's continue with the replay mode before examining low time frames. Okay friends, let's see. Once the high time frame imbalance is filled, the price immediately starts to fall and makes a really nice downtrend, being pulled by the imbalance below. By the way, all this already happened way before I entered the position. I just try to explain what happened before. Okay, let's continue. Now, this is one of the greatest examples of SR flips and how a weak demand order block turns into a breaker block. Plus, it is supported by the imbalance. If you remember the layer system, many price action setups come together. Let's continue to watch. Again, one more time. I did not wait for this trade for days or hours. All this happened just before I opened this chart. All I do here is try to explain the logic of how we came here exactly. Once I finish the major price action subjects, I'll focus on the liquidity. But for now, liquidity is not that hard concept, but it can be complex. Just think about beginner traders and where they would place their orders, such as trend lines or chart patterns. Okay, finally let's see the lowest time frames and possible entry, stop losses, and the targets. Okay, let's talk about what happens here. First, the high time frame. We are in the breaker block zone, also filling the high time frame imbalance. Plus, it is an SR flip zone. When we look at the low time frames, what do we have? We have micro MSP, micro QML, micro imbalance, micro order block. This is how you combine low and high time frames together. This is the layer system. More price action concepts together, stronger it is. Now let's talk about stop losses. If you're a beginner trader, just aim for larger stop losses. Aim for like 1 to 1.5 R profit or 1 to 2 R profit. The important thing is making money. You do not have to start with 3R, 5R or 10R setups. All you need is to practice for the first 3 months. Okay, let's get back to the charts. Okay folks, I think we covered everything here. I hope that you are improving really well. Please remember the program. 3 months of paper trading, 3 months of really small risk, and 6 months of profitable experience. If you apply this, you will be successful. Would you like to subscribe to the channel and help me to grow it? Thank you, take care, and see you soon. Okay, optimal trade entry, also known as OTE, is an extremely simple concept to learn. However, I do not suggest you to use OTE alone. It is like an additional confirmation besides other price action concepts like order blocks or imbalances. Now, every trader I saw has their unique methods and specific Fibonacci ranges that they use. In this video, I'll talk about how I use it, how I set levels, how I set stop losses, and how I set targets. There are so many names for this. Golden Zone, Magic Fibo Zone, everybody gives it a name. Again, names do not matter at all. But before that, let's understand how it works. Let's check out break-off structure and Fibonacci first. It is an extremely powerful tool to use with break-off structures. Once you identify a strong break-off structure, then you can use the Fibonacci retracement tool from the low point to the high point. Of course, you should be completing your high time frame and low time frame analysis and get a market direction bias first. What I teach here is the basics. My entry zone area is between 70% and 80%. Again, This is the way I use it. Every Fibonacci trader has their price levels. The other common uses are 0.618, 0.705, 0.790. What matters is the premium and the discount zones. These 0.6, 0.7, and 0.8 are just numbers, nothing else. We need to focus on the meaning of supply and demand areas, which I'll explain later on. It's not just a break of structure. You can easily use the magic Fibonacci or optimal trade entry with the market structure break. It's all the same idea. You mainly focus on strong and really high quality market breaks, so you can avoid false breakouts. Later on, you draw the Fibonacci retracement tool from low end to high end and wait for a pullback to your entry zone. Let's talk about my settings. As you can see on the screen, I use round numbers because I don't want to see the clutter of those floating numbers. I also use 0.2 and 0.3 levels to take partial profit. Because in my trades, I usually take partial profits and secure them. Again, what I teach in this video is how I use the tools and trading styles. Okay, let's see this example. As you can see, the asset is in a nice uptrend and keeps making new higher highs. You can easily notice the strong and high quality break of structures. So, how do you use the Fibonacci tool? So draw it from the most significant low to the most significant high. As you can notice, price pullbacks to our golden zone before a reaction. Of course, using only a Fibonacci tool is not enough to trade. We will check it later about how to improve our trades. Now let's check out market structure break based example. As you can notice, we are having an extremely powerful break. Nice big red candlesticks leaving imbalances behind. So draw the Fibonacci from the significant high to the significant low and wait for the price to retrace to your golden entry zone, which is for me between 70% and 80%. And one more time, Fibonacci is not a trading tool that you can use alone. You have to check high time frame magnets, any imbalance, equal highs or lows, other liquidity areas, high time frame market direction, high time frame liquidity targets, high time frame imbalance targets, quality of breaks, MSP or both, other supplemental price action setups, and so on. Okay, I want you to forget all the numbers. Nowadays, everybody has different Fibonacci numbers. Let's focus on the general meaning of the Fibonacci, the bottom and the upper parts. The midpoint of Fibonacci is considered a balance or equilibrium point. The upper part is considered premium zone, and the bottom part is considered discount zone. So, what is the idea then? Again, a simple supply-demand issue. In the premium area, price becomes way too expensive to buy. This is a place where early buyers take profit. In the discount zone, price is becoming more balanced, and this starts to attract new possible buyers without paying a premium price. I hope it clears a bit. Let's see a real-life example. I want you to imagine your city, and in your city, the average house price is $200,000, and you have one house already, and you are thinking of buying the second house. And now interest rates drop, house prices suddenly jump. The average house price suddenly jumps from $200K to $250K. Now, would you buy a new one for $250,000, or would you sell your existing one for $250,000? I leave the answer to you. And after a while, prices suddenly drop with a burst of the housing bubble. Now the average price drops to $150K. Would you buy a new one for $150K, or would you sell your existing one for $150K? Of course, trading is not this simple. However, the supply and demand idea is simple. All these are just guidelines for us to make educated trading decisions. Okay, let's learn how we can support the Fibonacci trading. The first thing you need to consider is the high time frame market direction. Are we making strong higher highs or low lows? Are the global conditions supporting our market bias? If there is a market structure break, how powerful it is? High time frame magnets, any imbalance, equal highs or lows, other liquidity areas, pulls the price. So the first thing we should focus on is high time frame market conditions and overall price bias. The second thing is the quality of the break, BOSS or MSB, how powerful it is, and can we measure its quality? How much energy does it have? The size of imbalances that it leaves behind. The third thing that we need to check is our golden entry zone supported by other price actions? For example, imbalances, breaker blocks, order blocks, Quasimodo, SR flips, anything, any other price action to support our decision. Best entries. Of course, the best possible entry is, again, confirming the entry with a low time frame micro market structure breaks with imbalances. I do not even have to repeat it anymore. You understand the importance of it. How about stop losses? The best possible stop loss is under the most significant low. It will be a large stop loss, but it will give you room to breathe. The second ideal stop loss is that you can find it in the low time frames with micro order blocks or breaker blocks. Now the targets. What I like is this. I take a partial profit between 0.2 and 0.3 and move my stop loss to my entry. This way, I secure the trade and the profit. The second possible target is the significant high point where the liquidity waits for us. Again, this is my trading style. You do not have to follow me. You can create your own methods. Okay, let's see a real trading practice with the combination of high time frame and low time frame analysis. Okay, what is happening here? This is a liquidity operation, as you can see. The price clears the liquidity from the previous significant high and strongly breaks down. I forgot to draw the break, but it is obvious, as you can notice. This is an equal low, also known as the double bottom pattern, in which so many beginner traders place their orders and stop losses. Just notice, equal lows and highs are price magnets. I'll cover all liquidity concepts in the future. As you can see, I draw my Fibonacci from the significant high to significant low to determine the golden OTE zone. Now, as you can see here, I do not rely on OTE, never rely on OTE alone. you have to supply it with other price action systems. Please remember the layer system. More structures are stronger together. Okay, let's go on low time frames and find the best entries. Now let's see it. Do you remember how I keep saying the price is drawn to two things, liquidity and imbalances? Equal are the easiest way to determine price bias. Price is always drawn to them to hunt the stop losses. Now, what I do here, finding the same price action setup with both high and low time frames. As you can see, high time frame, order block, imbalance, and OTE. And low time frame, order block, imbalance, and OTE. Okay folks, this was a short cover of trading with Fibonacci. In the next videos, I'll show you more practical examples. I hope that you are improving really well and practicing a lot. Would you like to subscribe to the channel and help me to grow it? Thank you, take care, and see you soon. I start with 4 hours time frame. I do not even record the 1-day chart because it's just a falling knife. However, I'll teach you the best places to short because there are so many bull traps and fake bull attacks to consider. Okay, before shorting an asset in an environment like this, you have to be really careful with bull traps. What I do is here draw my market structure from the most significant high to low and create my range. Okay, I draw my Fibonacci tool from the most significant high to the most significant low. Furthermore, I use the gain box to visually determine my premium and discount zones. Let's see what we have here. First of all, I ignore this giant imbalance for a possible short position because it's under my break-off structure and it is also in the discount zone. I want to sell my house for 250k, not 150k. However, sometimes prices react to it and sharply drop. You can never know that. I sometimes use them, but it is not the best place to short. Secondly, I determined possible imbalances and my OTE area for the best possible price levels. Okay, as you can see, a great imbalance appeared below. A great magnet for short bias. Plus, it's supported by 0.2 and 0.3 OTE target, which I take partial profits from. However, I traded in low time frames. My idea was simple. I found my gameplay area. I was going to short most break of structures in the low time frames, from OTE to OTE, from imbalance to imbalance, from premium zone to discount zone. As you can see here, we have two imbalances. The first reacted really well from premium zone to EQ balance. However, as I always say, the deepest extreme imbalances are the best ones. Finally, equal lows appeared here, another price magnet that will pull the price down. Okay, I want to show you how a beginner trader hunted for liquidity. Please watch it carefully. I'll also show how beginner smart money price action traders also hunted. I want you to think this. What did you learn when you started trading? Trend line trading, support resistance line trading, chart patterns trading. All these beginner trader concepts are fuel for the market makers. As you can see here, there is an amazing downtrend resistance line. Many beginner traders will draw this line and say, oh great, let's open a short position here, and place stop loss above this, which is where the liquidity lies. I guess the downtrend liquidity is quite clear here. I also want to show you something else. What else do beginner traders use? Head and shoulders pattern. Can you see the inverse head and shoulders pattern here? Just right here. How do you enter an inverse head and shoulder? It breaks the neckline, retests, and then you enter a trade right here. Another liquidity area for you. You guys see actually how simple it is to identify where market makers aim to hunt stop losses. Okay, now in this part you'll witness how the beginner smart money price action traders are hunted with fake market structure break. I got this question a lot. Which MSB I will trade? Which OB I will trade? Which break of structure? Here's my solution for you. Check the left of your chart in high time frames and confirm a supply and demand area in high time frames with main trend. You just do not trade every order block or market structure break. Can you see the difference between fake and real market structure breaks? What is the fuel to move the price? It is imbalance and it is liquidity. As you can see, stop loss hunted. First fuel, imbalance tapped, and second fuel for short. Okay, this video is getting really long. I'll show the first trade that I took, and in the next video I'll show the other two trades that I took. Let's see. As you can see, we keep making strong breaks because we got the fuel needed from imbalance and stop loss hunts in high time frames. And price keep making equal lows to be hunted. Even more reasons for short. Okay, what do we have here? Order block, breaker block, OTE, imbalance, premium zone. And also high time frame fuel is ready for shorts. My stop loss is at the previous swing high, as you can see. My target is equal lows because the liquidity waits there. Okay folks, I really got tired today. I also took 2 more trades with this 4-hour bearish move, which I'll explain in a couple of days. Furthermore, I hope that you are improving really well. If you apply this, you'll be successful. Would you like to subscribe to the channel and help me to grow it? Thank you, take care, and see you soon. First of all, let's remember what the premium and discount zones were. When a market structure break-off structure happens, it creates tradable zones. What you do is simply draw a Fibonacci or gain box tool from the most significant low to the most significant high. This gives us tradable zones. The upper part is called the premium zone, which is where the price is expensive. This is where the early buyers take profit or look for short opportunities. The bottom part is where the price is cheap to buy. This is the area for buyers to find good deals with discounted prices, or short traders close their positions. The middle point is called EQ, or balance point. You can easily say this is the fair price of the product. Since we have already learned a lot from the previous video, let's move on. The trading wave tool that I use is called gain box. These are my current settings for the tool. It may change in the future. However, this clearly shows me the premium and the discount zones. Let's learn about gameplay. Gameplay boxes are special zones that I determine with the high time frames before trading. What I do is, once I determine the high time frame gameplay boxes, I keep trading the price action inside the box with the low time frames. I day trade or scalp these boxes. Okay, the first step is determining the high time frame market structure. Are we on a bullish or bearish trend? The second step is drawing my premium and discount zones. Gameplay boxes should be from premium to discount or discount to premium. Then we have to identify the possible price action structures that can move the price from one side to another. What are these? It could be imbalance to imbalance, order block to order block, or imbalance to order block. Any obvious price action structures. Later on, we will learn how to trade these gameplay boxes. Since I get so many requests for Forex examples, today we will look at the USD Japanese yen pair from my backtesting archives. As you can easily notice, price keep making lower lows in a strong downtrend. With the last strong and high quality break-off structure, I draw my premium and discount zones with the gain box tool. You can obviously notice the 2 giant imbalances. So I determine my gameplay box area. This is where I'll be trading. When the time comes, I'll be taking so many trades in low time frames. I'm gonna scalp or day trade for many days, unlimited trade opportunities. We will get back to this example. Let's move on. Let's talk about the best entries with the low time frames inside the gameplay box. Now, first of all, I do not have so much interest in the discount zones if I'm shorting the asset. I do not care if it has the biggest order block or imbalance. Of course, I'm gonna miss so many trades. I'm sure you will also miss trades. But there is nothing we can do. We have to make a choice between high risk trading or keeping our cash. Shorting from the discount zone is dangerous. The second interest area is the EQ, the balance point. You'll see many times price reacts to 0.5 EQ point. This is a tradable area, but works better as a target or taking partial profits. If there is no significant imbalance above the EQ, yes, you may try it. The third area is the premium zone, one of the best places to look for a short position. If you can just support it with strong price actions such as imbalances, breaker blocks, order blocks, or support resistance flips, you will increase your chances. My final special interest area is the entry zone with the MSP or BOSS. It is also inside my premium zone. This area is generally called an extreme area because it is supported by possible order block and volume cluster. However, as I always say, we never know which one will work. You should always go into lowest time frames such as 5, 4, 3, 2, 1 minutes and find a strong market structure break before opening a position. Let's see the example. Let's remember our Forex example. Price in a strong downtrend in 3 hours time frame. A very strong and high quality break. I determine my premium and discount zones with the gain box. You can obviously notice the two giant imbalances. This is my gameplay area. This is where I'll be trading. When the time comes, I'm going to scalp or day trade inside this box, from the imbalance above to the imbalance below. Now let's check the 1 hour time frame. As you can see, the price finally comes into our premium zone from the 3 hours time frame. It also fully fills the 1 hour imbalance. Furthermore, it clears all the liquidity before it. It has all the fuels needed for a bearish movement, imbalance and liquidity. What I'm gonna do is open the low time frames and keep trading all possible break of structures in the low time frames. As you can see, I pointed out 4 possible trades inside the gameplay box. All have the same features. 3 of them are real and 1 of them is fake. I'll also teach you how to identify the fake break and avoid stop losses and reduce the number of stop hunts that you have. What do we have in common here with all the breaks? They are so fast and really strong. They leave dumping and large candlesticks behind. They leave imbalances behind. There are not many green bars to ring the dump. There are strong closing points below the breaks. Let's start with the first trade. As you can see, I draw the premium and discount zone. So my main interest is with the retracements to the premium area. What I look for is imbalances in the premium zone, so I can sell my house for an expensive price. And more importantly, there is an equal low here, an incredible price magnet and a price target. Eventually, the price traces back to the premium zone and taps the imbalance. This is where you should enter a trade. You can even go to lower time frames like 1, 2, 3 minutes to find micro MSB. Okay, the second trade, again the same thing. We keep repeating the same thing over and over and over again until the price reaches the mega imbalance below from the 3-hour time frame. Price traces back to the premium zone. There is not much imbalance, just a significant one around the EQ point. Another nice trade. Let's say the third trade. Strong breakout. Mega imbalance. Price traces back to the premium zone, touches the imbalance and falls. There are also equal lows as price magnets. As you notice, we repeated the same thing again. And the last trade, the fake break. Let's talk about this fake trade designed for stop hunts. First of all, if I did not check the high time frames and did not know that there is a giant imbalance from the 3 hours, I would definitely trade this. Look at this, extremely high quality break, leaving a giant imbalance. It is just a perfect 15 minutes trade. However, it is fake. It is designed to trap people. Why? Because mega 3 hours imbalance is the fuel for long. We are coming to the demand area in high time frames. And this is the end of my gameplay area. It is extremely risky once it touches the imbalance. Even if the mega trend is bearish, I do not take shorts from the high time frame demand areas. If the 3-hour imbalance fails to hold as demand, then I might consider further shorts. This is why I keep saying this. First analyze high time frames, especially the left of your charts. Just go as much as you can, draw your imbalances, order blocks, and be aware of what is happening in the high time frames. I hope this clears why there are so many fake setups to hunt traders. Okay folks, another adventure ends here. As I mentioned before, 3 months of paper trading, 3 months of a small amount of cash or risk, 6 months of profitable experience. This is how you are going to improve your day trading and scalping skills. I hope you subscribe to the channel and like the video. Please take care and see you soon. As always, the first thing you should be doing is determining your high time and low time frames. It could be any time frame. You can combine 4 hours and 15 minutes or 3 to 2 hours and 15 minutes. It is something about finding the clearest price action setups. As you can see, this asset is in a significant downtrend. Keep making low lows by making high quality breaks of structures. This is an extremely high quality break of structure. Giant red candlesticks, big imbalances, and very fast dumping movement. You already know that the power of imbalance and order block combination is one of the most strong resistance places. This is my point of interest. Now, if you remember the previous video, which we talked about premium and discount zones, for me the extreme interest area is critical for entry decisions. As you can see, my interest area is in the premium zone. It is also my entry zone above the break-off structure. Now, this is a little trick that I use. Generally, you'll notice candlestick clusters inside the market structure breaks and breaks of structures. You can use the fixed range volume tool to identify the fair value of these clusters. I sometimes enter a trade with a fixed volume range tool. I'll do a whole another video about volume trading in the future. Now, one of the first rules of avoiding losing money, determining your supply and demand areas at the same time. This way, you'll have an idea about where the price can bounce from, so you will not mistakenly short or long from these places. As you can see, I finally determined my gameplay area from the previous video. I encourage you to do this. Multiple trading pairs for cryptocurrencies, gold or Forex in high time frames. So when the time comes, you can scalp or day trade the assets. Okay, let's check the low time frames. As you notice, I used 2 hours as my main high time frame and 15 minutes as my low time frame. Now, this is a high quality break, and it is in my gameplay zone. I'll be looking for short opportunities until the price reaches the high time frame imbalance and the order block below. Now let's talk about these trade opportunities. First of all, let's talk about stop loss and the target. You can enter this trade anywhere inside this imbalance. It is your preference, but stop loss and target will determine whether you're gonna make money or not. In a perfect world, I would want it to drop to the high time frame imbalance at once, but it's not gonna happen. So you should use the internal mini imbalances as your targets or take partial profits. As you can see, this one. My stop loss is above the internal order block, or you can say at the swing high. I told you before, I'm using large stop loss areas. I'm not trying to be a hero. Markets are quite shaky nowadays. I repeat, do not be a hero. Just make money. As you can see, this was a great trade. Price reaches my imbalance, it is also a premium zone. And it is in the extreme interest area. Grabbing 2R, this is what you need. Collect 1R, 1.5R and 2R. Just keep making money. Okay, let's see the second trade. After this, we'll talk about fake breaks and explain why you keep losing money. Okay, what do you see here? We keep repeating the same thing over and over again, using high-quality breaks, imbalances, premium and discount zones, using larger stop losses and imbalances as targets. This was a really long and boring trade. However, I specifically chose this trade to show you reality. In real life, trades are like this. They take time and they are boring. Now let's talk about fake setups and why new traders keep losing money. As you can see, if you use a single time frame and if you do not check the left of your charts, your failure rates will double because your analysis will be weak. In this example, I'm trying to short this high quality break. I would definitely try to short this if I did not know there was an imbalance and order block from the high time frames. As a result, identifying both your supply and demand areas from the high time frames will save you money. Always try to identify both supply and demand areas at the same time, where the price can bounce back and where the price can move to. These little tricks will save you money. I hope that you can use these little tricks and identify where to enter a trade and where not to enter a trade. But all these require practice. I'm sure that you'll improve in time. This is all for this session. Would you like to subscribe to the channel and help me to grow it? Thank you, take care, and see you soon, guys. Okay, in this really popular Fibonacci trading strategy, the first thing we should be doing is identifying the target. Yes, the target. This is why it's called reverse optimal trade entry. The most popular and the possible target area is liquidity areas, which basically swing highs and lows. However, I have to admit, if you can find equal lows or highs, this strategy works even better. Let's see this example. First of all, price reacts to a giant imbalance from the 4-hour time frame. We are expecting a strong bounce from here. With the 15 minutes time frame, you can easily notice that the price reacts to it. At the bottom, we can identify the equal lows, basically a double bottom pattern. This is a great target. Equal lows and highs are natural magnets for the price. This will be my target area to draw my Fibonacci tool. The second step of this trading formula, identifying a liquidity sweep, also known as stop-loss hunt. It is actually a simple idea. You may think of it as weak breaks. Price is having a hard time making strong breaks. You'll generally see long wicks and quick reactions, because the aim of the market maker is just hunting stop losses from a previous swing point. You can notice this in this example. Are you seeing the stop hunt? Price comes here and cannot break above. Instead, it just drops a tail. This pattern is also called the swing failure pattern. Basically, the price fails to break a previous swing point strongly. This is what a liquidity hunting is, basically a stop loss hunt. You can also notice that we also have an imbalance here. This is another great sign for us. This will be more fuel for us to short this asset. The third step is actually quite easy. You should draw your Fibonacci tool from the target to swing high after the stop hunts. As you can see in this example, drawing the Fibonacci tool from the target to swing high point. Very simple idea actually. I'm determining my optimal entry zone, which is between 0.8 and 0.7. This will be an area where I'll be looking for entries. One of the important parts of this strategy is the price should break the balance point first, which is 0.5. Since this is a rule-based trading strategy, it is important to follow the rules. I have friends that only use this trading strategy. It just requires practice. Let's get back to the example. After stop loss hunting, price pulls back to our discount zone for a moment, which is below 0.5. As I said, it is important to follow the rules because this strategy is based on following the movements of algorithmic bots of the market makers. Finally, the entry steps. As you already know, you can use both high time frame and low time frame entries. The difference is stop losses and targets as usual. If you decide to use a high time frame entry, your stop loss should be set over the swing high point to reduce the risk of being stopped out. As the targets, I always like taking partial profits. My first profit point is generally between 0.3 and 0.2 Fibonacci levels. However, if there are significant imbalances, yes, you can also use them as your target points. The final take profit should be the liquidity weighting, or especially equal lows and equal highs. Let's continue with our example. As you notice, my stop loss is set to the high point. I tried other places for my stop loss levels, however I found it quite dangerous. You need to give your trades room to progress. My first partial target point is between 0.2 and 0.3. And actually there is an imbalance here that you cannot clearly see. My final take profit is the equal lows. It's like a price magnet, and eventually price moves there. Of course, the best entry type is in low time frames as usual. Guys, I want to repeat this. If you are being stopped out a lot, it means that you are only using high time frames. Me, my friends, and thousands of traders use price action methods around the world. Entries with low time frames and micro market structure breaks are back-tested for millions of hours. It is the most ideal entry model. Let's go in the 5 minutes time frame. There's a very clear break here, which happens around the optimal trade entry zone. And it's leaving an imbalanced area, a very big and a powerful one. As you can see, the price retraces back to the imbalance after the break and sharply drops. Since we are in the low time frames, I could set more precise stop loss and targets. My stop loss point will be at one of the previous swing high points. You can decide by yourself depending on your risk management. My target point is generally imbalances. I target imbalances for two reasons. One, it is pulling the price to balance it. Second one is it is a fuel for the reverse reaction. So it is the best area to take partial profits. Okay folks, I hope that I made this amazing day trading strategy clear enough for you. This strategy is especially useful for busy people or part-time traders. It could feel a little complicated in the beginning. However, actually, it is quite simple to adapt yourself after a regular practice. Would you like to subscribe to the channel and help me to grow it? Thank you, take care, and see you soon. As you know, in the previous video, we talked about a very special Fibonacci trading strategy against market maker trading bots. Today, we are gonna pattern that strategy. I'll simplify your entries so you can see them clearly. It is a really simple 4-step strategy. First of all, I want you to memorize this pattern, this shape. You'll see it everywhere. Step 1. Identify a liquidity area. This is a very simple step. Best liquidity areas are swing highs and lows, and especially equal highs and equal lows. Step 2. Confirm a liquidity hunt. What does it mean? Actually, again, it is quite easy. Just confirm a weak break of a previous swing high or low. The idea is the break should be really weak, mostly long tails. Step 3. Wait for the price to reach the discount zone. Why do we wait for it? It's simply for trapping beginner traders. Because beginner traders will use every discount zone as entry. However, you should be checking multiple price action concepts first. Step 4. Wait for the price to move back to the premium zone. My preference is to reach to my optimal trade entry zone. However, it is not a rule. If you find an order block, breaker block or imbalance, it's still great for entry. Let's look at the bullish version of it. It is the same idea. But before that, I would like to say a couple of things. This pattern is generally for busy people and part-time traders because it requires less analysis than normal. This pattern also can be used with the trend and at the same time against the trend, because the aim of this pattern is hunting reverse liquidity for reverse force. Step 1. Okay, if I can identify an equal high with this pattern, it would be great. However, a previous swing high will also do it. Step 2. Confirming a previous stop hunt, also known as a weak break. I want you to understand this. Most of the weak and low quality break-off structures or market structure breaks are mostly for stop hunts. Step 3. Wait for the price to reach the premium zone first. We are trying to trap short sellers here because there will be an equal high above which is waiting to be hunted. Step 4. Wait for the price to move back to the discount zone. Again, you should find the most suitable entry in the discount zone. You can go even lower time frames to confirm a market structure break. Before I move on to the examples, I would like to make a high time frame analysis. And I want to show you how many opportunities you have missed in recent weeks with Bitcoin. Can you see the high quality break here with imbalance? Later, price retraces back to imbalance and premium zone and starts to drop. This is a 1 hour time frame. You can easily find micro entries here with low time frames with 5, 4, 3, 2, 1 minutes. These low time frame areas are great for using our secret trading pattern. Here is another example. Price breaks and leaves two imbalances behind. One in the premium zone and one in the discount zone. This trade will be hard, but a quick gain in low time frames maybe. I want to show you how the price reacts to the imbalance area later on. Even if trend changes, it gives us micro trade scalping opportunities here as well. Another example of how price reacts to imbalance areas. With every imbalance area in a high time frame, you can find micro low time frame scalp opportunities. Here another example. Another quick break. Price breaks strongly, pullbacks to the premium zone, and imbalance, giving us opportunities to trade. One more example here. I think you have the idea right now how to find high time frame supply and demand areas. Exactly the same thing keeps happening again and again and again. Finally, something different. Can you see how the price quickly breaks and comes back, leaving long tails mostly? These types of movements generally indicate stop-loss hunts, as we know wick breaks. Not just that, if you examine the chart on your own, the price reacts to an imbalance from the left of the chart. Keep an eye on the left of your charts always. The trend slowly shifting here creates a break. Price pulls back to our discount zone and imbalance and reacts to it. This is it. This is where you open your low time frames, wait for a micro entry opportunities, and quickly scalp them. Use micro MSP or our secret trading pattern. Now another example. However, this time obviously price never comes back to imbalance. But one day it will be. Yet another example here. The price creates a break, price retraces back to our discount zone, an imbalance, then reacts to it. And finally, one more example that repeats the same pattern. If you guys just closely look at it, you will witness so many trade opportunities. Let's assume that you found a really great reaction point, like an imbalance or order block, any kind of supply or demand zone in high time frames with the 1, 2, 3, 4 hours. Then what to do? Open your low time frames, 30, 15, 5 minutes or even lower time frames. Try to find a micro market structure break. What if there is none? Then you may use this secret pattern against the bots. It is a really simple 4-5-step strategy. It only requires practice. Step 1. Identify a liquidity area, a possible stop hunt area that algorithmic market maker bots can target. These are especially equal lows or highs. Step 2. Confirm a stop loss hunt. What does it mean? It's simply a wick break, that's it. When I see wick breaks with long tails, I generally consider them as stop-loss hunts. Step 3. Wait for the price to reach the discount zone. But why? It's simply for trapping beginner traders. Because new traders use Fibonacci tools and try to enter from like 0.5 or 0.6 without considering any other price action concepts or combining high or low time frames. Step 4. Wait for the price move to the premium zone. You can use anything here: optimal trade entry, breaker blocks, imbalances, or order blocks. My stop loss point is the previous swing high. I would like to give room for my trades, especially nowadays. It's quite dangerous. As a target point, I always try to encourage you to take partial profits. However, if you fully trust the trade, of course you can leave it as it is. The first partial profit point is reverse optimal trade entry between 0.3 and 0.2 area. Or if there is an imbalance, I would definitely suggest you take profit. The final and main target is the equal loss here, because this is the area that algorithmic market maker bots target. Okay folks, I hope that you are improving really well. We have already completed like 20-30% of our price action course. However, we have so much to learn. I already get amazing emails about how people's trading lives have changed and are making consistent profits. With regular practice, it is possible to gain consistency with all the market conditions. Would you like to subscribe to the channel and help me to grow it? Thank you, take care, and see you soon. The first thing that we should learn about markets, they follow a certain momentum, like waves. You'll never see a linear or straight line markets. During these waves, price gains momentum and loses momentum for healthy price action to satisfy buyers and sellers. Otherwise, there would not be any buyers or sellers in the markets. As you can see, generally when you see a high quality and strong market structure break, there will be the following break of structures. This is the nature of the market. Of course, nothing will be perfect like in these drawings, but this will give you the idea. So, there will be pushing forces. It is best to enter these forces as early as possible from the beginning of the momentum. What does it mean? It simply means that looking for the trades with the market structure breaks and the early break of structures. This will increase your chance of winning trades and possibly reduce the number of traps and stop-loss hunts. As a result, if you try to catch trades at the end of a momentum like a very late break of structures, you may be stopped out. Of course, I want to state this again. Every single high-quality break of structures is tradable. But if you can catch it at the beginning of new momentum, right after an MSB, you'll increase your chances and profit margin. You can see a clear example in this chart, how the price moves in waves with certain momentum. If you look at the left, the market structure is shifting and starts a downward momentum with set of break of structures. So if you can catch the movement as soon as possible, it is best for you. You will have more targets, more momentum, and more chances. However, if you are too late, you'll probably enter a trade at the end of the momentum. Late momentum trades are still tradable. I also do late entries. However, I know that I am reducing my chances. As you can see, market structure shifts again and creating new set of break-off structures. It will be the same logic. It is best to enter as early as possible from the beginning of the momentum. Here's a trick for you. If you cannot be sure of a market structure break, then wait for the first high-quality break-off structure before entering a trade. This will double confirm a possible trend change. Of course, never forget combining high and low time frames and finding micro market structure breaks, still the best entry model in the world. Markets move in cycles between greed, regret, fear, and hope. This cycle keeps happening in every single time frames, in 1 minute, in 5 minutes, in 1 hour, or even in weekly charts. This gives us clues about when to short or long the asset. Greed is when the price is expensive, which is generally in the premium zones or the fresh breakouts from a previous swing high or low. Greed aims to trap new traders. You also know this as fear of missing out, FOMO. Then comes the regret. Why? Because you're too late. You bought the asset too late, way too expensive. Actually, this is the great time to take profit from your long positions or start to look for short positions. Next is fear. Regret quickly turns to fear and panic sales start. These are areas of quick drops. This is where you start to take partial profits from your short positions. Finally, the hope. This is the general discount area after a pullback. This is the area that new momentum starts. You just use the price action like MSB to look for long positions until the new greed stage. This is a very common pattern that you can also find it on the internet. As Warren Buffett says, be fearful when others are greedy and greedy when others are fearful. Now let's talk about more specific stop hunts and traps. This is one of the best examples of stop hunting, combination of imbalance and equal highs or lows. When you see a high quality break, what you can do is check the left of the chart, as I always say, because there could be traps for stop hunts. Imbalance and equals combination is extremely dangerous before opening a short or long. To be honest, I sometimes forget this, and this is one of the biggest reasons that I am being stopped out. Let's see this example. As you can see, the price keeps falling sharply, breaking structures one after another. As I said before, if you are late with the momentum, it is not the best forcing a trade. This price has already dropped a lot, and there will be a reaction somewhere. Now, as you can see, there is an extremely high quality break here. It leaves giant imbalances. It has a nice order block and supply area. It is in the premium zone. Everything is perfect, except two things. First, the price has already dropped a lot, and it may start losing momentum. Second, the imbalance and equal high combination above just pulls the price so strongly to hunt stop losses above there. This is a low probability trade because there are so many reasons for a strong pull. And again, combining low and high time frames is still the number one security that you will get against stop loss hunts and traps. When I tweeted about Ethereum, I warned people that the price was being pulled by the imbalances and equal high above, because my experience shows that this combo is extremely powerful. In a couple of days, price pierced through equal highs and tried to fill all the imbalances. This is another stop hunt trap that I fall into sometimes if I am being lazy. Very close equal highs in high time frames. When you analyze the high time frames, it is best to identify the previous swing highs and lows. If you notice the price is extremely close to a previous swing high or low point, you should be extra careful. Price may hunt the stop orders at that level. It is best to wait for the liquidity to be hunted first. If you look at this example, you will notice a market structure break right here. It is a strong enough break that leaves an imbalance area. It is a good place to take a trade. However, when you look at the chart from a wider perspective, you'll notice a very significant swing high point. And the price almost touched that. It is extremely close to the swing high point. So our first MSB fails, price moves above and hunts that stop loss orders first, then starts to move down. Now we can wait for an MSB or break of structures to find clear entry positions. Another stop loss hunts are significant imbalance levels from the high time frames. I would definitely suggest you draw your high time frame imbalances before analyzing low time frames. You should always think of all the imbalances like power snacks or energy drinks. It gives the price short-term fuel and reaction power. You would not want to open a reverse trade that touches a high time frame imbalance. It will be very dangerous and risky trade. In this example, we are looking at 1 hour time frame. However, there is a significant 4-hour imbalance coming from the left of the chart. If you did not know that, you would probably take the trade with this high quality break here. However, as you noticed, the price keeps getting energy from the 4-hour imbalance, and it also changes the trend from downtrend to uptrend in 1 hour. This is how powerful are the high time frame imbalances. Just draw them and keep them in your charts to reduce your risks of being stopped out. Okay folks, we covered a lot of subjects today. I hope that you are improving really well. If you keep practicing, please send me your results on Twitter or here on YouTube. I get wonderful emails. With enough practice, you can achieve this. Would you like to subscribe to the channel and help me to grow it? Thank you, take care, and see you soon. Okay, let's understand the market structures and different types of emotional phases and how to avoid traps. When we look at the 4 hours time frame, we can clearly see the forming uptrend. The first thing that I would like to talk about is where to look for shorts and longs. Once a significant break happens from a previous significant swing point, Ideally, you no longer should be looking for long trades. Because of the expensive zones above the breaks, price is getting expensive to buy. This is not just for 4 hours, it is for every single time frame. You have to understand premium and discount zones really well. Think about your life and shopping habits. Unless you are super rich, are you buying a product once it is very expensive or when it is discounted? Trading is no different. Only breakout scalpers trade these areas, and they are really quick. What we do is different. Let's also add our premium and discount zones. Once the price is above the break and the premium zone, this is when you should stop looking for long positions. This is the greed stage, when new traders will be trapped by social media influencers and so on. However, actually this is the place where early buyers and market makers will start taking profits from their positions. Never forget this. The premium area is where the people become greedy, and the discount area is where the people become fearful. Market makers use these emotions to trade. Okay, let's understand possible cases that might happen and how it will be traded. First, a bullish case. Price may break above the previous swing high point strongly and continue the bullish trend. What would you do about it? It's simple. First, we look at the left of the chart. Are there any supply areas, any imbalances, any swing high point, or any liquidity hunted? These are the first things that we should check. Then, when the price is above the break in the premium zone, with a greedy state, we could go in lower time frames, find a strong, quality market structure break and try to short it. It's that simple. And then the price moves to the discount zone. Then we may try to check quick long opportunities, because this is where the price is cheap, because this could be the hope stage. Let's check the second case. This time price keeps ranging, cannot break the significant highs and lows strongly. Only give weak breaks or no breaks at all. Price keeps consolidating between the last premium and discount zones. Again, what we do is use our premium and discount zones to find quick short or long opportunities. However, you have to confirm a market structure break first for a trend shift. Then you may look for quick trades when the price is cheap or expensive. Finally, let's assume the price breaks down very strongly. Then what can we do about it? First of all, we'll have a brand new range, premium and discount zones, because market conditions have changed. Then checking out left of your chart. This is the only way to escape from stop hunts. Are there any demand areas, imbalances or swing low points that can push the price back to the premium zone? Then you may wait for the market change. Then you could trade in low time frames all the microstructures like break-off structures and imbalances. Once the price is expensive again, this time you look for possible supply areas that can push the price down. I think you understand the conditions of market structures now clearly. As you remember, this is the 4 hours time frame. Now let's dive into lower time frames. With this 1 hour time frame, I'm still keeping my 4 hours main trend and large premium discount zones, so I can know if the price is expensive or cheap in the main trend. If you draw your market structures in a 1 hour time frame, you'll witness how the momentum starts with a 1 hour market structure break from the bottom until it breaks the previous swing high point from the 4 hour time frame. Then with the greed stage trapping all the beginner traders above the break and with the premium zone. Then the market structure shifts again because people start selling. They buy it cheap and sell it expensive to the new traders. Now I want you to notice the micro, premium and discount zones with all the micro breaks in a 1 hour time frame. Can you see it? Price action is all about fractals. Simply put, the same things keep happening in high and low time frames again and again. In all time frames, the thing that you should be focusing on is buying cheap and selling expensive. That's it. However, it is not the case all the time. If the price does not willingly go into premium or discount zones, at least wait to get into your entry zone, which is inside market structure breaks or break-off structures. Otherwise, just let it go. There will be many other opportunities. In this area, I start taking short trades until the price reaches the 4-hour premium zone. There were so many trading opportunities. Let's go into 15 minutes time frame and check out the trades and other possibilities. In a 15 minutes time frame, I noticed this sharp break with a giant imbalance. There is an internal break and also a market structure break. The break left behind a giant imbalance to be filled. I also noticed that equal lows at the bottom. This was the first place to be hunted. I entered this trade with a large stop loss with a limited target. This was like a 1.5-hour profit. When I opened the Twitter, I keep seeing like 50-hour, 100-hour. Once I saw a 185-hour trade. I just can't stop laughing. With over 100-hour trades, you could be a billionaire easily. But I do not care. All I care is making money and growing my account. So, we are in the premium zone with 4-hour time frame, and price tries to fall back to the discount zone in the 4-hour time frame. I saw the imbalance with 15 minutes time frame right here as a target. I entered the trade after the break, and when it pulled back to inside my entry zone within the break. This was a little riskier trade because there was another imbalance area in the extreme zone. Sometimes you have to take risks. Again, I had a large stop loss area with limited profit like 1 hour. And can you see how the imbalance was filled and the price reacted? Amazing. From now on, I did not enter a trade for a while because it was powered by the imbalance and it was losing momentum. No need to push the trades and fall into traps. As I said in the previous video, try to trade market structure breaks and early break-off structures as much as possible. This way, you will be stop hunted less. Okay folks, I think we covered so many things here. I hope that you are improving really well. Please remember the program. 3 months of paper trading, 3 months of really small risk, and 6 months of profitable experience. If you apply this, you'll be successful. Would you like to subscribe to the channel and help me to grow it? Thank you, take care, and see you soon. Okay, let's learn this simple and extremely powerful trading pattern. Our current swing should not have a closing candlestick above our previous swing point. The general key point is all the closing candlesticks should be below the previous swing point. Instead, we should only see the wicks, not bodies. Why? Because this is a liquidity hunt. We assume that price comes here to only hunt the stop losses from a previous swing point. Let's see a simple example here. As you can see, the price makes major swings, but the last swing point cannot make a close above the previous swing point. There are only wicks or tails. This is what we call a weakness in the trend. So we have to wait for the candlestick close to understand if it is a swing failure pattern or not. Let's learn what the swing failure pattern really is. It's actually a weak and low quality break, but nothing else. What was a high quality break? Price strongly breaks the previous swing point with large candlesticks, most of the time with imbalances. When we see this, we assume that this is a trend continuation. Price breaks here to continue upwards. So swing failure pattern actually is a weak break of structure, BOSS, or a weak market structure break, MSB, but nothing else. When we see this pattern, we assume that This is a trend weakness, loss of momentum. I immediately think about it. Price comes here to hunt stop losses. This could be a possible trend reversal point. Of course, nothing is simple like this. We'll talk about how to enter a trade with a swing failure pattern soon. In this example, you can easily witness that price keeps breaking previous swing highs strongly, creating new breakoff structures. However, in the last part, you can notice that the price cannot break the previous swing point. This is also a breakoff structure, but this is a weak one. No candlestick closes above the previous swing high point, only long wicks or shadows. This is why we call this swing failure pattern, because it fails to break the previous swing high or low. Let's understand 4 different conditions. You already understand the first condition, the real swing failure. You can call it pure or real SFP. But what if the price goes above a tiny amount and the next candle strongly falls? Is this a swing failure? Well, this is not a real swing failure. But what I do always say, do not focus on names, patterns or structures. Only focus on the meaning of the charts. If price comes here and cannot break it above strongly, but goes above a tiny amount and closing a candlestick, then drops sharply with the next candlestick, I would say this is a stop-loss hunt action, a liquidity grab. I can call it a considerable swing failure pattern, CSFP. In the next case, the price struggles too much to break it above. This time is different. If the price breaks above a tiny amount and struggles too much around the previous swing point, it means that orders are accumulating. With the accumulation of orders, price can move in either direction strongly. I would not say this is a trend weakness or an indication of a strong trend continuation. This is kind of a gray area and you should be extra careful about it. The last condition is that you already know, strong and high quality break. This is the simple part. I would not say this is swing failure or a pure stop-loss hunt. This generally indicates that the price is trying to continue its trend, a sign of strength. Let's talk about 3 different quality checkpoints of the swing failure pattern and then move to how to enter a trade with SFP. First of all, you'll witness this pattern almost everywhere in the chart, from major swings to internal swings. It is backtested and proven that with major and the most obvious swing points, it performs better. Support and resistance flips also work great with this pattern. I want to repeat this again, you are missing so many trade opportunities by not using support resistance flips. This is one of the best price action structures that you'll find in so many trades, especially when combined with breaker blocks. Right after a SR flip, you'll mainly witness a couple of bounces. These are great areas to look for swing failure patterns to trade. It makes the trades much more secure. The last quality checkpoint is combining swing failure with demand or supply zones. As you remember our layer system, combining price action with other structures makes the price action setup much stronger. A swing failure pattern without any other price action setup will be weaker and full of traps. Let's talk about entry models that you can use on high time frames and low time frames. The classic entry model that you will find on the internet is to wait for the candlestick to close and confirm swing failure. Then make an entry with the price level that the candlestick closes. However, I find this entry model extremely dangerous and unknown. We have no idea about the next candlestick at all. Let's see a couple of examples. In this first example, the first thing you should notice is that the price breaks down really strongly, then starts to pull back. It creates imbalance and premium discount zones. Price comes back, touches the imbalance and falls. However, it does not fully fill the imbalance yet. On the second try, the price comes back to the premium zone, fills the imbalance. It cannot break above the previous swing high point, and there is no candlestick close above it. This is a swing failure pattern. This could be an ideal entry. Stop loss should be above the wick, giving us room to breathe. And the target will be the liquidity areas like equal lows or highs or big imbalances that are waiting to be filled. Let's check out a support resistance flip example. First of all, you can easily notice the very clear support resistance flip area. Once the price level was a very strong support, turns into resistance with the strong break. And this break leaves a giant imbalance behind. As you can see, price ranges a bit, creating equal highs. With this pin bar candlestick, it clears all the stop losses and also taps the imbalance. This is a great entry zone. As a target, the equal lows and imbalance below are great for us to take profit. Let's talk about secure entries. Once you identify a swing failure pattern, I suggest you go in low time frames and find yourself a micro-market structure break. This way, it makes it more secure and gives us a much clearer entry idea. The market structure break could happen with a swing failure pattern in the same area. But there is no guarantee for that. It can also happen later on after the swing failure pattern is confirmed. Wait for a confirmed swing failure pattern and then wait for micro-market structure break in lower time frames. In this example, you can see the 1 hour time frame. A clear swing failure pattern happens. Once you open low time frame, like 5 minutes, you can see better price action setups to enter at rate and also better targets to find. As you can see, MSB happens here. It also creates our premium and discount zones. Price pullbacks to our premium zone and fills the imbalance. This is a great area to enter at rate. If you follow the price, you can also witness later on another micro MSB happens. I think you already know what to do here. We keep repeating the same practices over and over again. So opportunities are endless when you combine high and low time frames. Okay folks, I tried to teach you every secret and detail of how to trade swing failure pattern, so you can use it in your trading life. As a day trader or even scalper, I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon. Let's talk about my first trade. When I look at complicated charts like this, the first thing that I ask myself is where are the imbalances, swing points, important breaks, equal highs, lows, supply-demand zones, and the liquidity hunts. Then I draw them on the chart to visualize the price action. As you can see easily, there was this major imbalance and equal highs. Price comes here by hunting all these stop losses. So my thinking style is quite simple. If the price wants to go in any direction, first it needs fill, imbalances and stop loss hunts. What I was thinking here. 1. Price hunted this downtrend liquidity. 2. The price moved even further up, creating equal highs. 3. Price touched this imbalance. At this point, I simply think, okay, price collected enough fill. It can go down now. All I need is a confirmation. This is why I say the best confirmations comes with low time frames. Let's go down to 15 minutes time frame and find a confirmation. As you can see here, price hunts equal highs from the high time frame and taps the imbalance. What else do we have here? A form of a swing failure pattern. This is not a real swing failure pattern. I call this considerable swing failure patterns, weakness of a movement, because price goes up and suddenly drops. This indicates to me that this is a stop loss hunt action. This is how I read the price action structure. I do not care about what others think. Now, as I tweeted recently, without a target, there is no trade at all. If you cannot find yourself a target, please do not enter a trade. And the best target in the trading world is a combination of equal highs lows with imbalance. You cannot find a better target than this. How did I enter this trade? I used our old beloved ROTE, Reverse Optimal Trade Entry with Fibonacci. Very simple, rule-based pattern to trade. I will not go into detail about Reverse Optimal Trade Entry. We already covered that in our free price action trading course. Please check those videos. Let's talk about my second trade. This was a bit riskier than normal. However, I had enough confirmation to trade in high time frames. First of all, let's talk about swing failure patterns. This pattern is actually everywhere. You can see it with almost every internal swing. This is why I said that. Focus on major swing points, highs and lows, rather than micro internal swings inside these major swings. The first confirmation I got was that there was a 1 hour imbalance coming from way back to fuel our movement. I'm gonna say this again. Check the left of your chart. Sometimes you may need to go back weeks, months or years. I do not care. Just check it until you find the price and see if there is a price action structure that may fuel your entry. There was a double swing failure pattern. This was my second confirmation. Price obviously came here to hunt the stop losses. And the next step is simple. In order to enter a trade, I have to see a target. I keep asking myself, where is this price trying to go? What is its objective? And again, same things, equal lows and half-filled imbalance, my favorite target. Once I saw the candlestick close, I confirmed this is a proper swing failure pattern. With the multiple level confirmations and a clear target, I entered the trade with a market order. My stop loss was above the candlestick. This was a nice and simple trade. If you just go and backtest it, you'll see this thing keeps happening again and again. Let's talk about my latest trade. This was the best trade that I took with the combination of high time frames and low time frames. First of all, you can easily notice the swing failure pattern with the 1 hour time frame. With this pin bar candlestick close, it is confirmed as a real swing failure. However, I do not see any other confirmations for us yet to enter a trade. Let's check if there's a target, any place that price may move to. You can easily notice how the equal lows formed below and the significant imbalance. Once I confirmed the targets and the swing failure pattern, I opened low time frames and waited for an entry. I checked out 15, 5, 4, 3, 2, 1 minutes to see the price action. I like the 2 minutes chart. First of all, you can easily witness the market structure break right here. A very clear and high quality break. The way that I like it the most. And you can see the large imbalances with the break. This gives me clear ideas about where the price should pull back and fuel up before its major downwards movement. I also see the equal highs up there. This is even better. If the price wants to move down, it needs to fuel up first. This equal high and imbalance combo will be a great fuel station for our ride. What else? Of course, our beloved premium and discount zones. It is best to sell anything as expensive as possible. Think about your mobile phone. When you try to sell it, are you trying to sell at the highest possible price or sell it cheap? Let's zoom out a bit and see the trade. My entry was a bit late because it was early in the morning and I was busy. I entered with a market order. My first target was this imbalance, to take partial profits. My big target was the high time frame equal lows and imbalances below. However, I want to repeat this again. Always try to take partial profits, secure some profits. Just focus on growing your account. Do not be a hero. Price could have easily filled up from this imbalance and move upwards and hunt those major equal lows much later. Who knows? There is no certainty with trading. You should protect your money at all costs. Okay folks, this is it. Completed the swing failure pattern. So you can use it in your trading life as a day trader or even scalper. I hope you subscribe to the channel and like the video. Thank you, take care and see you soon. Let's start this video by remembering breaker blocks and understanding the importance of support resistance flips. You'll be amazed how easy to trade breakers with support resistance flips when there is a high quality break. First of all, breaker blocks were the failed order blocks, as you remember. Order blocks fail many times with the big news or market maker involvements. These catalysts create sharp breaks and order blocks cannot hold them. So our failed demand area suddenly becomes the supply area. You know this as support resistance flips. Today we will focus on the quality of these breaks and how to identify the best breakers and learn the best trading setups by step-by-step instructions. It's not a rocket science, it only requires practice. First of all, every break may work. We do not know which breaks will work or not. However, using the high-quality breaks increase our chances, and identifying the high-quality breaks is easy. Step 1. Large body candlesticks. You should focus on really large and powerful candlestick movements. Step 2. Candlesticks should be mostly the same color. It will not happen all the time, but it is better for a strong action. Step 3. A strong breakout is ideal, just the opposite of swing failure pattern. Step 4. It should have closing candlesticks below the previous swing point. Step 5. The most important thing is imbalances. We need imbalance to identify our entry point. Step 6. Possible support resistance area. Strong SR flips make the area much more powerful. Step 7. Finally, the movement should be quick without any pause or delay. It is much better this way. These are my 7 rules for a high quality break. However, life is not perfect, also trading. Finding 7 out of 7 confirmation is almost impossible. All we need to focus on is finding the best possible and the highest quality breaks. Let's check this chart. As you can see, there are many breaks here. Which break do you think has the highest quality? Can you pause the video and identify it? Yes, this is the break that I really like. It is like 7 out of 7 confirmation. It is really strong and powerful. It has a large imbalance. All the candlesticks have the same color. It is an obvious support resistance flip area. A perfect breaker. Where should we look for these high quality breaks? There are 3 places it can happen. Market structure breaks, MSB. It is probably my favorite area to look for because it is a strong enough break that can change the trend. As you can see in this example, a very high quality break happens and changes the trend. Nice and simple. Secondly, break of structures, BOSS. Another great place to look for high quality breaks. Some people ask me the difference between MSB and BOSS. Well, technically both are the same thing. People focus on them too much. Just call them breaks. Anything you want. They only create new breaks in the market from the previous swing high or low. That's it. Do not confuse yourself too much. As you can see in this chart, a great quality break happens. Finally, the SR flip areas in the mixed and confusing charts. Well, every chart has MSB or BOSS, but if you cannot identify them, if you are having a hard time, just look for support resistance flip areas. These are very obvious zones. If you look at the chart, you can easily see the demand zone was holding the price very strongly until it is broken downwards. Then it became a supply area after the high quality break. Is this an MSB or BOSS? I do not care at all, just call it break. Focus on the quality of the break. All the concepts that I teach you are interconnected, all have the same purpose, that's all. Is everything this simple? Well, yes and no. However, with a couple of additional price action structures, you can easily find the best trades possible. Let's talk about trade setups. Special patterns keep happening in the markets. All setups are similar to each other with a couple of differences. First of all, identifying a swing failure pattern before the high quality break is extremely important, because this is a big sign of trend weakness and stop loss hunting. Let's see an example of it. What do you see when you look at this chart? Bunch of candlesticks and confusing price movements. Well, years ago I was like you. Do not worry. With time you'll be like me. It is like taking the red pill and seeing the matrix. You can see the swing failure pattern right here. Price fails to make a break above. This indicates to me that price came here to hunt stop losses and has not much intention to go above. Then when you look at the breaks, they are everywhere. Can you tell me which break has the highest quality? Pause the video. Yes, this is our break. After the swing failure pattern, price dropped sharply. I do not care if it is a MSB or BOSS, I call it a break. This break leaves a giant imbalance behind, the way I like it. If you look closely, you can see how the SR flip happens. Once a strong demand area, now becoming a supply zone. And finally, our target. As I said, without a clear target, there is no trade. You can see the equal lows below with a half-fit imbalance. Let's check out the second trade setup that we can use. It is almost identical to our first trading setup, a swing failure before our high quality break. However, this time we can look at another swing failure pattern right before our entry. Let's see an example. What do you see here? Another confusing bunch of candlesticks, right? Let's break it down. What I see here is a considerable swing failure pattern. Price came here, barely closing above, then suddenly drops. These sudden drops make me believe this is a form of a stop loss hunt and another form of a swing failure pattern. Whatever you call it, this is a price weakness. Next is a break. There is a one little manipulation candlestick, a spinning bar here, only designed to hunt stop losses below and above. Not much to do with the real price action. However, right after that, you can witness the real high quality break. Price leaving an imbalance area. As you know, I love imbalances. Without imbalances, probably my trading skills would never have evolved. Now this is the critical point. Secondary swing failure pattern. After the break, this is another great indication of an entry for us. At the same time, you can easily notice the support resistance flip here, a very obvious price zone. Finally, before I enter a trade, I look for targets first. The only question on my mind is where the price could move to. Any reason for that? Let's check our final trading setup. It is exactly the same setup. This time, what we will wait for is the equal highs or lows or trend line liquidity. Simply looking for any kind of huntable stop loss areas. Let's see an example. By the way, these are not just random charts of cherry picking. I took all these trades. This was my latest trade. In the next video, I'll explain in detail how I scalped this trade. Now let's go back to the basics. Step 1. Confirm a swing failure pattern, or at least a considerable swing failure pattern, as a weakness. Step 2. Find yourself a high quality break. Step 3. Identify the imbalance areas. Step 4. Check if there is a support resistance area. Step 5. Wait for stop loss huntable area, equal lines or trend lines. Step 6. Confirm a target. Always find yourself a clear target. Swing high lows, equal high lows, imbalances, fresh supply or demand areas, anything that may pull the price. Step 7. Become the hunter. Snipe scalp in low time frames. Low time frames will give you the best entry possible. Not bad, really not bad. One of my greatest trades. Okay folks, this is it. I covered extremely important subjects today. Breakers and support resistance flips with 3 special price action trading setups. Every price action trader in my life uses these trading patterns with great results. If you can practice, you will master them in no time. I hope you subscribe to the channel and like the video. Thank you, take care, and see you soon. Let's start with the high time frame analysis. Let's check out the 4 hours time frame. If you are so confused about time frames, start combining 4 hours, 1 hour, 15 minutes, and 5, 4, 3, 2, 1 minutes together for a starter. As you can see here, we are in an uptrend. However, if you check the daily time frame and global consensus, you will understand the general feeling is a bear market and quite weak. Now, if you draw your premium and discount zones, you can clearly see where to go long or short. I took like 20-25 trades in the last 30 days because the market structure was so clear with premium and discount zones. Let's get closer to the latest price action. When you draw your breakout, premium and discount zones, you may notice the weakness of breakouts. It just keeps leaving long wicks. Price keep being rejected from this price level. What I see here, low quality breaks and partially swing failure patterns. What does it mean? This is a general area for the stop loss hunt and greed stage. The only reason for that is these weak breaks and considerable swing failure patterns. However, if the price breakout was high quality and really strong with long green candlestick, my idea would be different. Let's open 1 hour time frame and get a closer look to identify a better price action. First of all, I want you to tell me, where are the swing failure patterns in this chart? Pause the video. Yes, exactly. There are 3 swing failure patterns here in a row. All of them are real swing failure patterns. What does it mean? It is an extreme price weakness, a possible reversal of a major trend. Your second question should always be this: where this price can move? Is there a reason to go down? Anything that pulls the price down. You can see the equal lows and imbalance right here, the deadliest target combo. Then my final question is, where can I enter a trade? How can I scalp this price range? How to achieve sniper scalping? You can see the giant imbalance here, right after the high quality break. Moreover, the downtrend area. People ask me about liquidity. I will cover all liquidity concepts in the second phase of the course, do not worry. However, I will do a quick intro today soon, only for you. So what I do is here determine my gameplay zone. This is the place that I'm gonna scalp in low time frames. This is real scalping, guys. First, you determine your gameplay area from the high time frames. Then you open your low time frames to scalp the chart. Now, let's have a quick intro to liquidity and stop loss hunting. What is social media teaching you? First, tell me that. They say open 1 minute, 2, 3, 4, 5 minutes charts and start scalping. This is what the mainstream media teaches you. They teach you to scalp the low time frames without looking at any high time frames. Can you see the obvious downtrend here with this 3 minutes chart? Yes. How do new traders use this chart to open a position? From the trend resistance, right? Not bad at all. As you can see, early traders are in profit and the late traders are in partial profit. The biggest problem of new traders, they do not take profits. Again, the mainstream media keeps teaching them to be rich. How to become a rich in 1 day. So beginners have no sense of taking profits. This above area is the liquidity pool. Basically, where the stop loss orders are waiting. There are tens of thousands of orders here. You cannot even imagine how many orders there are because there are millions of scalp traders out there. And 80% to 90% of them keep losing money. They have no idea about how to scalp at all. Let's zoom out the chart and open the 15 minutes time frame, which new traders never even look at. First of all, you can notice the high quality break right here. And then the imbalance, which I love. I am one step ahead of beginner scalpers because I check the low and high time frames together. How did I take my trade? I waited for all the stop losses to be hunted here in this chart. Those beginner scalpers had no idea about high time frames. I knew that very well. As you can see, the liquidity is stop loss hunting, but nothing else. It's a quite simple concept. However, it really takes time to master. I will fully cover it in the second part of the course after I finish the foundations. Subscribe if you wait for it. Okay, let's check the 15 minutes chart again. Before opening the low time frames for sniper scalping, once I saw this downtrend liquidity hunt and all the stop losses of new scalper traders were taken out, I waited for the price to touch this 15 minutes imbalance. I took my first trade right after here. I did real sniper trading. Let's open low time frames and understand how to keep scalping the low time frames in this gameplay zone. Yes, the gameplay zone. If you want to be a scalper, you must determine the gameplay zone with high time frames first. I already covered the gameplay zone fully in one of my videos. It is simply the area between possible entry and target points from the high time frames, such as imbalance to imbalance, or order blocks to order block, or imbalance to equal lows or highs. Okay, let's check the significant area and learn how to scalp. When the 15 minutes imbalance tapped, I waited for a market structure break with a 1 minute chart. There were a couple of breaks, but not real and strong market structure break. My other entry style is always reverse optimal trade entry, ROTE. However, this is a much riskier entry type than MSB in low time frames. If you look at the chart closely, you can see the double swing failure pattern, the weakness of the trend, and notice the reverse optimal trade entry pattern. What about the target? Yet again, equal low and imbalance combinations. I held the trade much longer because of the gameplay area and other targets from the high time frames. Let's check the 5 minutes chart and look at the other scalping opportunities in the gameplay zone. First of all, you can notice the kind of SR flip area here. after a sharp drop and break. Price never pulls back above, which could have been better for us. However, as I said before, if you miss the MSB, then wait for the early break of structures. You can see an early break of structure here. Price pulls back to the premium zone and drops again. Then another one, another opportunity, scalp the area. Then another one, price breaks and pullbacks to the premium and fills the imbalance. However, the last one could have been a fake. It was touching the imbalance from the high time frames. But there was so much liquidity below, price was put to that zone eventually. Okay folks, this is how you really scalp. This is the real sniper scalping strategy that you must use if you really care about your money. I hope this was another valuable video session to improve yourself. It requires regular practice and patience. I hope you subscribe to the channel and like the video. Help me to reach new traders to teach the right trading methods. Thank you, take care, and see you soon. Let's talk about the power of 3. It is a really simple trading concept in price action. However, it cannot be used everywhere. I'll show you the specific locations where you can use this structure. PO3 consists of 3 stages: accumulation, manipulation, and the expansion. These names keep changing. Everybody has different names for the phases such as distribution. But names have no importance at all. What we only care about is the meaning of the price action. The accumulation phase is the range phase, the consolidation stage without any trend direction. The longest stage of the 3 phases. What actually happens here, orders keep piling. You can call it silence before the storm. You will generally see the liquidation areas will appear in this phase, equal lows and highs or trendline liquidity. The second phase is the manipulation phase. As the name suggests, faking a breakout to trap the beginner traders who just learned to trade breakouts. Finally, the expansion phase. Price finally moves to its true direction. Manipulation and expansion phases generally quickly happen. However, the accumulation phase generally takes a long time. Let's understand the core of the power of 3 stages. In the accumulation phase, you will see resistance. It could be a classic straight line resistance or trend line resistance. One more time, classic technical analysis work. All the trend lines or chart patterns. However, the problem is beginner traders are not aware of 2 things. 1. High time frames. They never check high time frames. 2. Left of the chart. They never check the left of the chart and do not understand imbalances and other price action structures. They mostly focus on indicators. So, new traders mostly place their orders on this resistance in low time frames, and most of them try to scalp it. This creates liquidity for the market maker. Most of the time, these stop-loss orders are hunted quickly. Again, all new traders will trade this as a breakout as well and place new orders for breakout trades. These stop-loss orders will be hunted again. As you can see, it is a double trap. Let's check this example. This will be a basic example. I will fully cover full trading setup soon. You can see the orders are being accumulated right here and leaving us a resistance line above. This is a 1-hour chart. However, many 5 minutes or 1 minute scalpers will see this as a resistance line and set orders from here. All those stop-loss orders will be taken out, as you can see clearly with the manipulation stage. And then finally price sharply drops during the expansion phase. Very clear structure. Let's talk about trading setups that you can use. First of all, combining high quality breaks with the power of 3. Once you identify a high quality break, you may wait for an accumulation phase. With this phase, the liquidity areas will appear. And then we wait for the manipulation phase. It is basically stop-loss hunting. In the manipulation phase, you'll look for the left of your chart to find an order block imbalance, and support resistance flips. Any kind of price action structure that supports the downwards movement. As an entry, your best chances are opening the low time frames and looking for a market structure shift for our entry. Finally, finding targets is critical. Any liquidity areas or imbalances will do the trick. Great, let's move to an example. You can use this setup with a swing failure pattern. We'll focus on SFP with the second trading setup. The first thing you should focus on is the high quality break with large candlesticks and possible big imbalances. Later on, you'll witness the accumulation phase. You need a little patience. Let the trendline liquidity or equal highs liquidity form. This happens all the time, one of my favorite trade setups. Then comes the manipulation stage, which is basically stop loss hunting, but nothing else. How to enter this trade? Look to the left of your chart. Any imbalance, any supply, any usable price action structures. You can see the support resistance flip with the breaker block. Then the targets. Any equal lows, trendline liquidity, any imbalances that may pull the price. This will be the expansion phase. Quite a simple structure. The second trade setup is actually very similar to the first setup. As an extra step, find a previous swing failure pattern, or a weak break, or any previous liquidity hunt. Swing failure patterns are really important for us. It is an indication of price weakness and possible trend change combined with high quality breaks. The rest of the trading setup is the same. Just wait for the accumulation phase, then wait for the beginner trader stop loss orders to be hunted. Find yourself a clear target, then enter your trade. Okay, let's see an example. You must find a swing failure pattern, or at least a considerable swing failure pattern first. Then the rest of the trading setup was actually exactly the same. Let's go over again. Practice is the best cure for trading. 1. Confirm a SFP or any liquidity hunt. 2. Check for a high quality break. 3. Wait for the accumulation phase. 4. Let the liquidity zones appear. 5. Wait for the liquidity hunt, stop loss hunting as the manipulation phase. 6. Look for price action structures as imbalances or other supply areas. 7. Look for targets such as liquidity, imbalances, or other demand areas. This will be the expansion phase. Try to use low time frames, look for micro MSP or BOS to enter a trade. Last trading setup. This trading setup requires finding extremely powerful demand or supply areas from the high time frames and using them for your entries in low time frames. Imbalances with order blocks, breaker blocks, or Quasimodo areas are great demand and supply areas. Then the rest of the trade setup again is quite similar. Let's check the example. One of the most common questions that I get, which OB will work, which breaker block, which QML, which supply or demand will work. Guys, I have no idea. We do not care which one will work. It is so simple. Determine your supply or demand areas in high time frames and look for entries in low time frames. Price action is this simple. Recently, I tweeted this chart determining possible demand and supply areas. I had no idea which one was going to work. This demand area actually worked great and gave us a couple of entry points. Let's zoom in on this area and check what happened there. You can see the very long accumulation phase without any clear trend, a consolidation stage. Then you can point out liquidity areas and simply ask yourself, where could the stop loss orders be? Answer is trends and support resistance lines. Then the manipulation phase comes, hunting all those stop losses from the uptrend support line. And the expansion phase comes after. Same thing again, hunting the stop losses from the equal highs and liquidity downtrend. It is also pulled by the large imbalance that above. Okay folks, this is it. This adventure ends here. Power of 3 is a very simple and extremely powerful price action trading strategy for day traders and scalpers. You can use it in your trading life easily. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon. Let's start with the Bitcoin. First of all, what do you see here? A classic bear flag pattern. Did you know all the chart patterns, triangles, flags, wedges, or head and shoulders are born out of the price action and liquidity concepts? I'll do a whole series of chart patterns with price action combinations in the future. Let's zoom in a bit on this 1-hour chart and learn how to trade it. As you can see, uptrend and downtrend areas squeezing the Bitcoin, forming a triangle or flag you may call. Since my global bias is bearish, I only look and wait for short opportunities at the moment. The difference between chart pattern trading and price action trading is price action will give you the best entries, even before chart pattern entries. First of all, let's look at the liquidity points. How do you trade the trends? Make entries from the trend resistance or trend supports. Ideal stop-loss points are below the trend support lines. There are thousands of stop-loss orders waiting here, and the market maker knows this. Let's get back to trading. When I look at this chart, the first thing that I look for is sharp and high-quality breaks. Then I generally wait for other price action structures to form around these sharp breaks. You can notice the sharp break here, very high quality and very quick. You can see the imbalance it leaves behind, very large and powerful. Then the equal highs, as you already know. The equal plus imbalance combo is my favorite entry and target. You can also notice very obvious SR flips here. I'll do a video about support resistance flips. However, the main rule of support resistance flips is high quality breaks. I need to see the high quality and sharp break first, then I check for SR flips. I took my trade around here once the equal highs and imbalance hunted, and my target was the liquidity pull downside. To be honest, I closed the trade a bit early. Well, I always lock my profits and focus on growing my account. By the way, can you see the power of 3 here? Please pause the video and tell me where the PO3 is. Yes, it's right here. Accumulation, manipulation, and the expansion. Let's check the low time frames and possible entries. You can see the equal lows being formed here, a possible huntable target for us. I could have easily used the ROTE entry here for the most amazing sniper scalping trade. First, notice the swing failure pattern here, very obvious. Then the imbalance with huntable swing low. Rest is an easy ROTE entry. I missed this entry, to be honest. I would like to warn you. ROTE is mostly designed for high time frames, not actually for low time frames as entries. My first choice is always finding a market structure break, MSB. Then the break of structure, BOSS. My last choice is ROTE, unless I cannot find a MSB or BOSS with low time frame entries. It is just my backup entry. Many times I get a question about MSB. There is no MSB or pullback, so how will I enter a trade? If you miss the MSB, I look for early break of structures because MSB happens once. However, BOSS happens multiple times after MSB. It gives you many entry opportunities. Let's check out the USD Euro pair. When you trade Forex, the global direction will be unclear. It will mostly depend on two countries, their interest rates, eco data, and news. You should be aware of all of those. Again, when I look for a chart, the first thing that my eyes scan for is the most high quality break, the biggest, the strongest, and the largest break that I can see. Because these breaks create the big imbalances that I love the most. I'm an imbalance trader, I love them. Now you can look for other price action structures. As you can see, the SR flip is extremely obvious here. And the next question is this. If the price bounces from this SR flip, is there a target? Is there anything that may pull the price upwards? My answer generally is the same, liquidity or imbalance. I want you to point out the P03. Now stop the video please and point out the power of 3. Let's see. The accumulation, the manipulation, and the expansion. Guys, combining multiple price action structures is the answer to trading. I've been in a trading game for a decade. Nothing cleared my mind like price action. You can also draw your premium discount zones to sharpen your entries. It is always best to buy anything as cheap as possible and sell it as expensive as possible. This is not about trading. This is the way of humanity for thousands of years. Now, I want you to look at this trend line. Let's see how beginner traders fail to trade this trend line. How do you enter a trade with trend lines? From the support lines, right? Yes, it is right. However, it was before that you know the price action concepts like imbalance, premium and discount zones, power of 3 and support resistance flips. How about trendline breakouts? Again, I'm not saying that the trend line works or not. It all depends on location. Location of patterns and price action structures are key to trading. Finally, let's look at Ethereum. The first thing that you can easily notice is the swing failure pattern. Right after that, I mostly look for high quality breaks. Why are we focusing on high quality and strong breaks? The answer is quite simple. Who can move the price this strongly and quickly at once? It should be someone or some institution who has access to big funds. We retail traders cannot move the price like that. This is why the most important thing in trading is high quality breaks. After the break, obviously, I'm not jumping to trades. I just need to observe other price action structures. You can see the very clear SR flip here. Once a resistance area becomes a support, and then again becomes a resistance. Any targets, any reason for the price to go down. Liquidity and the big imbalance are very clear below. Now, what is this structure? Classic head and shoulders pattern. As I said in the beginning, all the chart patterns are actually based on price action. But nobody teaches you that. After the break, you can notice the liquidity downtrend and imbalance area. If you draw your premium and discount zone, you can also find better entries. Now finally, let's check the power of 3. Can you pinpoint the P03? Pause the video. Here is the accumulation, then manipulation, and the final expansion phase. Not that hard really. It may feel complicated in the beginning, but once you keep watching the charts, you will keep seeing these structures. Okay folks, I hope that you fully understand the power of 3 structure now. It is an extremely powerful trading strategy for day trading and scalping. If you have any questions in your mind, please leave a comment below. I'm happy to answer them. If you liked the video, please subscribe to the channel and leave a like for me. Thank you, take care, and see you soon. First of all, what is a support resistance flip? Or you can say SR flips. I think all of you know this very well. The old support area becomes the new resistance area, or vice versa. The old resistance area becomes the new support area. It's basically a flip. It happens thousands, millions of times every single day. You can see it on all the charts. Now, one of the biggest mistakes of new traders, they mostly draw lines to determine these zones. However, it is actually large zones or areas that are tradable. Drawing a thin line may confuse you because you may think the line is broken again quickly. Let's see an example. Now I want you to pause the video and tell me, where is the support resistance zone? Yes, as you can see, this is our large zone that covers the tradable areas. Pretty significant zone. Now, let's learn how to identify the high-quality SR flip zones. What do you think I look for first to identify a high-quality support resistance area? It's actually not the SR flips. The first thing that I usually look for is high-quality breaks. Once I spot these high-quality breaks, then I look at the chart. If there is a support resistance flip area around the break. This is a neat trick that you can apply within your trading life. Let's see this example. I want you to point out the high quality break first. Yes, it is right here. Now let's check if there is a support resistance flip zone around this break. As you can see, it is obvious and clear. You can use this little trading secret to identify high-quality support resistance flips. What else to look to identify high-quality SR flips? I especially look for price levels that push back the price, repelling and repulsive areas. It does not matter upwards or downwards movement. I mostly look for specific levels that price reacts to and how many times it reacts. Let's check the example. Let's count reacting movements on this SR flip area. The first reaction is a downward movement. Then it creates the SR flip. Right after that, price reacts upwards 3 times, then creating an incredible high quality break. After all those, price reacts downwards 3 times. So price reacts to this price level 7 times. This is a great indication for us to identify a special price level zone. One other point is previous liquidity hunts. SR flips could be easily fake moves. What I like to see is previous stop loss hunts. You can determine this by using previous swing failure patterns or weak and low quality breaks. This generally indicates to me that the price does not want to go higher anymore, trapping the buyers. Let's check the example. In this example, you can witness the 2 low quality breakouts, or you can call them fake outs. One of them is a real swing failure pattern. This is a great indication of buyers losing power. And seeing the high quality break downwards just confirms more checkpoints for me. Finally, the big question is, where will prices react and how to enter a trade? First of all, as you already remember, breaker blocks are natural support resistance flip zones. Breaker blocks are generally our first strongholds that we expect a reaction to. If you can support the breaker blocks with other price action structures like imbalances, it will make the area much stronger. We can also look for premium and discount zones to sharpen our entries. As I always say, it is better to sell anything as expensive as possible from the premium zone, or buy anything as cheap as possible from the discount zone. Let's see an example. First of all, where is our latest breaker block? Can you pause the video and point it out for me? Yes, here, our failed order block with the weak break, which becomes the breaker block finally. A great area of reaction. What else do we have? Multiple imbalances to be filled and fuel the price move. You can also witness that price is in the premium zone. Price really becomes expensive for us to look for short trading opportunities. Okay, let's see how we can put everything together and trade it step by step. Step 1. Confirm the high quality break. Step 2. Confirm the support resistance flip area. Step 3. Confirm a previous liquidity hunt with a swing failure pattern or some kind of weak breaks. The final step is finding a suitable entry. You can look for an entry with the first time back. As the name suggests, it is the first time retesting the support and resistance flip. What kind of entry? Finding a low time frame micro-mark structure break or some kind of chart pattern entry can be usable here. As I said before, you can use chart patterns when the location is suitable, because chart patterns are created from price action and liquidity concepts. Let's see the example. Once the price comes to the first test around the SR flip area, we call it FTB, the first time back. The first test generally gives us quick entry opportunities. Get in and out of the trade quickly, because the first test could turn into equal lines and trendline liquidity after a while. Now, I cannot open lower than 30 minutes time frame with this chart because of trading view data. However, you can notice the strong break here, and the order block comes with it. There's also a small imbalance there if you look closely. Drawing your premium and discount zone may benefit you in finding an entry. Then using the Fibonacci tool, I draw my optimal trade entry level and determine the OTE zone. Finally, where can the price go down? Any liquidity zone, any swing low, any imbalance to reach? Check for the targets. Not just that, if you look closely, you will witness a bullish support resistance flip here. Price can easily react to this bullish SR flip. So this would be a great entry for us. Clear entry, clear target, clear trade. But do not push your luck so much. Get in and out and grow your account. Next, we will see how this trade turns into a trap. The second type of entry is quite similar to the first one. All the same steps again. Let's practice one more time. Step 1. Confirm the high quality break. Step 2. Confirm the support resistance flip area. Step 3. Confirm a previous stop loss hunt such as a swing failure pattern. Prices may not react from the support resistance line at first touch all the time. Market makers may set some traps like double top or mini trend for scalp traders. You should be aware of them. Let's check the example. Let's look at the same chart with our previous trade practice example. You see how the downtrend liquidity appears after the FTB, the first time back? So many beginner traders enter these trades without a target because they want to be rich and hold their positions for a long time without taking any partial profits. But we got out the first trade once it filled the imbalance from the first example. Greed is your biggest enemy while trading. Now you can witness the very clear swing failure pattern. Again, I cannot open lower time frames, but you can see the break here and how the price pulls back after the break. Then find a suitable target for us. You can see this giant imbalance that waits for us. While placing your entries, I mostly try to use large stop losses as much as possible. I need some cushion for trades. Again, never forget, keeping your money is 10 times more important than making money. Okay folks, I tried to teach you every secret and detail of how to trade with support and resistance flips. This is a very common trading strategy in the trading world. So you can use it in your trading life as a day trader or even scalper. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon. As you can see in this tweet, where I mostly post chart analysis on my Twitter account, what I do is really simple. Drawing potential price reaction levels. I do this with high time frames. High time frame could be 1 week or 1 hour. It all depends on your trading style, if you're scalping or day trading or even swing trading. I do not predict anything about Bitcoin, upwards or downwards. I just point out possible, tradable reaction zones. Price reacted around this SR Philip area with the help of a very important inflation data release. I mostly do not trade news when they happen. However, this was a special occasion due to the extremely well chart setup. Now this chart has 3 very clear support resistance Philip areas. The first one is at the bottom. The problem with that, there were so many untaken liquidity areas and huntable stop loss points above. And there was no reaction in low time frames. It just pierced through the support resistance Philip area. In my second SR Philip area, I honestly waited for a good reaction. There was a clear swing failure pattern above, and all the downtrend stop losses were hunted. The only issue was that I did not see any clear entry, a sharp break in low time frames. The next SR Philip, this was the last area that I also pointed out on Twitter, a special inflation data day. The most important thing about this day was the very important economic data was about to be released. As you know, I state that news trading is extremely risky and very unpredictable. However, this setup was so clear. Swing failure pattern, all stop losses hunted. All I needed was a sharp break so I could confirm sellers were taking control. At the same time, social media was going crazy like Bitcoin is exploding. I could not keep a straight face that day, it was so funny. Let's zoom in on this area with a 15 minutes chart and see what happened. The first thing I noticed was the price was sharply moving upwards, leaving giant imbalances behind and many untaken liquidity points. This was all designed engineering, and with the help of social media, every rookie trader was jumping long trades. The biggest issue of new traders again, they do not take profits. They do not focus on growing their accounts. They have only a single aim, which is to be rich. And social media feeding these people. If there was a way of being quickly rich, I would do it myself. What do you see here? This is a classic wedge pattern. All the chart patterns are born out of price action, liquidity, and imbalances actually. Most new traders do not know this. They jump to every triangle, every wedge, every head and shoulders. The most important thing is the location and the combination of other price action structures. This wedge pattern was in a perfect location. The expected price action move was actually a sharp and high quality break, then a pullback and finding a possible entry. The problem was that the inflation data was much worse than expected for the United States. The high inflation triggered the fear of interest rates and cutting all the money sources to the markets. And price started to fall very sharply, hunting all those stop losses for all those beginner traders. Normally, I would not touch this. However, what I did here was so simple. Just using 0.5% of my capital, I entered the trade. I did not care about losing 0.5% of my whole capital. This was a quick breakout trade, in and out, grabbing the money and growing the account. When you're not sure about your trading setups and still want to enter trades, it's just so simple. Lower your risks, use less money, and earn less money. This was another analysis I posted on Twitter. Again, no price prediction, Just looking for reaction levels and below case worked well. Now let's see what happened. I did not take this trade. However, as a practice, I wanted to show you if you are into scalping. When I open charts, my eyes mostly look for sharp breaks first, because all the price action structures evolve around sharp breaks. Imbalances, order blocks, breaker blocks, support and resistance flips. With this sharp break, you can notice the order block created by it. The problem with this trade after the inflation data was very quick drop. There were huge imbalances and not hunted stop losses and liquidity zones above. Whenever I see this, it just worries me, because price easily move up to claim these areas. This is why I like to use a swing failure pattern as a failsafe. You can also notice the premium and discount zones here, giving us ideas about where to trade or how we can scalp the chart in low time frames. Let's open this area in 5 minutes and look for scalping opportunities. Actually, what I do is exactly the same with all time frames. Spotting the strong breaks first. Then I look for other price action structures around these high quality breaks. As you can see, here is a very dynamic SR flip zone. You can notice how price is being rejected by this price level. More rejections mean higher quality SR flip zone. What else we have here is a huntable stop loss area from the low time frame scalpers. And the main structure slowly shape into the power of three: accumulation phase, manipulation phase, finally the expansion phase. As I said, price action is universal. All price action structures may happen in monthly time frames as well as in 1 minute time frames. As a target, nice equal lows below with imbalance. Again, I did not trade this. However, if I had to take an entry, it would be quick in and out, aiming like 1.5 hour or 2 hour at maximum. As you can see, it passed through this imbalance. But I do not care at all. I would have taken my profit with this imbalance and looked for another trade. You missed the previous trade. Let's look at the chart to find out if any other trade opportunities you missed here. Again, all the same stuff. Looking for a sharp and high quality break first. Now, any usable price action structure for me. Very clear SR flip area. Look closely at how the price rejects this price level again and again. Now, this trade would be perfect because confirming a previous swing failure pattern gives me a direction bias from the buyers and sellers. Now you can draw the breaker block here with the big breakout and imbalance. So, what do we have here? High quality break, SR flip area, swing failure pattern, imbalance, breaker block. What a strong price action area. I love seeing this stuff together. After core price action structures, you can draw helpers like premium and discount zones, identifying more optimal entry areas. You can also draw your Fibonacci optimal trade entry to identify your ROTE zone. I have to admit, price does not always pull back to ROTE area. If it pullbacks, it is the best. But the premium area is enough for me to look for entries. Next is the target. You can use swing highs and lows, imbalances, fresh order blocks, and any demand area below where price may react to. And again, with those giant imbalances above, after the inflation data, I would not risk much, just enter and out quickly. This would be my trading strategy for scalping nowadays, because we are in crazy times of high inflation. Okay folks, this is it. Completed the support and resistance flips. Trading strategy for swing and day traders, also for scalpers. You can use it in your trading life for day trading or scalping. I hope you subscribe to the channel and like the video. Thank you, please take care, and see you soon. Okay, first of all, RBR and DBD look like bull and bear flag shapes on the charts. However, it does not do anything with flag patterns. It has three stages. 1. The first rally, a strong move. Second, the base, the consolidation period. The base creates the natural demand areas in the charts. And the third is the second strong rally. As you can see in this example, a very strong rally happens and a consolidation period follows. Orders are accumulated and then the second rally happens. Never forget, bases are order accumulations that start the second rally or drop. Let's check the drop-based drop. The same concept happens here, a strong and sharp fall, and then a consolidation period. The base is the accumulation of orders, which starts the second sharp drop, drop-based drop. The base is our natural supply zone here. Let's see this example. Price sharply drops and enters a consolidation stage. Orders are accumulating. Then the price makes the second sharp drop, which creates our natural supply area. But why? Why these zones are important and what makes them special? Key to understanding rally-based rally or drop-based drop lies within the low time frames. Once you identify the drop base in high time frames, draw your box. Then open the low time frames and observe the price action and see what you can find out. Inside DBD and RBR, there are extremely high amounts of price action structures, like order blocks, imbalances, breaker blocks, mitigation blocks, and so on. This is why drop-based drop and rally-based rally creates a natural supply and demand area, which is stuffed with lots of usable price action structures. Let's check this example. First of all, drawing these zones is quite a subjective matter. There are no certain rules for drawing these boxes. I just try to focus on where the first move stops and where the second move starts. And the area between those two creates the base. As you can see here, there is a very strong downwards break here. And before that, little consolidation period. You can easily notice the strong drop, then consolidation as a base, and finally the second strong drop. Let's open this area in low time frames and see what we have here. Once you observe the area inside the drop-based drop with the low time frames, you can notice the order blocks, imbalances, breaker blocks. So with the help of rally-based rally and drop-based drop, you are getting a spy glass. Without entering low time frames, you are identifying natural order blocks, imbalances, and breaker blocks. A pretty cool technique actually. I have a couple of quality checkpoints for these patterns. First of all, bigger consolidation is better for us. It means that more orders are accumulating, more transactions happen, more volume area, and a natural high volume node level from the volume profile. So bigger and longer the base means a much stronger demand or supply area. The second quality point is focusing on the third move. After the long and big base, how strongly breaks the base and the consolidation, leaving larger imbalances, giant strong candlesticks, and smaller wicks or not. These are special quality checkpoints that you need to focus on. The classic and the basic entry is very simple. Once you identify the base, draw your box as a demand or a supply area, and wait for the pullback, and find yourself a market structure change in high or low time frames, and place your entry. As a target, you look for imbalances above or below that price may react to. Let's learn the first trade setup. 1. Identify the rally-based rally or drop-based drop. 2. Check if there is a close imbalance above the base. 3. Wait for a liquidity hunt. It could be in the base or right before our entry. It is an optional step. Location does not matter. 4. Confirm the high quality break. 5. Look for a market structure break with high or low time frames. Let's check an example. First of all, can you tell me where the drop-based drop is? Please pause the video and identify it. Well, as I said before, these patterns are quite subjective. Everyone has a different approach to them. As you can see, it is here. I mostly look for sharp breaks before and after with giant candlesticks and possible imbalances. You can also notice the swing failure pattern before, which gives you more confidence before looking for entries. And the giant imbalance above, a possible reaction point for me. Let's open lower time frames and look for entries. First of all, see how the liquidity hunted above the base from the consolidation period. Later, price fills the imbalance before its final big reaction. Looking for a market structure shift and possible entry areas after the break. You can also notice the giant order block above that starts the big move. Using premium and discount zones to determine the best possible entry point. I need to short the asset as expensive as possible. Now this trade is not clear because I cannot see an imbalance above to pinpoint an exact entry. When charts are not clear like this, look for internal swing points. There is liquidity here. You may wait for a stop-loss hunt before placing an entry. As a target, this bullish support resistance flip area grabs my attention. A nice place to take profit. There's also a giant imbalance there. Now price dropped sharply from this point, but I do not care. I would close this trade here. Support resistance flips and giant imbalance combos are dangerous. The second type of entry is just a bit more complex. You may need time to learn it. It mostly happens with the power of 3. As you remember, PO3 is all about 3 stages: accumulation, manipulation, and the expansion. The expansion phase generally creates many rally-based rally or drop-based drops. These are great places to look for this pattern and wait for a possible entry. Let's see an example. Okay, I want you to stop the video and point out the power of 3 for me. Here is the accumulation, or just accumulating without a clear direction. Here is the manipulation. The price makes a fake breakout, or you can call it a swing failure pattern. Finally, the expansion phase, a very sharp drop. Now, let's look at low time frames. First, where is the drop-based drop? Again, it is a subjective matter. Do not worry about drawing perfect zones. Just focus on sharp movement, then a base and another sharp movement with giant candlesticks and imbalances. Yes, it is right here. This is my DBD area to look for entries. And you can see a swing failure pattern above, which gives me a layer of security. See the liquidity forms here. Always be aware of untaken stop-loss areas. Secondly, the price comes to our drop-based drop area. However, it cannot break above, instead performing a weak break. Later, the price breaks down very strongly. The thing I love the most in trading world, high quality breaks. Rest is up to you. Finding an entry from premium zone using order blocks, breaker blocks, and imbalances. There is even a nice Quasimodo pattern here if you noticed. I hope this video made clear how to trade rally-based rally or drop-based drop. Okay folks, this is it. We added a new tool to our trading toolkit for day trading and scalping. Every price action trader in my life use price action trading patterns with great results. If you can practice, you will master them in no time. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon. The way I took this trade was more like scalping rather than day trading. I quickly got in and out. My high time frame was 10 minutes for this chart. As I said before, price action is universal. It works the same as with all the time frames. It does not matter if you trade monthly charts or 1-minute charts. The first thing I was looking for is if the price is expensive to short or cheap to buy. I mostly look for short trades nowadays. So, I look for premium zones to short the assets. The second thing I looked for was any recent stop-loss hunts. And the easiest way to determine liquidity hunts is using swing failure pattern, one of my favorite price action trading pattern. As you can see, there is SFP right here. However, after that, there were equal highs. But if you really look closely, these equal highs was actually also a kind of swing failure pattern. However, this is kind of a gray area, not black or white. I can call these equal highs and SFP at the same time, a tricky price action. Then the next thing you should check for is any supply or demand zones around, which price may react to. As you can see, we have an order block here. However, it did not work at all. Price pierced through this demand, and this order block became the breaker block, a supply and demand flip. This sharp fall leaves giant imbalances behind. As I always say, if the price action structures come together one after another, it makes the area much stronger. This was a great area to start looking for shorts. Why? It is in the premium zone, it has the breaker block, it has the large imbalance. These are great signs and breadcrumbs for us that market maker leaves behind. Now, what I noticed was that the price was leaving swing failure patterns behind. It was dropping while hunting some liquidity. Then I noticed this nice SR flip area, and the price kept reacting to this price level. I actually do not care if the reactions are upwards or downwards. I mostly look for how many times a price reacts to a price level. Once I saw a break here, I considered this is a great sign to go lower time frames and look for a quick scalp entry. But a big warning, when you become an experienced trader, you can see all the dangers much before they happen. You can notice the downtrend liquidity is gathering here. Price was going to claim these stop loss orders here. I witnessed these types of movements thousands of times after trading for years. I also actually traded these stop loss hunts. The price went above and claimed all these liquidity zones and filled the imbalance before another big fall. However, I will talk about that trade in another video. Let's get back to this trade. Once I find a point of interest, I immediately think about where the price may react and where are the good targets that I can take my profits. I immediately noticed this bullish support and resistance flip area. Price was reacting to this area a lot. There was also a giant imbalance here. If I was looking for a long trade, this would be my entry spot. Nice SR flip, nice imbalance, huntable downtrend liquidity area above. Okay, let's open low time frames and check how I scalped this area. I did not hold this trade long because I was really afraid of downtrend liquidity above. If I'm scared of anything while I trade, it is definitely liquidity zones. Once you open low time frames and scalp, you have to focus on what is happening in front of you. The most recent price action is what matters the most. In this 3 minutes chart, You can see the price making a considerable swing failure pattern and a general downtrend. Price is having a hard time making high quality bullish breakouts. Now, I want you to tell me, where is the drop base drop, which creates a great supply area for us? Please pause the video and take your time to identify it. As you can see, it is right here. A sharp and strong drop, and then a consolidation zone, and another sharp break, a high quality break. This is my drop base drop supply zone. But why? Let's look closely and see what is inside the drop base drop area. You can notice the order block right here. Right behind it, there is a nice imbalance. Our old friend, the dragon fruit combo, the best entry point. What I did for this trade was really simple. I set a stop limit order right below the imbalance. This was a perfect fill and perfect entry. My stop loss was right above the order block because I was scared of those downtrend liquidity gathering from the high time frames. My target was really easy, the area that I determined from the high time frame. Once the price hit my target, I took the profit and closed the trade. This was a nice and clean trade. Later on, as I expected, the price reacted to this SR Philip area, an imbalance, and powered up to clean the stop losses above. If your intention is being a scalper or trading really low time frames, the first thing you should do is work on your targets. You have to find clear targets and take your profits, otherwise you'll be the liquidity for market makers and pro traders. Scalping is the hardest section of trading, and scalpers are the biggest fuel of the market makers. Okay folks, we completed the basics of rally-based rally and drop-based drop for day trading and scalping. This is a very common supply and demand trading strategy in the trading world, even for swing trades. You can use it in your trading life as a day trader or scalper. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon. Okay, rally-based drop and drop-based rally are just different versions of identifying usable supply and demand zones. It's extremely simple to identify these structures. It starts with a very strong and sharp rise, creating the first leg. Then the consolidation period creates our bases, order accumulation phase. This will be our supply area. Finally, the second leg, the big and strong drop right after the base. Rally, base, drop, RBD. As you can see in this example, a very sharp and strong rally happens. Right after that, the price stops and orders accumulate, creating the natural supply. Finally, you can witness a sharp and a strong drop. Very simple to identify. Let's check the drop-based rally. It is exactly the same concept, just flip everything. A strong and sharp fall. And then the price stops, orders being accumulated, creating our base. It is our general demand area. Finally, the very strong rally creates the second leg of the movement. Drop, base, rally. DBR. Let's see this example. Very simple. Strong drop. The consolidation phase is our base, our demand zone. Strong rally. Nothing too complicated. If you open charts, you'll see many of these structures around. While we learned the rally-based rally and drop-based drop, we also learned why these areas are very important. It is exactly the same concept because these areas create the very commonly used price action structures. What are these? Order blocks, imbalances, breaker blocks, mitigation blocks, that could be Quasimodo levels, that could be natural SR flips inside. Let's see an example. I want you to pause the video and identify rally, base, drop. If you look carefully, it is right here. This order accumulation creates our base and our natural supply area. You can notice the strong and high quality break here, leaving many imbalances behind and tradable areas for us. Let's check the inside of the rally-based drop. First, the breaker block, our failed order block. Right after that, you can see the general order block area. This is why these structures are really important, creating natural reaction points for us. Let's continue with the same example. This time, let's check the drop-based rally. If you notice, there is a very obvious drop-based rally right here. A sharp drop, then a consolidation period, and finally the sharp raise. This order accumulation creates our natural drop-based rally demand area. You can notice the strong break right here that starts the rally leg. Identifying the order blocks is easy. It is right here. And right next to it, there is the breaker block. Finally, the obvious imbalance. All these areas combined create much stronger reaction points for us to trade. We also have natural checkpoints to distinguish the high quality and low quality demand and supply zones. Firstly, liquidity is a great concept to check. You should be checking the base carefully. Stop losses hunted or not. In the first example, many liquidity areas are not hunted. Price may easily pierce through this base and claim all the liquidity areas. In the second example, you can notice that some liquidity levels are hunted before the sharp fall. In the final example, there are many major liquidity levels hunted before the sharp fall, giving us a feeling of more safety before opening an entry. The second checkpoint is the same. Larger bases basically mean that more order accumulation. People are more interested in these levels and placing their orders. So, if the price comes back to these levels, there could be a great reaction. The last checkpoint is the high quality breaks in the second leg. I mostly care for the latest price action because the second legs are the ones that create the tradable areas for us, such as order blocks or imbalances. By the way, none of these are written rules anywhere. These are just my experiences. If you look at these examples, you'll notice something. Both rally-based drop and drop-based rally have their stop loss hunted before the second big moves. Basically, great swing failure patterns before the sharp moves. When I see this, it gives me comfort before entering a trade. Let's talk about trade setups to use in our daily lives. Before I start, I should state something. None of the trading setups and step-by-step instructions are written rules again. And you will not commonly see perfect setups in the real world. What we do here is just get as many confirmation as possible. Okay, let's see. Step 1. Identify a nice rally-based drop in the charts and draw a large zone. Do not worry about drawing a perfect zone. There is no such a thing. Step 2. Check the quality of the break. Is it strong enough or not? Step 3. Check the base. Are there hunted stop losses like swing failure patterns or not? Step 4. Let the trade setup form itself, creating internal liquidity points. This is an optional step. These internal stop loss areas will not be there all the time. Finally, identify the possible entry within the natural supply area. This could be reactions from order blocks, breaker blocks, or imbalances, and place your entry. Let's see an example. Let's go over this example slowly. Step 1. Identify the possible drop-based rally or rally-based drop. It's right here. Next, find the break that causes the sharp fall. Then check the quality of the rally-based drop. If you notice, there are strong stop-loss hunts here as swing failure patterns. Finally, I have a strong and natural supply area, our rally-based drop. Now looking for other possible price action structures. First, you can see the breaker block right here. Right after that, there is the order block which starts a sharp fall. The order blocks generally starts the second legs in these patterns. Now checking the structure, see the huntable stop loss points. Let's talk about entries. There are two breaks here. First, the market structure break and the break of structure. If you do not trust the first break, just wait for the second break. You can always use the premium and discount zones for better entries. Where to enter? I do not see a clear imbalance with the second break. Using order blocks is ideal. Now where the price can go? There is no significant imbalance down here, just some tiny ones. If you cannot find an imbalance, look for swing low points or liquidity lines like trends or equals. My entry would be like this one, very strictly 1R to 2R entry. I'm not being a 10R hero here, very realistic entry and exit. Let's talk about the stop losses. Identifying stop losses is actually quite simple. Every swing high point here is a possible stop loss level. As you can see, there are 4 possible stop loss points here. I'm not here to tell you which stop loss to take. The highest swing high is the least risky place to place a stop loss. At the same time, it reduces your reward. I'm really happy with 2R or 3R trades. But this is a personal taste and matter. I cannot guide you about what to do. Second trade type is extremely similar to the first one. However, sometimes the liquidity above or below the base needs to be hunted first before giving us a proper entry location. Let's practice and go over the setup again. Remember, practice and repetition is the only way to make things perfect. Step 1. Finding a nice rally-based drop or drop-based rally and drawing the demand zone from the base. Step 2. Check the base. Are there hunted stop losses like swing failure pattern or not? What is the overall quality of the structure? Step 3. Identifying possible internal liquidity levels and getting ideas about where the price may move. Finally, identify the possible entry. Price may want to hunt stop losses to fuel itself up before making a major move. These are generally quick hunts like swing failure patterns. And place your entry. We did a lot of examples on how to enter a trade before. Let's see another example. I specially selected this example because in real life, charts will be far from the perfect. Do not waste your time for finding the perfect shaped setups. Instead, try to read the charts and focus on what price can do. First, you can see there is a drop-based rally right here. It is DBR, but not a perfect one. You can notice the break right here. If you open lower time frames, it will be much clearer. I can see these things from the higher time frames due to my long years of experience. This will be our natural demand zone, drop-based rally, order accumulation zone. You see this time price hunts the stop losses, creating a nice swing failure pattern. And you should ask yourself all the time, non-stop, where is the liquidity? Where are the imbalances? Where can the price go? You can notice the equal highs above. As for entry, you can use the imbalance. However, I have a quiz for you. If you can spot the ROTE, reverse optimal trade entry in this chart, just type the word ROTE in the comments and send me your charts on Twitter. Let's see who remembers the reverse optimal trade entry. Okay folks, this is how you use rally-based drop and drop-based rally for day trading and scalping. These supply and demand trading strategies are commonly used in the day trading world, even for swing traders. So you can use it as a day trader or scalper, or even as a swing trader, to identify the key zones. I hope you subscribe to the channel and like the video. Thank you. I want you to look at this chart and tell me, what do you really see? Bunch of candlesticks, insane wicks, and crazy price action, right? Well, not actually. I see 10 different price action structures here. People ask me how to get this eagle vision that makes you see everything in one look. There's no short-term cure for it. You need to get a large monitor or TV like 40 plus inches, hang it on the wall, and watch the chart 724 until your eyes really get used to it. This is the only solution. Okay, there is a very obvious range here. We are still yet to learn range trading. Let me do a quick introduction for you. Ranges are actually accumulation phases without any obvious trends. The key point of drawing ranges, the buy or sell force should send the price from one point to another point, more likely from the range high to the range low, or range low to the range high. As you can see here, sell forces sent the price to the range low, and buy forces sent the price to the range high. Price was like a pinball, bouncing between the range high and low. And the ranges have two parts. Premium, where the price is too expensive, great for shorts, and discount, where the price is too cheap, great for buys. I immediately noticed our classic rally, base, drop here. It is not the best looking one, but it is a proper RBD. Never forget, chart shapes will never be perfect. If you wait for perfect shapes, you will never enter a trade. Now this is our supply zone, just above the range high. If you closely look, you can witness the liquidity forming right here. This giant wick was the stop loss hunt of all the stop loss orders here. It is also our classic swing failure pattern. This gives me a double comfort to look for shorts. You see what I do? I keep looking for more price action structures. And where the price can go is my critical question. The obvious equal lows down here. Sometimes price pierces through the range high and low. We call these deviation points, maximum points before a possible reversal. Do not worry, we will fully learn ranges in the free trading course. Now let's zoom in here in 2 minutes charts and learn how to enter a trade. Okay, this is our 2 minutes chart. You can see the high time frame structures, the range deviation, the supply area from the rally base drop, and the swing failure pattern from the high time frame, all here. The first thing I checked here was the market structure break. Then I determined the premium zone. Normally, I would wait for the price to reach the premium zone. However, price reacted to the rally base drop so strongly, and this was the only clear imbalance left behind. So my idea was simple. Set a stop limit order to this imbalance with a really large stop loss in case of the price goes to the premium zone above. However, the reaction was so strong, the price never pulled back as I imagined. Instead, the price made the second break, the first break of structure, boss 1. As I said many times, the price does not have to pull back. This is not a written rule. If there is no MSB or pullback, just wait for the first break of structure. Again, I drew my premium and discount zones. Actually, I do not draw most of these things. I just draw them to explain them to you. Now you can see the tiny imbalance right here. This was my overall entry zone. Because I saw the liquidity forming right here, I waited for the liquidity hunt. Also, what do we have here? Let's check it out. Our obvious order block right here creates our dragon fruit. If you check the left, you'll notice the break and the failed order block, which turns into a breaker block. I keep looking, what is it here? An obvious SR flip area? This is how I decide my entries in real life. Let's see. High time frame supply area reaction. Strong break, premium zone, order block, breaker block, support resistance flip, liquidity hunt. What else do you need to enter a trade? Let's zoom out a bit and talk about the entry, target, and stop losses. I keep asking the same question again and again. Where can the price go? What may pull the price and algorithmic bots? Are old equal lows right here? An amazing target. I placed this incredible 10-hour trade, making millions in a single night, keep flipping my account. I only wish that. Jokes aside, here is the real entry and stop loss. Price can easily pull back above and claim the untouched imbalance above. This is why I use large stop losses. 2-hour or 3-hour trades. All I need in this game. Obviously, this does not mean you can set 4-hour, 5-hour trades, or even 10-hour, 15-hour trades. All this possible. I take trades like that time to time. However, if you are a beginner, you only focus on 1.5-hour, 2-hour, and 3-hour trades. You have to master these small rewards first, before moving on to bigger targets. Okay, let's check out this 15-minute single time frame trade. Firstly, please pause the video and identify the structures before me, and let's compare them together later on. First quiz. Where is the rally base drop? RBD. If you can see it, please write RBD in the comment section, so I can see if the free course is working or not. Yes, it is right here. This is not an ordinary rally-based drop. It is also the highest quality. First of all, the swing failure patterns. The second swing failure pattern is almost like an equal low. However, if you open low time frames, you'll notice that some stop loss orders is hunted. And after them, amazing breaks. Probably the highest quality break that I have seen nowadays. This creates our mega rally base drop supply zone. Do not focus on drawing a perfect zone. It is not needed. Just identify the zone. Let's see what is inside the zone. First of all, the imbalance is very obvious and untouched. Then you'll notice two breaker blocks together. Both of them failed to hold the price for the bullish action and became breaker blocks. And the general order block area above. What else do we have here? Support resistance flip area. I truly love SR flips. Can you also see the liquidity forming here? Many low time frame scalpers enter their short orders here, waiting for the price to fall. Let's check the premium and discount zones. Price became extremely expensive, the way I like it, before shorting an asset. What else? Our beloved optimal trade entry is the natural price reaction zone. Above all that, the price reaches our extreme zone. What was the extreme zone? Premium zone plus entry zone within the break. We certainly have a lot of things here. Let's check them again. Rally-based drop supply zone. Swing failure patterns. High quality breaks. Liquidity hunt. Double breaker blocks. Order block. Premium zone. Optimal trade entry area. And extreme interest zone. The complete layer system. For this trade, I did not even open a low time frame because I knew that the reaction would be extremely powerful because of so many price action structures together. All I was doing was placing an entry after the first red candle, right after the strong reaction. My target was quite simple. It was this giant imbalance. I expected to be filled. My stop loss was above the closest wick. This was a quick 2-hour trade. If you wanted to be safer, you could place stop loss order right above the highest wick, right here. But this would be a 1-hour to 1-hour trade. Again, all this depends on your risk management. Do you love taking risks? Set for tighter stop losses and aim bigger rewards. But I only focus on growing my account slowly. This is why I enjoy playing safe. Okay folks, this is how I keep using the rally-based drop and drop-based rally for day trading and scalping. These are very important supply and demand strategies used by day traders and scalpers. I believe that it will be really helpful in your trading life. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon. Okay, let's understand the mitigation blocks. It is in the family of breaker blocks and order blocks. Basically, a mitigation block is just a form of a breaker block. But how? Let's quickly remember the breaker blocks. Once the price reaches a new higher high with the latest break, as you remember, an order block comes into existence. If this order block fails to hold the price, it becomes a breaker block. So, what is the mitigation block then? It is actually the same thing, exactly, with a single difference. This time price fails to make a new break, a new higher high. Instead, it makes an internal swing and breaks downwards. So this same red candlestick now becomes the mitigation block. I hope it is all clear. Let's see an example. Okay, please pause the video and identify the mitigation block in this example. These practices are critical for you to identify these structures quickly. First of all, you have to visualize the market structure in your mind. No need to draw it. You have to improve your ability to identify them from your mind. Secondly, you can see where the major breaks happen. You can see the mitigation block right here, which creates a very strong supply area. Price comes into these zones and reacts twice. Now, let's see the bullish mitigation block. I will not repeat the whole process. On the left, you can see the breaker block. Very simple to identify it. On the right, what happens is the price cannot make a new break, a new lower low. Instead, it makes an internal swing. So the same candlestick, the breaker block, now becomes a mitigation block. Let's see an example to understand the chart. Let's visualize the overall market structure. Please note that you do not need to think of perfect structures with perfect higher highs or lower lows. Real charts are far from perfect, and they could be quite complex. Identifying breaks is crucial. You can notice the high quality of this internal break here. And the green candlestick right here creates our mitigation block candlestick, which also creates a strong demand zone. You can easily see how the demand zone holds the price before its new rally. One of the main questions is, but how? What is the idea behind the mitigation blocks? It's again retail trading. You can see the clear retail trend line on this chart. These trend lines are drawn differently by millions of traders every single day. How do you trade a trend line? Basically, you wait for the price to touch trend support or resistance and place your entry. Does it work? Sometimes it works, sometimes it does not work. One of the key points of identifying strong trends is the quality of new breaks. Are they strong enough? As you can see in this chart, there is no even a new break. This is your first signal of trend weakness. Instead, the price makes new lower low, changing the course of the trend. This is how a mitigation block, a new supply area, comes into existence. What do you see here? Please look carefully. Well, it's actually a head and shoulders pattern and a much better entry point with a mitigation block. As I already said, every chart pattern is born out of price action. To be honest, there is actually no such a thing as a chart pattern. They are all price action based concepts with easier representation to new traders. However, trading these patterns alone could be dangerous. This example is crucial to understand the retail mindset. Now, as you can see, there is a trend line right here. The main problem with trend lines, they are quite subjective. I could draw 10 different trend lines here. Every trader has their own standards to identify patterns and lines. For a trend line trader, one of the most common expected entries is from the trend support. Wait for the support touch and some reaction, then place your entry. However, as you can see, the last support is not strong enough to push the price above, to create a new break, a new higher high. Instead, it's coming back to trend support after some profit run. This is your main trend weakness signal. The price breaks downwards and creates a new lower low. Now you can identify the mitigation block and the overall supply area easily. A nice zone to look for entry. By the way, you can also see the head and shoulders pattern. If you are a chart pattern trader and enjoy trading head and shoulders, I just give you a special entry method with mitigation blocks. In my opinion, mitigation blocks are kind of weaker than breaker blocks and order blocks. This is why they should be combined with other price actions. Especially checking the left of your chart is crucial to see what is happening with the price itself. In order to use a mitigation block, I would like to see a form of swing failure pattern or stop loss hunt before opening a position. This would be enough power up for the price to move down or up. But again, nothing is as easy as in these charts. We'll need many other confirmations to enter a trade. Let's see an example. Okay, I especially choose these examples to show you how much practice you need to master the charts, because real charts are really confusing looking and far more complex than the drawings in PDF documents. Firstly, you can see the sort of stop-loss hunt here. Price just goes above and cannot hold itself long. You can witness that price cannot make a new higher high. Instead, it makes lower low with a high quality break. This little tiny red candlestick is our mitigation block, our supply area. Again, it is not wise to jump to trade directly. Of course you can do it, but you need quite a large stop loss for that. Other than that, always try to wait for a micro market structure break or break of structure. Now, if you look closely at this area, you can see the order block. There is actually another hidden mitigation block here. But it is a quiz for you. If you find it, just type mitigation in the comment section. Now assume I made an entry from this micro order block, then where can I target? My eyes are always looking for untaken stop losses and unfilled imbalances. You can see the large imbalance right here. A nice target to aim for. This could be a great 2-3R profit. If there is no stop loss hunt or swing failure pattern, I would like to see a very strong supply or demand area that comes from the left of the chart. These could be giant imbalances, anything from the block family, breaker block, order block, or even other mitigation blocks. Or it could be a very strong break and SR flip area. All these concepts may change from chart to chart. It is impossible to say this one thing should happen when we enter a trade. Trading does not work like that. All charts are different and dynamic. This is why you should know every single price action concepts and identify them quickly. This is another complex trading example. If I remember correctly, I took this trade with a similar entry point. I have to check my account statement. Maybe I will do a very detailed video about this trade in the next video. Okay, let's see. Always check the left of the chart first. A very strong break catches my eye. An incredibly strong and powerful red candlestick right here. Of course, the imbalance. The reason I like high quality breaks is not the big and giant candlesticks. It is actually the giant imbalances it creates. Now you can see that it creates multiple supply areas, order block and a breaker block. With that supply area, another price action structure appears, the rally base drop, which also has multiple different internal breaks inside. Now at this point, where is the mitigation block? Pause the video please and type the mitigation in the comment section if you can identify the mitigation block here. Yes, this red candlestick is our mitigation block. Now with multiple supply areas and strong price action, we can look for entries easily. You can notice the swing failure pattern right here. It is very obvious and powerful. We have an overall entry area, but where can the price go? The giant imbalance will have a pulling effect on this trade. My stop loss would be quite high for this trade. This is a good 2-hour, 3-hour trade to take. Nowadays, I just took so many trades. I will look into it and try to go over all the details in the next video. Okay folks, this is the mitigation block. Now we completed the order block, breaker block and the mitigation block family. These are the most popular trading strategies commonly used in the day trading world. So you can use it as a day trader or scalper, or even as a swing trader to identify the key zones. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon. So, we are going to analyze the same asset with high time frames and make entries with high time frames and low time frames. I got so many questions about which time frames I check the most. As I said before, I check any time frames. However, the most one I check is 1 hour as a high time frame, 15 minutes as mid time frames, and 5, 4, 3, 2, 1 minutes as low time frames. These are my general ones. Let's check the gold. The first thing that I always do is check the left of the chart before even looking at the current price level. My eyes are looking for a high quality break that creates a big imbalance. You should know by now, I am a big imbalance trader. You can see these high quality breaks right here. And if you look at the shape, the second swing cannot create the new higher high. So, what is this pattern called? Yes, it is the mitigation block. Very simple to identify the supply area. And right next to it, you can see the order block supply area. You do not have to be so specific about which exact candlestick is the order block, mitigation block, or the breaker block. It does not matter the exact candlestick. You just need to identify the overall supply area or demand area. Now, you can see the giant imbalance created by the high quality break. I love this kind of imbalance. Let's assume we want to make a high time frame entry without going into lower time frames. How can I do that? My first question is, are there any places that can pull the price? Pause the video and tell me, what can pull the price from this supply area? Yes, it is this giant imbalance. This can easily pull the price. So, how would I make an entry? First of all, my target is very clear, the giant imbalance. How about my stop loss? Before placing my stop loss, I would definitely check where the highest swing point is. You cannot use every swing high point. Sometimes it could be far away. However, in this example, you can see that if I set the stop loss and the imbalance as a target, I can easily get a 2R trade. This is why risk management is dynamic. There are no fixed rules. Every chart will have different targets, different stop loss points, and different entry styles. Some charts will give you 2R, 3R setups, and some others 4, 5R setups. Okay, let's see the same chart and the same trade with lower time frames. You'll see that how is your entry, stop loss, and target change. Now zoom in on this special area with a 15 minutes time frame. First of all, you can notice how the big imbalance from the 1 hour is fully filled. And then strong and high quality breaks happen. It creates two big internal micro imbalances and the supply order block which creates the dragon fruit. When you place your premium and discount zones, we have a very clear entry point. You can also use your Fibonacci tool to identify the specific optimal trade entry zone. Now, how would I take this trade? First of all, my target. You can clearly see the possible huntable equal lows below. This would be my target. As a stop loss, again I'm looking for the highest swing point. And I'm calculating from my mind, if I use this stop loss and this target, is it a good trade setup or not? As you can see, I do not talk about the entry so much, because your stop loss and the target are much more important than your entry. Entry points will determine how much money you'll make. However, the stop loss and the target will determine if you are going to make money or lose money. So which is more important? Amount of money to make or making or losing money? I'll leave the answer to you. Let's check out the pound-dollar pair. Again, first I'll analyze the high time frames and then I'll look for entries with high and low time frames for scalping. You can easily notice the high quality breaks right here, strong and powerful candlesticks. If you closely look at it, you'll see the mitigation block structure shape with a failed swing. This creates our first demand area of the mitigation block. Right next to it, there is the order block demand zone. And finally, the imbalance area. So, order block, mitigation block, and the imbalance, all touching each other, creating our layer system, a much stronger and powerful demand area. Let's assume price pullbacks to our strong demand area. I'm always looking for a strong target, and I can easily see the downtrend liquidity area right above. If somehow the price goes above, it will definitely want to hunt the stop losses gathered here. You can also see the equal lows. Some folks keep asking me about inducement. This is called inducement. It is just a fancy name for hunted stop losses before the reversal move. So the price hunts these equal lows and touches our demand. It fills up just like a car, filling the full tank before the journey. Let's talk about the trade. Again, I would like to talk about the stop loss, because we already determined the target. There are two possible stop loss points here. One just right under the order block candlestick. The second is below the lowest swing point possible. And again, the choice is yours. This is your risk management. I mostly give my trades some cushion and some room to breathe. I like larger stop loss points, but this decreases my reward to a 2-3R setup. If we use the tighter stop loss, this could have been a 5R trade. Let's look at the same trade again, this time for scalping, at really low time frames and see how we can adjust a perfect entry point. Let's zoom in on this area in a 3 minutes time frame. What do you see here? Do I even need to tell you how to take this trade? You should master it by now. First of all, you can easily see the high quality break, which is very powerful. This break creates a mini SR Philip area with the breaker block. It also leaves a giant imbalance behind. Before entering the trade, let's check out where we can target. What do we have? Please pause the video and identify the possible target points for me. Yes, the first thing is the fresh imbalance area, and secondly, the general downtrend liquidity areas. Many trend channel traders have stop loss orders here. Now this trade could be tricky because it does not pull back a lot. This is kind of a warning sign for us because it just reaches the imbalance and breaker block area without coming into the discount area so much. What can I do? Just taking an entry. However, I would have a giant stop loss right below the lowest swing point because price could easily try to pull back later on and then try to move to the possible targets. After all these are choices you have to make. You will master risk management by yourself. No one can teach you that because your goals are different from mine. I trade for fun, just for some external cash, not aiming to be a pro trader. In time, with lots of experience, you'll find your way and maybe become a full-time trader who is aiming for 5R to 10R trades. I teach you the basics, giving you the main tools. You are the one who needs to master the tools. Okay folks, I hope that you understand the difference between using high and low time frames for day trading and scalping. This is a very common supply and demand trading strategy, and almost every trader that I know uses these trading strategies. You can use it in your trading life as a day trader or scalper. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon. Finally, let's talk about true scalping. I have a warning before we start. I'm not a full-time scalper. Scalping is just a hobby for me. I mostly focus on higher time frames. However, I know so much about scalping, a lot more than other people due to my over 10 years experience in real markets. Let's start with the biggest scalping mistake in the world. I see this every single day on YouTube, how people teach the wrong way. What is the biggest mistake then? It is opening 1 minute charts, adding bunch of indicators and trying to long and short from the horrible price levels. And I see this every single day on YouTube. It is just so scary how people teach this wrong way of scalping. It is horrible in my opinion. Let's first understand the correct way of scalping and gameplay boxes, also known as GPX. If you're planning to be a true scalper in really low time frames under 5 minutes, the first thing you should do is have a game plan much before trading. How do we do this? We use gameplay boxes. This is a very simple idea that works effectively. As you know, price action gives us the ability to identify the best supply and demand areas. The first step is identifying the most powerful supply and demand areas in high time frames. What are these? order blocks, breaker blocks, mitigation blocks, imbalances, swing failure patterns, and so on. But why? Because price bounces between supply and demand like table tennis balls. Just open your charts, any chart. Forex, gold, Bitcoin, all it does is forever bouncing between supply and demand zones. I call the spaces between supply and demand gameplay boxes, the GPX. These are the best places for scalping if you're aiming to be a scalper. You will have many quick trade opportunities inside these boxes and unlimited breaks. It does not matter bullish or bearish gameplay boxes. The idea is very simple. Determine your gameplay boxes between major supply and demand zones in high time frames, much before starting to trade. One other thing that I do is follow the direction of global bias if I'm up to scalping. When the government keeps printing money and the cost of money is cheap, I enjoy looking at bullish positions because there will be so much cheap money in the circulation. If they stop printing money and increase interest rates, I look for more bearish positions. It is a so simple idea. People will be in fear and start selling and taking profits from their investments. This is how I plan my trades. Now, as you know, cryptocurrencies and stock markets keep crashing in 2022. And I do not care about fake bullish breakouts. It is so simple. We are in bearish market conditions, and finding short opportunities are much more simple. This will not go on forever, of course. We will have bullish market conditions when the time comes. We traders do not care about bullish or bearish markets. We only focus on what we have right now and how can we make money out of it. You can notice strong break and order block with the imbalance at the bottom. And all these are fresh areas. Price never pulled back or touched these zones. These are like price magnets, keep pulling the price from certain price levels. At the top, we have the same thing. Extremely strong order block, high quality break, and giant imbalance. Now this area gives me a tradable gameplay box, GPX. What is expected here in low time frames is small breaks, one after another to trade. You see, I'm creating a scalping game plan with high time frames, much before anything happens. I'm not jumping into trades, just opening 1 minute time frames. Let's assume the price in your gameplay box area. Now you should be opening the low time frames. This is for generally under 5 minutes. You can use 5, 4, 3, 2, 1 minutes depending on your choice. First, you should look for breaks. Ideally, higher quality breaks. However, it is less likely to encounter so many high quality breaks in these low time frames. Just keep looking for regular breaks. After that, the rest is just pure price action. Order blocks, imbalances, mitigation blocks, premium and discount zones. Everything you have learned in our free trading course, you can use any of them. Now you can see how the price reacted inside the gameplay area. This is the 3 minutes chart for micro scalpers. Let's see the breaks. One after another, new breaks appear. This is how price action works. You have a game plan here. If you look closely, there are almost 10 breaks here and around 10 trade opportunities. You can draw your premium and discount zones to find trade opportunities within these breaks. Of course, not all breaks will work, it is impossible. However, if you can catch 6, 7 winning trades and 2, 3 losers, the results will be amazing. However, once the price comes closer to a high time frame demand or supply area, you should be extra careful because prices are expected to react from these areas. Actually, this will be the area that you should look for reverse trades. One other little trick is using the VWAP indicator, which is the most common trading indicator for scalpers in the world. However, VWAP is not a buy or sell indicator. It is a simple trend guidance indicator. So as long as the price stays under VWAP, we keep looking for short positions. Price can touch or penetrate VWAP. It does not matter. You can use it until it is strongly broken. As you can see on this chart, VWAP gives us clear trend guidance. It is like riding a wave. Price rides under VWAP, protecting its bearish trend. Of course, there are many other ways to use VWAP, which I'll talk about in another video. So, there are two types of traders for intraday trading: day traders and micro scalpers. We all trade the same charts, no difference. I'm mostly a day trader rather than true scalper. I take positions that I hold whole day, sometimes over 24 hours. On the other hand, micro scalpers use the same areas, but with much lower time frames like 1 minute, and make quick entries and exits. So, in the same period, I can take one trade. However, micro scalpers can take 5 times more trades than I can take. So, all in all, what do we do here? As a day trader, I take trades like this, from strong supply areas to demand areas, taking one trade per day or 3-4 trades per week. Why? Because this is my emotional limit. This is how I became successful. Competitive trading and micro scalping trades are stressing me out too much. Now, on the other hand, a micro scalper can take 4 more trades here, or even more. But this is too much for me. I have my other businesses to focus on. I cannot sit in front of a computer all day long trading these. However, some of you can be a micro scalper. Yes, this is how it should be done, a complete trading plan. Not just opening 1 minute time frames, keep adding indicators and lose the whole of your account. Okay folks, this is it. This is the gameplay box trading strategy for true scalping. Very simple yet quite effective price action trading pattern plan. A trading strategy for micro scalpers. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon. Before jumping into the VWAP indicator, we have to first understand the nature of supply and demand. Never use something that you do not understand. Warning, the first part of this video will be the boring stuff of understanding fair prices. You may want to skip the first part, Economy 101, and directly jump to the VWAP indicator. But I strongly suggest you watch it to understand the fair price. Let's go back to the very basics, Economy 101. If you take economy lessons, you'll remember the supply, demand, and equilibrium. Very, very important to understand. As you know, every product in our life has the nature of supply and demand. Everybody needs something, such as pizza. I love pizza. I demand pizza. If I demand pizza, then somebody should sell it to me. Who has it? So anyone holding it will be the supplier of the pizza. So how about the price of the pizza? There should be some balance. If the supplier sells it with a very expensive price, there will be no one to demand it. If it is too cheap, everybody will demand it. However, suppliers will not want to sell it too cheap. So the balance point is equilibrium, which means it is the fair price. Stocks, cryptos, gold, everything has a fair price. So VWAP is actually a fair price guidance indicator. You may ask, why is the price not stable all the time? Why is it keep changing? It is so easy. If there is a shortage of ingredients for pizza, prices will go higher. If there is a natural disaster, prices will go higher. And you may ask why the price goes lower. It is the same thing. If there is a technological advancement, a machine which makes me cut the production time and costs in half, the price of pizza will go down. So this is why the price of anything, stocks, crypto, pizza, French fries, and mobile phones will always change. Fair prices will always be updated due to environmental conditions. Now let's talk about high and expensive prices a bit. Assume one morning the price of pizza suddenly became $100, jumping from $10. It is amazing news for suppliers. Selling medium pizza for $100 is crazy. However, pizza lovers, basically the demand, will not like this. Would I buy a pizza for $100? No, not really. So eventually, the price of pizza will be reduced slowly from $100 to $10. This will not happen at once. It will happen gradually and slowly. What about cheap prices? Imagine buying a pizza for only $1. There will be crazy demand for it. However, it will not last. Trying to sell pizza for $1, really? The production cost is $5 and the selling price is $1. Every pizza restaurant will go bankrupt in time. So as a result, prices will go up slowly and gradually, from $1 to its fair price of $10. Yes, it will happen slowly, without disturbing the whole market. By the way, the fair price here is $10. Will the fair price stay as $10 forever? No, not likely. It will eventually be updated in time. For example, inflation and wage raises. If the wage and salary that you get increases each year, it is normal to buy the pizza for $15 next year instead of $10. A fair raise for a fair price. Finally, VWAP. Did you skip the Economy 101? I bet most of you did. However, I still strongly suggest you watch it. So, what VWAP does for us is simply guide us through supply and demand. It is not a buy and sell indicator. It is simple, fair price guidance indicator. While the price moves between supply and demand, scalpers ride the waves under or over VWAP, taking small entries and exits quickly as much as possible. There are many VWAP indicators out there. Normally, it should be the same, because it has a single volume formula. However, I saw differences between the indicators. I suggest the one from TradingView itself. For the settings, I disable everything possible. I only use the main line. I do not use the bands and deviations. Some people do, but I cannot find a use for them. One warning: there are multiple types of VWAP designed for day trading, swing trading like weekly VWAP, and investing like monthly and yearly VWAP. This VWAP is specially designed for day trading. It should be used under 15 minutes, especially for scalping. It is basically useless with high time frames. You already know what the GPX is from the previous video. This video is actually the second part of the gameplay box scalping. If you did not watch the previous video, please do. Otherwise, nothing will make sense. Okay, this is the pound-dollar pair in 30 minutes. First of all, let's check the GPX zones to trade. Here you can see the powerful break upwards, and later on, considerable swing failure pattern. And another downward break, very strong and powerful. Our first break created a mini order block and imbalance. Our second break created a strong supply at the top and multiple powerful imbalances. The first GPX area was bullish here, from demand to supply. However, if you look closely, the last move creates another giant imbalance and demand area at the bottom. This would be a bearish GPX area. As I said many times before, Price is like a tennis ball, bouncing between supply and demand areas. It keeps updating its fair price to new price levels. Go and open any chart. You'll see it yourself. Now, I'll teach you two types of entry techniques with VWAP. The first one is easy. We already made an introduction to it last week. Again, please watch that video to understand this one. Once you identify the GPX area, we are riding under VWAP as our trend guidance. We keep shorting after each break and pullback. I will not go over how exactly to short it because you learned it already. Order blocks, breaker blocks, mitigation blocks, imbalances, premium and discount zones, optimal trade entries. You know every type of entry style. You should be a monster already. We have already identified our GPX area as you can see. Let's check the 3 minutes time frame with the pound-dollar pair. Once you activate VWAP, you can see a little consolidation period. Later on, the price started its smooth journey from the high time frame supply area to demand area. Do I need to draw anything here? You can see number of breaks without me drawing them. There are around 9-10 breaks here. Did all of them work? No, not really. I counted around 6-7 breaks that really worked. Some of them never pulled back. This is scalping. If you are into scalping, you have to have an extremely powerful mentality. You are looking for like 50-60% win rates on an overall day. But GPX and VWAP are great guidance for scalpers. You'll have trading boundaries, clear entries, and targets. Talk about the other types of entries. Now this method is mostly used by my friends in real life. Do I use it a lot? Not likely, but it works well if you backtest it. Once the price comes closer, high time frame demand area or supply area, you'll notice the price will try to push itself upwards more and more. VWAP is actually a kind of magnet, a fair price magnet. It will pull the price from anywhere if it extends too far away from the VWAP itself. Basically saying, VWAP will act as target. Divergences in these areas are tradable. Once the price extends far away from VWAP, but remember, it should be very close to high time frame demand. We need a reason for the price to go up. If you closely look at this chart, price slows down when it comes closer to the high time frame demand area, finding more and more reasons to go higher. When the price overextended away from VWAP, it started to pull the price to itself. VWAP acts here as a price target. So after the breaks from mini discount zones, it is possible to trade divergences like RSI, Mete histogram, or OBV on balance volume divergences. And maybe combine the divergences with swing failure patterns. Now, do I suggest this method? Well, it is not pure price action, but it is highly related to price action. It is very well usable actually, it all depends on you. Okay folks, with this video we are completing our GPX and VWAP indicator scalping. These are very important supply and demand strategies used for day trading and scalping. I believe that it will be really useful in your trading life. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon. Before we start, I would like to say a couple of words about range and deviation trading. It is probably one of the most powerful price action trading concepts in the world, if you can master it. Mastering range trading could take years of practice and effort. The biggest problem is subjectivity. If I give the same chart to 100 different traders, they would give me back 100 different ranges. Enough with this intro and let's start. The beauty of the range trading is it's available all the time. All markets range around 70% of the time. The rest 20-30% probably trending pumping or dumping. Ranges are fractal structures. They can happen in any time frame. Also, there could be big and giant ranges or small ranges in the same time frame. Moreover, there could be ranges within ranges. This is very common. All in all, ranges are everywhere you can imagine. You will start to see them all the time after a couple of months of practice. Now, what exactly do you see in this chart? Nothing, right? Do not worry, I was exactly like you years ago and see nothing. But with a lot of practice and testing, I can see things like in the matrix now. The first thing I see is this mega range, in which price consolidates inside from top to bottom and bottom to top. Do not worry, we will learn how to draw and identify ranges really soon. This is just a warm-up. Now, if you look closely, you will see small ranges inside the big range. Many of them. Each of them accumulating orders and starting a new big move. And the price continues and continues to range everywhere. As I said before, 70% of the time, the price will be ranging whatever you trade. Let's talk about the structure of ranges. A range actually is a combination of premium and discount zones. Price will be bouncing inside the range. It is basically a consolidation period. You can practically say a range is a consolidation. Ranges have four significant parts. First, the EQ point, equilibrium, the fair price. If you follow the free trading course, you'll remember the supply, demand, equilibrium, and the fair price. The other two significant parts are range high, which is when the price becomes expensive, and range low, where the price is cheap. And there are the deviations. These are occasional moves. Basically, price either become extremely expensive or extremely cheap by going out of the range for a while. Deviations are not essential. Some ranges never deviate actually. Each range is unique. There are no written rules for the ranges. Let's check out the structure of this range. As I said before, we'll learn how to draw ranges really soon. But first, learn the basics of it and dissect the ranges a bit. Above, we have the range high, basically a resistance area. And below, we have our range low area, a natural support area. In the middle, we have the EQ, fair price point, one of the most important part of the ranges. Sometimes prices are out of the range boundaries. We call them deviations. In this example, we have 3 deviations. Now, this is the basic structure of a range. If you observe your charts, you will see thousands of ranges keep happening right now. When do ranges happen? Actually, it is an easy concept to understand. After huge pumps or dumps, or uptrend or downtrends, price will need to rest. People need to take their profits. And some people get ready for new positions. So many orders are placed, accumulating. So ranges happen after big or sudden moves in the markets. What exactly do ranges do? It's basically preparing the price for a new big action. After a range, price will do a new big move by starting a new trend or sudden pump or dump. So the range is the expectation period, like buying tickets to win a prize, but millions of people. Then after a while, the big prize comes. You may ask how all this happens. Basically speaking, ranges are where the most volume gathers. Millions of traders will be opening new positions during these consolidations. Some will do an analysis of the asset and think that the price will go up or down. There will be millions of orders and opened positions for each long and short. We call this phase order accumulation. We will start to see the stop-loss order pools above and below the ranges. At some point, the range will explode one side, upwards or downwards. Now, these explosions could start new trends, or it could be a fake trend trap, like the power of 3. We will talk about it in the next videos while I'll be teaching the strategies. This is a nice example of ranges. Price dumps suddenly, a very strong and powerful dump. Then the consolidation period starts, and the range period prepares the price for a new big move. Then the pump happens, very suddenly and powerful. After that, the price enters another period of a range, preparing for the next move. Then the next sudden move starts. Yes, this is what is happening in the markets every single day, thousands of times, with multiple time frames like 1 minute, 15 minutes, or 1 hour. How to draw ranges is probably the most subjective matter of price action trading. I will try to make it as simple as possible. One of the most important points of the range is the EQ point, the middle point. Technically, the price should be quite struggling around the EQ point a lot. It could be small rejections, it could be small ranges or small consolidations around the EQ point. The keyword is struggle or rejection. Remember the SR Flip videos and how we counted the rejection points? It is similar to that. You basically count these points of struggles and rejections to identify a possible EQ point. The higher the numbers are better. What I mean here is, if there are multiple possible EQ price levels, you need to choose the highest number. Okay, as you know, it's extremely easy to identify a range after they happened. Anyone can identify ranges after they are completed. We have to learn how to identify ranges before they are completed. The best way is to practice on completed ranges. Close the half of the range and learn the characteristic of the ranges. First of all, to identify a range should be already started, which gives us some price action and clues. Otherwise, it's practically impossible to guess if the price will range or not. I want you to imagine that the right part of the range has not happened yet, not existing yet. We have the first part, some price action to work on. As I said before, we need to see some price action to identify a possible range before it's completed. Let's work on the EQ point. Remember the keywords, rejections and struggles. If you look closely here, you'll notice the price is rejected 3 times in the beginning. Then if you continue to look, the price struggles around this price level 3 more times. Altogether, you can count 5-6 times a rejection or struggle. This way, I determined my possible EQ point. Do not worry, I'll teach you a much easier method now. Please use the Path tool in the trading view and draw an overall movement from the candlestick charts, focusing on the wicks, not the close or opening of the candlestick. By the way, do not use the line charts, they are inaccurate. Then hide the candlestick charts with the hide button that looks like an eye. Everything will become much clearer to your eyes. You can see the rejections and struggle points in the middle and count them easily. This method is great for beginners. Next is the range high and range low points. It's exactly the same as the EQ point. Range low should act as overall support zones, but do not think of these areas as straight lines. Think of them as zones, with price being rejected or struggling a lot. Again, the keyword is the same, struggle or rejections. Just like the EQ, we count these rejections or small struggles, or tiny ranges and consolidations, all of them are countable. The higher the number is, giving the clear range low or high. This is how we determine the range between low and high. If there are multiple price levels with struggles and rejections, we choose the highest numbered price level. We will use exactly the same method for identifying the range high and low. I already counted here, but again, use the path tool and draw the overall path manually, then hide the candlesticks. Then start counting rejections and struggle areas to identify the best possible range high and low levels. Now finally you have a range, probably the most possible and best range you can ever draw before the range is completed. If there are multiple possible range high and low price levels, you need to choose the highest number counted price level. The key is the count of the rejections and count of struggles. The highest number is the winner. One more time. Struggles, rejections, and the highest number count on a single price level. Third, the range low should be able to push the price to the range high, and the range high should be able to push the price to the range low. These movements can happen at once like a straight line, a pump or dump. Or they could be a small trends that slowly go from range low to high. Sometimes it stops around EQ and rest, and then continues again. Basically, the purpose of the range high and low act as a wall, so the price can bounce between them like a tennis ball. This is a critical part of the ranges. You can see here how the range high pushes the price to the range low, and the range low pushes the price to the range high. And it keeps happening endlessly. This is one of the most important part of the range. As I said, it can happen at once, very suddenly, like here in the first push. Or it can be a slow trend and progressing slowly, taking its time. It does not matter how it happens. Again, you can use your path tool to draw your range move in order to see things clearly. This is a real good practice for beginners. I used to do this a lot. Now I do not need it. I can see the ranges from miles with years of practice. Finally, the deviations. These areas are where the price occasionally pierces through the range high and low zones. Deviations are important. The price needs to go back into range if you want to call them a deviation. If it does not come back into the range, it is not a deviation. This is why we sit and wait to observe the deviation, because it could be easily the start of a new pump or dump at the end of the range. We do not know this until the price comes back into the range. So it is not wise to trade deviations blindly. But you are already an expert at price action trading now. With the free trading course, we never blindly jump to trades. We look for multiple confirmations. Let's see this example. Identifying the deviations is the easiest part of the ranges. They basically happen occasionally, as you can see here. Piercing range highs or range lows that we already determined before. I hope that I made things a bit clear. But do not worry, range and deviation drawing, analysis and trading is the most complicated subject of price action trading. No one gets it at first. It requires regular daily practice to master it. Now next week we will start on trading setups and trading strategies of ranges and deviations. Okay folks, with this video we completed the first part of range and deviation for day trading and scalping. See you in the next part of range and deviation trading. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon. Okay friends, as you know, last week we covered the range part 1, the basics. We talked about what are ranges, what happens before and after ranges, why prices are ranging. More importantly, we learned how to draw and identify them. I made it crystal clear how to draw a range. Check that video if you are still having a confusion. This week, before moving into strategies, I would like to talk about range bias and how we can use it to our advantage. So finding trading setups will become much easier when we have a range and market bias. As you know, ranges consist of two major external parts, premium and discount. Once a range is identified, our job becomes 10 times easier because when we look for trading setups, we'll have much clearer market bias and trade direction. Basically, we can look for shorts from the range high deviation or directly from the range high zone. If we miss opportunities, we can check out overall premium zone for a trade setup to short the asset in the direction of discount. For the discount area, it is exactly the same. Once the price is in the range low deviation, we look for a long trade setup. Furthermore, we may also wait for trade setups to form around range low or in the discount zone. Ranges give us these clear biases to trade, a trade direction. If you follow me on Twitter, I traded this range many times. I do not even count the numbers anymore. This was a very clear range to identify. Again, I will not repeat how to identify ranges. Please see the range part 1 if you missed it. Let's observe this range. Once you use your path tool and hide candlesticks, everything becomes much clearer. You start to see that how the price keeps reacting to the range high, range low, and EQ point. Sometimes I think that ranges are magic because they work very well and gives you extreme market bias and trading opportunities. You can clearly see how the range high and its deviations push the price to the range low. And the range low and its deviations keep pushing the price to the range high. This is a critical part of confirming ranges. You may ask how all these happen and why prices range 70% of the time in the markets, up and down continuously. The easy answer is liquidity. If you analyze any range, you'll notice this. Once the price starts to move from range high to range low, there will be so much liquidity forming. And with a proper trade setup and entry, all these stop losses will be hunted. It is same with range low to range high movement. Price will start to form liquidity areas to be hunted. With a proper trading setup and entry, all this liquidity will be hunted when the time is right. Probably the most important element of trading ranges are liquidity. Basically stop loss hunting of retail, or I would like to say beginner traders. In general terms, we are all retail traders. Let's watch it closely. Liquidity forms, and it is hunted from range low to high. Liquidity gathering, and it is hunted from range high to range low. Another stop loss gathering. It is hunted from range low to premium zone. It again creates stop loss area, being hunted to range low. Then another liquidity area forms, and it is hunted from range high to low. Now I'll stop talking for a while, you guys keep watching it. As you can see what ranges do actually keep hunting liquidity and stop losses between range high and low. You will also need to check mega liquidity areas happening at the top and the bottom of the range. As you can see, these mega stop loss zones are also hunted with proper trading setups. So what is the lesson here? The lesson is quite simple. Watch the liquidity forming in premium and discount zones and wait for a proper trading setup to form to enter a trade. As you know, ranges consist of 4 main parts: range low, range high, EQ, and the deviations. Now, with the help of forming liquidity and imbalance zones, range high and range low will be natural price magnets. They will pull the price to themselves. Another very natural magnet area will be the EQ. Price will always be drawn to EQ point and rejected or rest in the EQ for a while. These three zones are very critical price levels and have an essential part in our trading setups. Another big characteristic of ranges is the importance of EQ points. It is extremely important for me. Plays a huge role in our trading setups. Once you draw the movements inside the ranges from high to low or low to high with the path tool, you'll witness that most of the time price rests at the EQ zone. In this example, you can clearly see that each time the price moves from range high to low or range low to high, the price rests or rejected at the EQ point. It sometimes has a quick break and sometimes hanging a lot. At other times, EQ could be very powerful and rejecting the price altogether. EQ will play a very important role when we make decisions for entries and targets in the future. So, when we form a trade game plan or setup, we have mostly three options: carrying a position from range high or its deviation to the EQ point, or positions from range high or its deviation to range low point, or small positions from premium to discount. It will be exactly the same with long positions, carrying a position from range low or its deviation to the EQ point, or positions from range low or its deviation to range high point, or small position from discount to premium. As you can see, ranges will give us a market bias and trade direction to trade. In some cases, if you are a scalper, you'll probably love the ranges. Once you identify a range, you will have a very clear gameplay area, just like GPX and VWAP trading. For example, once you identify the range in 1 hour or 4 hours as your high time frames, you may use smaller time frames like 15 minutes, 5 minutes or 1 minute as your low time frames. You can find hundreds of small scalping opportunities from range high to low or range low to high, all depending on you. Now, as for strategies, I'll cover the most specific internal and external strategies next week. Sorry for the delay, but I had to teach you range basics and range bias first before trading specific strategies. However, in the meantime, you have already learned over 20 entry models in our free trading course. Once you identify a range, you already have a market bias and direction to trade. You can basically use any trading setup inside or outside the range. So you can look for order block trading setups, breaker blocks, swing failure based trading setups are one of my favorites, optimal trade entries or reverse optimal trade entries, power of 3, support resistance flips, rally based rally, drop based drop, mitigation blocks, any trading setup that you love. You already know all these trading setups. Now, with this video, we completed range basics and range bias. Next week, I will work on specific internal range strategies. And the other week, we will focus on external range strategies. Finally, I'll complete the range series with real trading examples and trading practices. Okay folks, we completed part 2 here, ranges and market bias. These are very important supply and demand strategies used by day traders and scalpers. I believe that it will be really helpful in your trading life. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon. Okay guys, today we are going to talk about internal strategies mostly. And next week, the external strategies working with multiple ranges. These strategy lessons will be fully theoretical, working on slides and drawings mostly. In the next video, I will work on the real charts. Nowadays, I'm very busy. I do not have much time to find examples. So stay strong until the next video and try to learn the basics. First of all, what are internal and external strategies? This is a very basic idea actually. Internal strategies are encapsulated in a single range. So we trade what happens inside a single range. These trades are generally much quicker trades than others. On the other hand, external strategies consist of many other elements and powerful trading concepts. We are not only trading a single range, we also check low and higher time frames, multiple ranges in a correlation, other price action elements from supply and demand points, liquidity hunts, or much bigger imbalances. So external strategies are generally more complicated because you'll need more confirmations from outside the range. Before we work on strategies, let's understand how we take profits. Let me say this clearly. Every professional trader I know takes partial profits, every one of them. Because trading conditions keep changing all the time. You cannot just sit and wait for every single trade to reach their targets. So, the beauty of ranges, they give us overall profit points. Our first TP point is obviously the EQ area. However, we do not blindly take the profit here. We are looking for a possible reaction zone, such as an imbalance, liquidity hunt, or fresh supply and demand areas. Our second TP points generally range high and low zones. Again, same principles. Any liquidity to take, any imbalance to fill, any fresh supply or demand area to react, such as order blocks, imbalances, SR flips, mitigation blocks, and others. Let's start with tradable concepts. As I said, this video will be about graphical PDF files and drawings without real charts. In the next video, I'll go over many trading examples of these trading strategies from TradingView charts. Now, this strategy is called double manipulation. Very easy strategy to understand. Price deviates to one side with a break, trapping breakout traders. Then it moves to the opposite of the range and creates another break, manipulating the other breakout traders one more time. Creates double manipulation. After the final manipulation, when the price moves to the premium zone, in this case, you are looking for a short opportunity from a suitable supply point. The second strategy is OTE, optimal trade entry zones inside the range. Premium and discount tool is actually a Fibonacci tool. These are extreme areas in the ranges. These places are great zones to look for trade areas. Obviously, you shall never jump the trades blindly. You should look for a suitable trend change, a strong break, and a good supply area to trade. As you can see, ranges give us a bias, a trade bias for us to look for shorts or longs with our 20 different price action trading setups. What we do here is actually the same thing over and over again with our new power, the ranges. Another main entry method are breaker blocks. Now I have to make a specific point about breaker blocks because this is backtested a lot with all my friends. Somehow breaker blocks work extremely well with ranges or short trades. You can easily master a trading combination of range and breaker blocks. Personally, breaker blocks are also one of my favorite trading strategies when I trade ranges. If you check out Twitter, one of my latest trade is actually a breaker block trading with a range. Do not worry guys, in the next video I'll cover many trading examples from real charts. Right now this is the most I can do for you. The next method is actually using our special trading setup, reverse optimal trade entry with ranges. One of the best trading setups that you can ever use. As you can see, we combine all our knowledge with ranges here. We are not trying to create entirely different trading concepts. We are using our layer system here, combining more and more structures together, the core of price action. And the power of three concepts inside the ranges, extremely great methods to trade. If you remember our range bias video, you'll remember that the keys to trading ranges are liquidity mostly and imbalances. You have to always keep checking hunted liquidity in the range and the forming liquidity in the range. So the liquidity combined with premium and discount zones will give you the maximum trading bias possible. And it makes you give easier and more powerful decisions before trading. And our final trading concept, our most loved swing failure concept. I don't want to go over the same things over and over again. I guess any of you remember how to trade swing failure patterns. So, these are the most specific 6 trading concepts to trade ranges. Again, ranges are not trade entry strategies. Ranges are here for market direction bias with the combined premium and discount zones. They also prepare the price for the next big move. These 6 strategies are backtested a lot and the best working strategies with ranges to use. Of course, you can use any strategy that we have learned because you have a direction to trade now. Okay folks, we completed part 3 here, the internal trading strategies of range and deviation trading. The next video will be about real trading examples of these trading strategies. As always, all these trading methods are suitable for scalping, day trading, or even swing trading. I believe that it will be really helpful. Okay, as you know, we traded this range so many times with the followers on Twitter. How do I know? Because I traded myself and posted the results on Twitter. I also saw other people kept trading it. I traded this range around 4 or 5 times. This is why I love ranges so much. It gives you many trading setups to trade. How did we identify this range? First of all, you can see the touch points which create our range low, range high, and EQ zones. This is how our range was determined in the beginning. As I said, anyone can identify completed ranges. It's a piece of cake. What matters is identifying the ranges in the beginning, when they start to form. Let's do trade practices on the range. How can we use the multiple time frames and multiple trading strategies to trade ranges? As you remember from the last video, our first strategy was double manipulation. If you closely look at the chart, the price strongly breaks above here, creating a large deviation. Normally, I do not like these big deviations. I have to watch the price and see if it gets back to the range to call them true deviations. Later on, price does another breakout at the range low. As you can see, it creates a double manipulation, creating 2 deviations, trapping all breakout traders, short and long. And our double manipulation shape appears clearly. Now, as I mentioned before, breaker blocks work great with ranges. I know people only trade ranges and breaker blocks, an amazing combination. This breaker block was a great place to look for entries. You can easily target range lows with this trade, as I usually do. My stop losses are quite large, and this is how I like to trade. I just cannot trade like other people who keep setting very tight stop losses with 10, 15 hour setups. I do not know how do they do it, but I cannot. If we look at the same chart, you'll notice the same thing happens again with a long opportunity. Price double manipulates people and traps people again, another 2 deviations. So basically, deviations mostly present trapped breakout traders. This is what market makers love to do. You can clearly see the strong break and imbalance in the range low area. This is what we do. We look for suitable longs in discount areas and range lows, looking for shorts in premium areas and range highs. With this demand and imbalance, this was a nice trade. I know many people traded this range low and exactly this position. I was getting the same profit images on Twitter. Now, another way to trade ranges is the optimal trade areas inside the range. However, these trades should be quick in and out because the price is always trying to deviate and trap breakout traders mostly. When you draw your OTE inside the range zone, then you can wait for an opportunity. Remember, we never jump to trades blindly. Oh, price came to the OTE zone, let me enter a trade. No, never. We always wait for confirmations, clear entry areas, and clear targets to aim for. You can notice that the price breaks here strongly. Later on, it came back to the discount area where we look for longs. It matches our OTE area and also has a nice imbalances. It is also a demand area with an order block. There's actually a mitigation block as well. All in all, a strong area to take the trade. Do we have targets? Yes, very clear untaken liquidity. There is also the range high area. I did not take this trade, however, if I did, it would be like this. Very large stop loss aimed at the very bottom swing, with a clear target stop hands and range high. This is how trading should be. Not like 50R winners on the internet, 1.5R or 2R or 3R. These are great targets. I want to stress this out 100 times. Breaker blocks, and breaker blocks. Keep your eyes on breaker blocks when you trade ranges. It is backtested a lot with many traders. Somehow breaker blocks work extremely well with ranges. Now, I traded this setup a couple of times. These were nice and easy trades actually. Price was already deviating on a range high for a long time and looking for a direction. I noticed this extremely clear swing failure pattern above, and a strong break with the breaker block and extremely powerful supply area. After that, I was watching three things actually: hunted liquidity, forming liquidity, and imbalances. This was a quick and nice trade to take. My main target was entering back to the range and hunting the forming liquidity. Our breaker block was an extremely powerful supply area. It kept rejecting the price. Once I had this secondary swing failure set up, this was obviously another great entry area. As you can see, folks, we never jump the trades. Like price in the range high deviation, let's take a short here. No, never. We always look for reasons and confirmations to trade. Another good way to trade ranges is using reverse optimal trade entries, ROTE. It also matches our double manipulation strategy. When I saw this structure, I already knew that this was a possible ROTE structure to trade. ROTE works much better with high time frames. When I trade with price action, I always look for the same thing: hunted liquidity and forming liquidity. You can clearly see that this stop loss point, hunted below, is also a swing failure pattern. Very nice and clean. Not just that, if you look closely, all this uptrend liquidity was swept away. What is liquidity? It is fuel. It is the reason for prices to move in other directions. If you look closely, you can also witness of the forming liquidity above, a reason to go up. Once the price comes into our entry point, we are getting multiple confirmations. Range discount, range low, ROTE discount area, the ROTE optimal trade entry area, and the imbalance. As you can see, this is the layer system. Many structures keep lining up at the same price level. This could be a great 2 or 3R setup to trade. Again, what I do here is set realistic setups. Other tradable setups are the power of 3 concepts inside ranges. These are basically small ranges inside the big ranges. Manipulations inside manipulations. This could be hard to identify and trade. As you can see, there is a little accumulation here. Actually, a smaller range inside the big range happening. Price is forming liquidity above and below, as you can clearly see. This is basically a triangle pattern. Actually, all triangle patterns are just squeezing liquidity with both sides. They are always expanding to the one side. There's another thing here, drop-based drop, creating a natural supply area, and the price keeps being rejected here. It also collides with range high zones. So many confirmations. Finally, the price manipulates above, testing the range high, which also creates another important swing failure pattern. And finally completes the form of power of 3. I know, it all seems very complicated, but in time with the power of a lot of practice, all of this will appear to you easily. I did not learn all of this in a single day. Finally, swing failure based trade setups. Guys, you have to master swing failure patterns. As you know, it is the core of all my trading setups. Just rewatch this video and see how many times I stated the swing failure pattern. Extremely important. This was another trade that I actually took. Once I saw this big wick being hunted, I had to open low time frames and look for entries. To be honest, I do not even remember the exact point of my entry. But this break is important. There are forming liquidity below, with giant imbalances to be corrected. There's a nice mini premium and discount area above. This could have been a great entry. If I remember correctly, my entry was somewhere around here. Anyway, I want to state something. Trading is a statistical game. Not all the setups will work. You just need to keep focusing on making more money than you lose. Okay folks, we completed part 3 here, the internal trading strategies of range and deviation trading with all the trade examples. The next video will be about external trading strategies, so how we can also look outside of the ranges. These are great strategies for scalping, day trading, or even swing trading. I believe that it will be really helpful in your trading life. I hope you subscribe to the channel and like the video. Thank you, please take care, and see you soon. Let's talk about this hidden trading strategy that you can use especially with ranges. 3-tap concept, TT3. It is an extremely easy to use and understandable concept actually. It is nothing complicated. Now what do you see here? Price is being rejected from the range low 3 times. It looks like a head and shoulder pattern. Now what we look at here is actually a previous swing failure pattern that happens with a deviation of the range. It could be a pure swing failure pattern or a considerable swing failure pattern. It does not matter. What we look for is it has to hunt the liquidity and get back into range and form the deviation. Now we call this tap 1 and tap 2. The last candlestick created a hidden demand zone here. We use it for possible entry zones in the future. So once the price comes back into hidden demand, the third tap happens. This is when we shall search for long trades. Especially look for clear targets above, such as forming liquidity, imbalances, fresh supply areas. Let's check this example. You already mastered how to draw ranges, so I will skip the range part. Once you identify the range, keep your eyes on the range high and low, and try to observe the deviations and swing failure patterns. You can notice the swing failure pattern here. This green candlestick is my hidden demand area. It is giving me a future reference for finding trades. Now you can clearly see the tap 1, tap 2, and the tap 3. You can also notice the forming liquidity above, which will give you a clear target. Bearish 3 tap is exactly the same pattern. It happens at the range high area. One little note, some people try to use this strategy alone without a range. but I'm strictly against it. This strategy is like a plugin or add-on to ranges, developed for range trading mostly. Now, same order here. Price hunts a previous swing point and creates swing failure or considerable swing failure pattern. This creates our tap 1 and tap 2. Then we draw a zone from the candlestick under the tap 1, our hidden supply area. When the price reaches our hidden supply area, we look for short opportunities with high or low time frames. Some people may call this strategy Quasimodo or QML. However, the difference is we do not search for a market structure break with taps. This strategy is mostly focused on range high and range low with deviations. Now let's check this bearish example. Without drawing ranges, I have to admit, charts look very noisy, very ugly and quite confusing. But with a range, it is all clear. Ranges are like magic tricks. Now you can see the range high area and a very clear swing failure pattern above. The candlestick that creates the tap 1 is also our hidden supply area. Again, the color of the candlestick does not matter. I do not care if it is red or green. What I focus on is the candlestick that creates the highest point. Now we can clearly see the tap 1, tap 2, and the tap 3. You can also notice the forming liquidity below, which will give you a clear target. How to enter a trade? There are two ways, using the high time frame or low time frame. High time frames are an easier way to trade. The problem is it is much less secure. What you do basically is looking for special candlestick patterns inside the hidden supply or demand areas. For example, pin bars, tweezer top or bottoms, a morning star, engulfing patterns, anything they do resembles a rejection. The standard stop loss for using the TT3 concept is using high or low of tap 2 candlestick. For your target, we generally expect the price to reach the opposite side of the range low or high. However, clear targets will be on real charts, such as liquidity or imbalance areas. Again, I do take high time frame entries. Because I am a part-time trader and I can manage my risks, I have no rush or time issues. However, if your aim is to be a full-time trader, you need to learn to combine low and high time frames. Here, once the price enters my demand area, you can see the double rejected points with large wicks, which also creates a pin bar. Furthermore, there is a nice imbalance on the left if you can notice. I could make a high time frame entry here. My stop loss would be the below of the tap 2 candlestick. My main target is actually the range high and the possible liquidity points around range high. Now with the bearish example, all the same concept. You can choose a very strong rejection candlestick in the hidden supply area, a very strong pin bar. But the problem is that there will be many pin bars. It is impossible to decide on a specific candlestick. This is why we place our stop loss at the tap 2 candlestick's high point. Another way to enter is using lower time frames. I know, many of you hate using low time frames. However, it is what it is. This is trading. More confirmations will give you better entries, better targets, and better chances. The first way of using a low time frame is finding a structure break inside the hidden supply area. That may support your entry. For the stop loss, I still consider your safest place as the tap 2 candlestick swing high or low. Of course, you can still find much tighter stop loss areas with low time frames, but the choice and the risk are yours. The second way of using the low time frames is looking to the left of your chart and searching for a suitable internal demand area. These could be imbalances, order blocks, breaker blocks, anything that you can identify. I still keep the tap 2 candlesticks low as my stop loss. Sometimes these stop losses could be quite large for me, but I do not mind. I enjoy playing it safe. Now, if you want to master trading and become a full-time trader, you must learn the combination of low and high time frames. Let's zoom in on this part and open lower time frames. First, notice the very strong market structure break on the left, and notice the imbalance inside our entry zone, which is also combined with the order block. The strongest entry point is the dragon fruit. Furthermore, do you see how liquidity is hunted first? Many others call this inducement, but I just call it a liquidity hunt. Now, this is an area where I can set an entry limit order, because it is also in the extreme discount areas. These type of entries are the only way of becoming a professional trader. Okay folks, we completed 3-tap concept. The next video will be about real trading examples of these trading strategies. As always, all these trading methods are suitable for scalping, day trading, or even swing trading. I believe that it will be really helpful in your trading life. I hope you subscribe to the channel and like the video. Thank you, please take care, and see you soon. Okay, let's check this Euro-USD pair. Now, I want you to tell me what you see on this chart. We are using the 4 hours time frame here. No indicators, no volume, no drawings, no nothing, just price itself. Just by looking at it, you can see the long-term flow was bearish until October. You can see the price was breaking major swing lows. After the October range, the market shifted from bearish to bullish. But why? Why did this happen? It happened because of macroeconomics. As I said on Twitter a lot, if you want to be a trader, it does not matter even if you want to become a scalper. You must, I'm repeating, you must check macroeconomics every single morning. As you know, Fed recently stated that they will slow down about raising the interest rates. Many are already talking they will completely stop the interest rate rises in 2023. What does this mean? This means a loss of power of the dollar currency. You can already check the dollar index already losing power. So naturally, any pair against the dollar index will be powered up. See, all these macroeconomics. So you should be more bullish with any pair against the dollar. Do not worry, in 2023 I'll publish a weekly overview of macroeconomics for all asset classes like Bitcoin, Forex, gold, and US stock indexes. And we will discuss which state are we in, bullish or bearish. So we can look for more short or long trade opportunities. If you don't want to miss them, just subscribe to the channel and turn on the notifications. Now let's zoom in on this part and check the 1 hour time frame. Again, look at this. No need for any indicators, no volume and no drawings. By only looking at it, we can see that we are in a bullish form. We keep making higher highs. The dollar index supports us, macroeconomics support us. Everything is supporting our ideas. 4 hours is bullish and 1 hour is also bullish. Now let's get even closer and open the 15 minutes chart in this part and start looking for entry positions. I think many of you are seeing this amazing support and resistance flip area. An extremely strong break followed by a giant imbalance. These are incredible areas to look for trades. Again, let's focus on this little part with the 5-minute chart. As you can see, we keep going lower and lower in the time frames to find better trading setups. Now in this 5 minutes chart, there is a huge range. However, in my opinion, there are 2 ranges. The one on the left actually turned into a power of 3. Accumulation, manipulation, and the expansion. And the range on the right still keeps going. You can easily see how the range keeps pushing the price up and down like a pinball. Let's get close to this range. Now, I want you to pause the video and identify the 3 tap concepts at the bottom and the top. Yes, these are obvious three top points which you can find hidden supply and demand areas. Let's focus on the bottom part. Why? Because we are in this massive support resistance flip area which comes from the 15 minutes chart. You can see the clear deviation happening at the bottom and the considerable swing failure pattern. You can also notice the hidden demand area from the three-top concept, giving us a proper entry area to look for trades. Now I want to pause a second here. The swing failure pattern is just a concept, a pattern. It is not a rule that must happen all the time. When I look for liquidity sweeps, I mostly focus on after stop loss are hunted, how hard and powerful the price is rejected. If it makes a very strong and high quality break without any rejection, it is less likely to be a stop hunt. In this case, you can easily see how powerful rejection is. It just grabs the liquidity and moves back into range very quickly. This is a proper liquidity sweep for me. Now let's go down to 1 minute in this demand area and try to scalp this chart as much as possible. Now the most common question that I get every single day is how to analyze charts from high time frames to low time frames. As you can see, we started with 4 hours, then 1 hour, then 15 minutes, after that 5 minutes. Now we are at the 1 minute charts. It may seem complicated, but it is not. I already analyzed higher time frames for the day. Now I can look for many trading opportunities with 15 minutes or 5 minutes for day trading. Or I can use 1 minute for scalping. If you are a full-time trader, this is how you should be trading. Now let's see. Before even taking a trade, we have to look for if there is anything that may pull the price up, any target. You can see the imbalance areas above. A possible zones may pull the price to balance itself. Also, these untaken liquidity swing points are great targets. Okay, you can see the market structure break right here. This is actually a kind of weak break. I am not a fan of this kind of breaks. However, if you watch the ICT mentorship, it takes a lot of trades like this in 1 minute charts. Because 1 minute charts are very noisy, it is not possible to find quality breaks all the time. When you draw your premium and discount zone, you can notice how the price pulls back to EQ point and quickly rejects. Now let's assume, with the powerful rejection, I take this trade. Where would I put my stop loss? You can see the demand area below, the order block. At this point, you have to calculate your risks. Because later on, the price can do this. It can easily come back down, taking more power from this demand area. This is where I would place my stop loss. I have to think about possible pullbacks in this area. Let's assume you missed that entry. What else you can do? We can use our premium and discount zones again. Or you can use the Fibonacci tool, all the same in my mind. But this time we have a much better entry area, with the imbalance right below the EQ area. This is a possible trade to take right here. However, you can see the other imbalance right below it. This is a very common question. Which imbalance should I wait for? The answer is unknown, but we can do risk management. If I take the first imbalance, then I have to place my stop loss way below possible. Why? Because later on, price may pull back and try to balance the second imbalance below, and then go up. Furthermore, there is the fresh demand area, the extreme order block at the way bottom. And the price can even pull back to that zone to power up. All these three cases are possible. So, I will either take the risk with the largest stop loss, or I will set a limit order to second imbalance or extreme demand area and accept the reality. I may miss the trade. In the end, trading is all about making decisions. Some of them will work, some of them will fail, and some of them you will miss. There is no certainty in trading. Okay folks, we finished 3 tap concepts. I think everything is all clear now. How to do high time frame to low time frame analysis. All these trading methods are usable for scalping, day trading, or even swing trading. I believe that it will be really helpful in your trading life. I hope subscribe to the channel and like the video. Thank you, please take care and see you soon. Okay, let's talk about one of the most common trading concepts in smart money trading, the FTR, fail to return. Actually, FTR is a form of a rally-based rally or drop-based drop, but with a much more specific approach. When you see a really fast rise in an asset with a quick stop, then another fast rise, we call this quick stop area FTR. But how to determine the exact FTR? Let's see this example. Price sharply rises, all green candlesticks. A momentary stop, a single red candlestick, then another rally upwards. Now this single candlestick is called the exact FTR, failed to return area. It is also called IC, indecision candlestick. Many sources on the internet consider FTR or IC area as one single candlestick. However, in my opinion, any amount of consecutive opposite color candlesticks determines the fail to return zone. Let's see the bearish FTR or indecision candlestick. Exactly the same concept. Price sharply falls, and it makes a quick stop, then it falls back again. This will be our FTR zone. Let's see this example. Price falls very sharply, most of the time leaving imbalanced candlesticks behind. And a sudden stop, green candlestick. This green candlestick is called fail to return FTR or indecision candlestick, the IC. Do not focus on the names, everybody gives a different name to this. I'll explain the logic of this idea soon. Now let's do one more example. Price falls sharply and then makes a quick stop with 3 green candlesticks in a row and then falls again. This is my FTR zone, a very important supply area in my mind. Let's understand the reasoning and the logic of the FTR and IC candlesticks. First of all, I personally call FTR as bag holders or falling knife catchers. If you do not know what a bag holder is, it's just an investor or swing trader without stop loss who tries to keep buying dropping stocks or any other assets without reasoning. Let's understand the concept step by step. Assuming that Tesla was pricing at $400. Many investors and swing traders love Tesla. Once the price sharply falls, many traders and investors will look for indicators like RSI oversold, stochastic oversold, EMA or SMA touch, support and resistance, anything you may think of. Then they will start to buy it. Investors will try to hold for the long term. And many swing traders will enter a position, and most retail traders never use stop loss orders. At this point, everything is just fine. Because stock may rally from this point, we have no idea about it, but it is possible. What we focus on is if the stock falls again sharply. As you can see, it falls. Now, every investor and swing trader without stop loss inside these 3 green candlesticks are now bag holders, holding an asset that keeps falling. Now I want you to imagine this. We all did this. I did this 100 times possibly. When you start to wait in a losing position for a long time, it causes emotional damage to our brain. So the moment at break-even, we want to exit it and save our money. It is a genetic instinct. This is called FTB, the first time back. The moment all these backholder investors and swing traders without stop loss will want to exit the trade. They need emotional relief after holding a losing position for hours, days, or weeks. Now at this point, we look for trades. We go deeper and deeper to find entry points. Now, let's check this Tesla chart and try to identify the back holders and how they bailed out at break-even when they got the chance. I want you to look for this area. Very sharp fall, then 3 green candlesticks in a row. Now at this point, we have no idea if they will be back holders or not. Tesla could have gone to $1,000 from this point. We do not know and we do not care. Price action is all about what happened previously, not what is going to happen next. Now after that, price falls again so sharply. At this moment, we know that there are back holders right here. These people now wait at negative 37%. If you look at the period, it is 88 days. Imagine you are waiting in a negative position for 88 days. Emotional damage. What will happen next? They will want to exit most of their positions at break-even. As you can see, there is a big sale from the FTR and many people exit here, causing more fear and panic to boost more sales. But again, some people enter right here. Tesla pricing at $300 and it may go over $1,000 from this point. One more time, they could have been right. We do not know at this point, but the price falls again. Now we know something. People become back holders right here. You see, price action is all about previous facts, not predictions or guessing. This is a side effect of not using stop-loss orders. If you do not use stop-loss orders, and unless you are not a 2 or 3 years long investor, you could be a back holder any moment. These people now wait at negative 36%. If you look at the period, it is 140 days. Another emotional damage. This is why you must use stop-loss orders. And the same thing keeps happening again and again. Now, how to trade with FTR? First of all, in my opinion, FTR should be identified in higher time frames as a zone. We most likely try to catch the moves of investors or swing traders. FTR in 1 minute may not work well. This is not a rule, of course, just a suggestion. The easiest way to use FTR is ranges or classic premium discount areas without ranges. Once you identify your premium and discount zone, when the price is expensive, you may try to catch the back holders by identifying the fail to return zone. Then you'll wait for the first time back FTB and look for a suitable entry. Or you can use the discount areas to catch the short sellers. Just identify the FTR area as a general zone and wait for them to cover their losing positions by finding a suitable entry. Another common way is identifying SR flip zones or breaker block areas. It is all the same concept actually. What we do, our logic is so simple. We try to catch the movements of losing traders without stop loss and back holders. We know their emotional state and the urge of closing their positions at break even, and we use it to our advantage to enter a position. In the coming weeks, I'll work on many trading examples of this, but I think you got the basic idea. Okay folks, I think this video is great for understanding how the back holders are created and how badly they want to escape from their losing positions. I'll cover more and more examples in the future. You can use these strategies with Forex, crypto or stocks or anything that you want. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon. Okay, let's check out the dollar Japanese yen chart and discuss what we have. As you can see, the pair is in a bearish trend in the daily chart. However, if you closely look, you'll see the equal lows formed below where the price aimed for. And right below it, there is the FTR, failed to return candlestick, or you can call it IC, indecision candle. FTR and IC are also considered as order blocks. However, forget all the names. All these names are useless. In my mind, just call it a demand area. Now the price reacted here. You may ask this, how did you know it? My answer is so easy. I don't know anything. Knowing, guessing, prediction is not our job. What you should do is extremely simple. Just identify all the high time frames, supply and demands, and check for reactions and possible entries in low time frames. Such a simple idea. What I see here is this: a demand area and a hunted equal low. A possible reaction area. Equal low's hunt makes it more likely for a reaction, a higher probability. Now let's focus on this for our price action. First, let's analyze the previous price action so we can get a reference from history. There is a strong break here. Once you draw your premium and discount zone, you'll notice that price first pulls back to premium area to fall again. You can identify the swing failure pattern at the top, right before the fall, and the order block right below it. As you know, from now on, I'll consider the same colored candlesticks in a row before the fall as order blocks. And obviously the imbalance are core for trading. This is actually our classic SR flip with a swing failure pattern trading setup. Now, why I did this? The historical price action gives me ideas for future price action. Let's check the most recent price action. You can notice the very strong break here, leaving this amazing giant imbalance. When I draw my premium and discount zone, I can wait for the similar price action that is similar to historical data. You can notice the considerable swing failure pattern at the top. Next, there is a big imbalance and the order block area. I want you to notice the liquidity above, where the price is heading and also trying to fill the imbalance, at least some of it. Let's focus on this area within a 1 hour time frame and see what we have. Until this point, this FTR has no meaning. The price can easily fall from this demand and it could be useless. We do not know that, and we do not try to predict if this demand area will work or not. It is not our job. With this market structure break, after the demand reaction, right now we have a fact, a real fact. Now we know that price reacted to this demand. Price action trading works on facts and previous data. It is not a guessing game. Let's introduce a new concept to our trading tool belt: Balanced Price Range, BPR. It is an extremely simple concept. I'll do a separate video on that in the future, but you can Google it if you need. Do you see this previous imbalance? The price pierced through it with a new imbalance like here. It created a special support zone. The connection area between two imbalances becomes a support zone, SR flip area. This is a BPR. Now let's focus on the 5-minute chart and see what we can do. Let's see some targets where the price can move to. As you already know, we only trade with clear targets, which are mostly imbalances and liquidity points. You may see that price leaves many nice untaken liquidity areas above, and many small imbalances to fill. Let's do more deep diving into this special area and understand our scalping options and possibilities. Now, the price reacts to 1 hour BPR, as you can see, but it is not confirmed yet. We only confirm it with market structure shift. But what I have here is a very obvious equal highs, the strongest target that we can ever have. You can see that market structure break happens right at this point. Again, now we have facts. We work with facts, as you remember. Next, we have our obvious imbalance right at this point. If you draw your premium and discount zone, it is in the discount areas. Do not focus on the colors. I always forget to switch the colors of the Gann box tool. You can also get help from your Fibonacci tool to identify the most optimal entry point. The OTE zone also collides with the imbalance, which makes it a much stronger area to trade. However, if you look closer, you'll also notice that there is another mini BPR here, a balanced price range. Now, this would be the best sniper trading entry you can make in your entire life. However, can you make it? Can you be this precise? I'll be honest, I mostly cannot. We are talking about reality here. This is advanced level sniper trading. It is possible, but you need extreme dedication and discipline in your life. Some of you may achieve that, but majority of traders are far away in my opinion. Let's talk about how would I enter and make a profit. The first thing I would do is determine imbalance points on the chart for possible profit points. You can also see this little equal high target before our main equal highs above. Another great level to take a profit. My entry would be like this. If you watched my real trading recaps on the channel, I have taken similar entries a lot. Large cushion at the bottom, protecting me from the possible pullbacks. And the partial take profit points above and moving my stop loss to my entry after a while. If you are a casual trader, this is what you can achieve. What I do here can be done by most traders. However, if you aim to make a full living by trading, after a while, what I do may not be enough for you. You must master sniper trading in time. Let's imagine that you missed the first two entries. What can you do? Just wait for the next chance. We have a clear target above. You can continue to day trade the charts until they reach their main targets. As you can see, there is a new break of structure right here. Creates a new premium and discount zone for us to trade. If you look closely, another imbalance area for a reaction. It turns into a nice SR flip zone to trade. This could have been another nice trade. So, you had 3 chances of trading an entry point on the same day. There's nothing better than this. All you do is simply identify your high time frame supply and demands or major liquidity hunts, and then open your low time frames and confirm the reaction with market structure break. Then wait for multiple entry chances until the price reaches a clear target. Okay folks, this is it for the day. The next video will be about more trading examples of these trading strategies. As always, all these trading methods are suitable for scalping, day trading, or even swing trading. I believe that it will be really helpful in your trading life. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon. Okay, let's start with the trade case 1. Let's look at this structure closely. You can see that price action consolidates in a small range. However, it is leaving almost equal highs and lows on both sides. There's no clear stop loss hunt in any direction. Then you notice that there are some internal structure breaks before any major liquidity sweep. Create some imbalance and some small structural changes. This trade is immediately a low probability trade in my eyes because it has no clear intention or liquidity sweep. These are the trades that you may want to skip by not taking the risk or just lowering your regular risk by 0.5% because this range can deviate on both sides at any moment. Let's see another trade case. Imagine there is a very strong demand area in high time frames. An order block, a breaker block, or a mitigation block, or a major swing low being hunted and liquidity swept. Then the price makes a very clear break and then a pullback. Now, if you have a very clear target, like in this case, such as an equal high and imbalance combo, I would call this trade a high probability trade. I would use my regular risk amount, which is 1%, or even I can increase my risk by 0.5% more. So as you can see, I increase and decrease my risk depending on how clear the setup is. Let's see another case that is very similar to the previous case. Now the structure makes a strong break and right after that creates a break-off structure. Ideal conditions to look for a long trade, right? However, once I see an equal low with an imbalance below, this creates a natural huntable low area below. This immediately brings the idea of a low probability long trade right here. Even though we have perfect long conditions, this little tiny trap occupies my mind. So, why take the risk here? Or if I really want to enter the trade, I should reduce my risk here. Now, this one is one of my favorite trade setups. Price reaches a very strong demand area or clears a major institutional swing low, sweeping all the liquidity like a swing failure pattern, then creates a market structure break with a pullback with great imbalance. However, what makes these setups great are the targets. You can notice the liquidity pool above many open liquidity points and imbalances. These are natural price magnets that pull the price. You can see in my real trades, so many of them are based on this trade setup. Now, this is a momentum-based setup. Sometimes in your charts, especially in low time frames, you'll see that prices keep making higher highs without sweeping previous swing lows. You'll see this in cryptocurrencies a lot. This is the basic structure of a pump. It is either caused by a big news or economic events, or the price just being pulled by a big supply here. If you can catch these moves as early as possible, it is great. But if you are too late, it just increases your risk of being stopped out, because it naturally leaves giant imbalances behind with many open swing lows. Again, the question is simple. Why take the risk? Why? Remember how many times you lost money with FOMO, fear of missing out. Most people who lose money in the markets are actually those who enter really late. Another great setup that I really like. This setup is actually based on inducement. Once the price reacts to a high time frame demand, you'll see that price makes a quick reaction. It will be creating these liquidity pools, small compressions. And most of the time there will be imbalances right below them. And the price clears and sweeps the liquidity pool and touch the imbalances. These are great entry points for us. Now, this is a situation we all encounter. In a clear uptrend, price retraces back to an important demand area or a very significant imbalance. Great place to look for an entry, right? However, if the reaction is extremely close to a significant swing low and starts to rise from there, I immediately have my questions in my mind. Why don't you take the liquidity right here, while we are so close? This creates significant risks for us. Why take the risk? It is best to skip this trade and wait for stop loss hunt, or we can easily reduce the risk and manage our account. This is one of the other concepts that I really like to check out. SR flips. When I see a significant consolidation period that broke strongly after a liquidity sweep, I know that these are great places to look for trades, because SR flips are natural breaker block creators. Actually, both SR flip and breaker block are connected to each other, almost the same thing. So, these are places that I look for nice trade setups, which increase my winning trade chances. Nice structures that we should watch closely. Sometimes you'll find yourself in a dilemma, a complex situation. Price gets a strong reaction from a high time frame demand or an imbalance or any other significant price structure, and then creates a market structure break. But right after that, it creates another smaller market structure break, however this time a bearish one. Now, if the price reacts to a very strong high time frame demand area, there will be a reaction. It is almost proven. Why will you trade against it? Unless you see a very clear setup. Can you take it? Possibly yes, but with reduced risk. This is how you keep managing your risk continuously by giving clever decisions. Finally, let's check one more setup. A setup that combines the range and power of 3. Now, once the price clears a major swing low or reacts to a demand, you'll see a market structure shift. However, after that, price will start to consolidate and create a range for a while, confusing a lot of people. These are the times when you must be patient. Let the liquidity be swept first. As you can see, this is a range plus deviation here, or a smaller form of a power of 3 concept. These are naturally high probability setups to take trades. One of my favorites. Okay folks, with this video, we completed the basics of risk management and how to identify high and low probability trades. Very useful methods for day traders and scalpers. I hope you subscribe to the channel and like the video. Thank you, please take care, and see you soon. Okay folks, let's talk about Bitcoin a bit. As you can see, BTC getting back into bullish vibes again. Am I fully convinced that we are starting a 2023 rally? Not really. As you know, I posted a tweet a couple of weeks ago, and I was looking at two main things. First, if this giant imbalance and supply area can hold the price and create a low time frame market structure shift. I waited for this action, but it just never happened. The price pumped so strongly. In another case, I was looking for $21,473 price level. A nice break, a proper pullback, and a short-term rally. How I traded this chart is actually a little different though. As a trader, I adapt what is in front of me. I do not care what might happen or what will happen. Price swept the liquidity right here and created low time frame ranges. This is the area that I looked for trades. Let's dive into 15 minutes charts and see what we had. The moment I opened the chart, I saw the clear liquidity below. Very obvious equal lows waiting to be taken at the bottom. Now, most beginner traders see these equal-like price levels as support to trade, and then place orders due to the basics of support-resistance trading. As you can see, it works from time to time. However, the thing that most beginner traders lack is they do not want to take profits or manage positions. Most newcomers only aim for being rich. Traders like us use their greediness to trade. Some people ask me about equal lows and highs. Should they be exact equals? Think about yourself and millions of traders out there. Are all of you placing your stop loss orders at the exact price level? The answer is no. Some traders enjoy tighter stop losses. Some others use much larger stop losses. Some trades with 1-minute charts, and some others use 15 or 30-minute charts. So all the area below create our equal lows liquidity pool. Imagine it like a chainsaw, a very jagged area of stop loss orders. So basically, what are we looking for here? If the price wants to rally upward, it will definitely need fuel and a strong push. The moment I saw all this stop loss order pool here, I understood that price need to grab and clear all the liquidity right here before the next big move. However, this was just an assumption of mine. After all, we traders only do educated guesses. Let's start clean. As you can see, there are two clear ranges here. Again, if you're still having a hard time identifying ranges, use your volume profile. It will give you estimated locations. Then you can adjust the rest. I was not at home to trade the first range, but I had enough time to analyze the second range. Let's see what is happening with this range. If you look closely, after each swing failure pattern, there is a sharp fall, creating trading opportunities. And you can see that price clears internal liquidity and powers up before it makes a fall. Let's check 3 trade opportunities that you could have used within this range. And at the end, I'll talk about my mega trade. Let's start with the first part. As you can see here, there is an internal swing failure pattern, another level of confirmation for us. Price makes a strong break downwards right here until it pushes itself to range low. Just take a moment and look at the chart from a distance. What do you see? A clear market structure which changes course after the break. You can see another level of internal liquidity right here, which is around the SR flip zone. How about targets? Do we have any targets to aim for? Clear price levels that the price can reach? Equal lows at the bottom and the giant imbalance right below. We have already learned about this structure actually. Power of 3 inside the ranges. Accumulation phase, manipulation, and finally the expansion. This was the first possible trade of the range. Let's see the second swing failure pattern. Can we trade this? Let's see the price action and the possibilities. Right after the high time frame swing failure pattern, there was a market structure shift. When you are confused and cannot see the structure, just use your path tool and draw things on a chart. Drawing things like path or ranges makes you see things much easier, believe me. After this break, you can see that we shifted structure for a while. At the bottom, there were some open liquidity points to be cleared. You can see the imbalance right here. It also aligns with the range high. And it gives multiple confluence to enter a trade here. However, I must admit something. This was not the clearest setup. If you're not sure of your setup, just reduce your risk. It's so simple. Do not risk the 1% of your account. Just use the 0.5% of the account. You need to accept that you will not find the clearest trading setups every day. Some days your analysis will be weak. Some days markets will play games with you. And some days your whole bias will be wrong. This is all part of the game. Let's talk about this monster trade that I took. What did I see? What did I wait for? How did I decide to trade? Let's talk about all of them. Okay, let's start with something that most traders never look at. Even better, they are not even aware of it. The PPI data, basically the producer price index, is simply the estimated inflation in producing products. It amazes me that nobody watches this data. So funny. I want you to notice the most amazing trend line right here. I was sitting in my chair and imagining how all the retail traders keep entering trades here with different price levels and placing different stop-loss orders, creating the most amazing trendline liquidity pool for us. The moment PPI data is released, you can see how all the stop-losses taken out until the most significant high, creating the swing failure pattern. Watch your data, guys. Be aware of them. After all the sweeping stop-loss orders, I was ready to enter a trade finally. The rest was actually a piece of cake because we did the only thing we do. Simple price action trading with confirmations and facts, which all of us did thousands of times. Confirm the break, draw your premium and discount array, locate imbalances, use the optimal trade entry tool for further confluence. How many times have we done this, guys? You tell me. Now let's see what happened here. First cleared all the stop losses until PPI data, right here. Then the sharpest fall to clear all the support stop losses right here. One of the best trades that I have taken in recent weeks actually. I normally go for 2R or 3R, but for this trade I aimed big. Okay folks, with this video, we had a deep understanding how the liquidity works and stop losses are hunted. Very useful methods for day traders and scalpers. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon. Okay, let's learn 10 magic rules of trading which all traders need to know. You need to print these and hang them on your wall and go over them every morning. We will start with, of course, protecting your account no matter what. The number one rule of the whole trading world. Why? Because no money means no trading. Imagine two traders who manage $1,000 accounts. Trader 1 risks around 1 or 2% and the other trader risks 5% or more for each trade. These traders were having a terrible day. Both of them kept doing revenge trading and had 10 losses in a row. We all did this. I did it myself, the revenge trading. Now, at the end of the day, both traders are upset and angry. Trader 1 account dropped to around $800 and the other trader's account is almost half gone. Now, Trader 1 needs to make a 25% gain to be break even. However, Trader 2 will need to make 100% back. Yes, 100% back to be break even. Can you make 100% and recover? Many of us cannot. You destroyed the account. No money means no trading. You do not even need to learn the rest of the rules anymore. Why? Because you have no money to trade anymore. Nothing matters anymore. So, most important rule of trading is protecting your account. Let's talk about dynamic risk management. Basically, you cannot enter each trade with the same risk. You need to assess everything before entering. I already published the high and low probability trades video. Please check that one too. Extreme high probability. These are trades. Everything is almost 100% perfect. You have a clear bias, you have clear targets, and you have multiple price action structure confirmations. And there is no economic data anytime soon. So you can risk a bit more than your regular 1R. For example, if your 1R equals to $100, you may risk $150 this time. Regular high probability trades. These trades are very similar to extreme high probability trades. However, if the date is very close to important economic data, like inflation numbers will be released tomorrow or 2 days later, you shall use your regular risk. Regular low probability. Now, as you know, I explained all the high and low probability trades in one of the recent videos. Imagine there is no very clear bias or very clear target. There is no clear break of structures. So, you are half sure of everything, a little bit confused. This is a low probability trade. You'll risk less than normal. Extreme low probability. Now, this is the low probability setup with economic data day, like inflation numbers will be released today. Extremely unpredictable days. But imagine, I have a $10,000 account and I'm only risking $25. What will happen if I lose $25? Nothing. It will not even bother me. Still best to avoid eco data day, or at least wait the data be released and then look for a setup. Finally, no trade days. Believe it or not, there will be some days the market chops every single trader, up and down, up and down. These days, avoid the market. No bias, no target, no entry, no setup, and no pattern. You will see these days. Do not trade them. Not worth it. Rule number 3. Taking partial profits. Sometimes I see traders out there waiting and waiting to reach far away targets. However, some trades will have clear mid targets. like significant liquidity points and large imbalances. You cannot ignore these mid-level targets. Imagine your trade reaches a 3-hour win, but you are not taking any profit yet. You just went out and came back, and a crazy news came up, then you stopped out. All the hard work is gone, plus you lost money. When you see significant mid-level targets, it is always best to take partial profit. Rule number 4. Dynamic stop-loss management. Now, this is as important as taking partial profits. Break-even management is quite simple. Once the price reaches 1-hour profit or a significant take-profit level, such as a liquidity point or a large imbalance, now I can easily move my stop-loss to break-even. Now I'm in profit and I have nothing to lose. I have zero risk. These are the best moments of trading actually. Rule number 5. Embrace the losses. Now, this happens to me, this will happen to you, this happens to anyone. There's no avoiding this. Do not bother. Some days you'll have amazing trade setups. Loss of price action, high quality setup, amazing day. And you'll make your entry. And the price will not favor your analysis or your bias. It will not give you a single chance to make a profit. It will not give you a single chance to move your stop loss to break even. It will directly stop you out. Nothing can prevent it. All you can do is embrace it and accept it. This is the reality of trading. You should move on. Do not be stuck with it. Let's talk about rule number 6. How to decide to avoid trading totally. As I said before, some days market makers will get a jigsaw and keep chopping traders up and down. And you'll lose your mind, no bias and no analysis. These are the days you must avoid trading, not worth it. If you cannot find a clear target, it is not worth trading. Because if the price has no purpose to move up or down, why would you even trade? Now, right before an economic data release like inflation, unemployment, growth rate, and interest rate decision, it is best not to trade. It is 100% unpredictable. However, after the data release, it can build a setup that we can look into with extreme low probability like risking 0.25R. However, overall, avoiding economic data days is better. Oh, the losing streaks. All of us had this. After each loss, your brain will push you to revenge the loss. And you will lose even more. So simple. Shut down your computer quickly and move away from your room. Otherwise, you can destroy your account. One last thing. Some days you'll have problems. It could be family problems, financial problems, or just feeling down. These are also days that you need to avoid trading if possible. Life is not easy. We all have problems. Just skip these days. Rule number 7. Trade fewer assets as much as possible. My personal suggestion is to keep it under 4 or 5 pairs. Nowadays, the amount of things that you can trade is crazy. You can trade hundreds of cryptocurrencies and tens of different Forex pairs. You can trade index futures, stocks, gold, silver, crude oils, and dollar index. You can even trade funds if you wish. However, all these will create confusion. They will also reduce your win rates because each asset class and the pair have special dynamics. Some will create a lot of ranges. Some will create very clear market structures, regular swing highs and lows. So, by jumping from asset to asset, you'll only confuse yourself. Keep it simple as much as possible. Let's talk about unrealistic targets that you must avoid no matter what. On social media, you will see these ridiculous posts. Crazy winners such as 1R to 25R or 1R to 50R. These have no base or reality. Avoid them all. You cannot flip an account every month. Making 100% every month is not possible. Of course, there could be months you can do it, but every month is not possible. So keep your expectations reasonable. Compound growth calculations. The most ridiculous thing in the world has nothing to do with reality. Just show me one person who did compound growth. Such a waste of time. Now, some people are sending me mails. I have a $1,000 account. Can I make $5,000 or even $10,000 with it every month? Well, you cannot, my friend. You cannot. Not possible. And it will never be possible. You may get lucky and do it once, but that's it. And finally, all those 100% win rate YouTubers and posts. If there is such a thing, 100% win rate consistently every month, you could start buying whole countries and islands in the world in a couple of years. Okay, let's get back to the reality. Rule number 9. Real goals and real targets. Please listen carefully. In my opinion, any part-time or full-time trader, a mid-level trader, after 1 year of trading experience, can achieve at least 10% account growth every month. Yes, it could happen. You should set this as a target. 10% is a base. Over that is even greater. 10R, guys, 10R. Cannot you collect 10R each month? How to master your setups? My personal suggestion is to start small. Start with 1 to 1.5R trading setups and master them. Then move to 1 to 2R setups. And then 1 to 3R setups. Well, 1 to 3R setups is actually all you need as a trader. More than you can ever wish. Develop this mindset. Collecting R. With each trade, focus on how many R that you collected. Some trades will be only 0.3 R. Some trades 2 R. Some trades will be 1.75 R collected. And add them all at the end of the month to see the final result. Your general win rate target should be 50% to 70%. You should try to keep your results inside this range. Some months may go lower, and some months it may go higher, but this is an overall great target. How many trades per week? All you need is 1 to 5 trades per week. 5 good trading setups will be more than enough to grow your account by 10% a month. Plus, less trading means less stress and more relaxation. Of course, this is not a rule. Some weeks you can extend these numbers. Finally, I leave you with my special discipline building routine that I do every single day. I will not go over this list. These are what I do every single day, no matter what. This is how I build my discipline and shape my mind and body as a person and a trader. This is not just about trading. It is about being a successful person in life, whatever you do. Okay, folks, these are the 10 rules of successful trading. You need to print these and read them all every single morning if possible. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon. Let's start a step-by-step journey of understanding super breaker blocks. The first stage of proper breaker blocks starts with a liquidity hunt. One of the easy ways is spotting equal highs and lows, basically gathering stop losses in a single price level. Once all these stop losses are hunted, we have an inducement field for pushing the price down. However, it could be any important swing points, previous day, week, month, highs and lows, or significant swing highs and lows. The second leg of inducement, supporting the liquidity hunt with other price action structures from the same or higher time frame. Like what? Imbalances, order block, other breaker blocks, mitigation blocks. So we can confirm two things: significant liquidity hunt and key price action structure. Let's start with my trade. Notice the liquidity that starts gathering at this point, forming equal highs. And with this wick, all the stop losses of support and resistance traders are hunted. It is also a nice swing failure pattern. It also collides with this nice imbalance, confirming our inducement price level. Let's remember the features of a high quality break and displacement as for step 2. Large body candlesticks create a big push downwards or upwards. Most of these candlesticks should be the same color. It should break a significant high and low strongly. I generally prefer candlesticks close below the breakpoint. This movement creates large imbalances most of the time. These breakpoints generally turn into support and resistance flip points, where the breaker blocks shape. I personally prefer very sharp and fast movements. So, confirming a break will be your second point. Of course, never expect perfection. No charts will be this clear all the time. Let's get back to my trade. First of all, let's check out swing points. Notice the swing high. This swing low creates that swing high. With this crazy break, we are confirming an internal market structure break. If you notice this other swing low, which is critical, also confirms a break of structure change in higher time frames. What I focus on is this price movement, incredibly high quality. Okay, let's talk about the breaker blocks. Most of you already know the breaker blocks, the last candle at the swing point before the break. How about multiple same colored candles, which are true breaker blocks? First of all, in my opinion, both of them are correct. The first candle generally serves as the first touch point, and most of the time price reacts from this point. However, there is nothing wrong with taking them all at once as a full breaker block. These candlesticks are only a small part of the equation in the trading system. Nice, you now identified the breaker block and possible reaction point. Let's find out the breaker block in my trade. So, these 4 red candlesticks actually present the full breaker block supply zone. The last candlestick presents a small part of the breaker block first reaction point. In my trading life, most of the time, price reacts to the lowest part of the breaker blocks. We keep adding more confidence and confirmation to our trading system. The next part is the premium and discount arrays. By using them, you can find cheaper prices to long or more expensive prices to short. I want to take a pause and warn you. Sometimes the price will never pull back. This trade was a textbook of a super breaker block system. It was like 10 out of 10 structures come together. You should never expect this to happen every day. If you can just get 5-6 confirmations out of 10, it is worth the risk. Risk management is the only secret of trading. Checking back on my trade, you can notice the premium and discount zone and how the price reacted from the premium zone. As I said, this trade was like 10 out of 10 perfect trade. I will admit that this does not happen every single day. Now we are in the most important part, supplementary structures. I would never just enter a trade from a breaker block. After all, a breaker block is just support and resistance flip, but nothing else. I need supplements. What else supports my trading system? After the break, what kind of structures come into existence? A large imbalance, micro breaker blocks, or order blocks. These little structures determine my sniper entries. If you check the chart, you will notice this little green candlestick. which also actually super order block with this super quality break. Now you cannot see clearly in this time frame, but within the 1 hour time frame, there's also a magnificent imbalance here. This brings us the importance of checking multiple time frames to identify key structures one more time. Let's talk about internal inducement. In the beginning of this video, we talked about external inducement, 100% the same idea. However, sometimes price never needs an internal inducement. It sharply drops at once from the breaker block area. But I keep noticing that prices require more and more internal inducement before the final move in the recent years. If you look at our chart, you notice this micro trend going on. Right below our overall supply area before the price makes its final move. It clears all the stop loss before the big move. Finally, the entries. Let's talk about entries in our reaction point. Let's start with high time frame entries. Price came to our breaker block and hunted all the internal liquidity filled up for its final movement. Sometimes I play with these reactions without checking the lower time frame by managing my risk. So, this is the idea of reaction trade. The good part is you will not miss the movement. It will be less time consuming and no precision required. I do not need to check lower time frames. If it is all great, why do I not take high time frame reaction trades all the time then? Simple. It has a much higher stop out rate. Price can easily want to go deeper and deeper before the fall. There's no certainty for this. The second part is, it is exact opposite of sniper trading. Your risk reward ratio will be smaller. Once I identified the equal lows below, I saw my clear target and I trusted my trade. I played for the reaction. This was a high time frame reaction trade. I was ready to take a loss. I do not care about losses. Win or loss has no meaning to me because my 100% focus is on statistics. If I have 10 losses and 10 wins, it means that I am a great trader. Keep making money and growing my account. Simple as that. Let's talk about low time frame entries. Okay, the price comes to your high time frame breaker block is all great. One of the greatest entries is actually finding the exact same structure, micro breaker block at this point. But sometimes there will not be a micro-structure shift. Then as an alternative, you can use mitigation blocks. However, I do not fully trust mitigation blocks. I am not a mitigation block lover, and I do not use them a lot, I have to admit this. So, for low time frame entries, checking for microstructures is your first step. This entry style is the only way to achieve sniper methods. Your profit rate will be higher than high time frame entries. You'll be less likely to be stopped out. Perfect. So, what are the problems then? The chance of missing the trade is the biggest issue. Price may fall suddenly without any pullback, and all setup could be wasted. Another problem is watching low time frames is quite time consuming and could be quite complex for the most traders. So, when we look at this 1 minute chart, it was actually a complex structure for beginners. Notice this swing high, our deepest swing high, and this low creates that high. So, with this tiny break, these candlesticks are micro breaker block. Right on top of it, you can see this tiny superorder block and this great imbalance. This should have been your micro entry for sniper scalping. Not easy, I have to admit that. As you can see, there is no perfect way of trading. Every setup and every style has its advantages and disadvantages. The only truth of trading is risk management. Take care, have fun, trade less. See you, folks. Let's talk about bullish super breaker blocks and the trade that I took this weekend. Again, every key point of breaker blocks starts with an extremely significant liquidity hunt, like major swing moves or the previous day's lows and highs. Most people think it is enough, but for me it is not. I always have a secondary confirmation, like a big imbalance, order block, other breaker blocks, to support the reaction. Let's start with a top-down analysis of my last trade. As you remember this weekly chart, the price at the moment reacting to this weekly imbalance and the order block. When we switch to the one-day chart, you can see that the order block pushed the price down, but down to where? Obviously, this major daily imbalance. Remember, price always seeks to fill imbalances and hunt the liquidity. Then the price always reacts to imbalances or hunted liquidity as well. So, what is happening here? Notice the inducement right here. Price hunts the liquidity and makes a swing failure pattern. And it is majorly filling this nice big daily imbalance. What a perfect reaction point. Why the swing point is important? Because it creates the most important high in this chart. I call them significant high and low. We already discussed high quality breaks last week, no need to deep dive again. To put everything in simple words, I look for strong reactions to significant highs and lows. I'm looking for a reason, a momentary reversal. Okay, let's zoom into this reaction point. I'll be focusing on lower time frames like 30 minutes. Now, as you can see, daily imbalance mostly filled and significant low hunted. How does the price react here? Tell me where the market structure breaks. If you see the MSB, please type MSB in the comment section. Yes, this is our structure shift right here, and this is the displacement, the high quality break. Check these big body green candlesticks. A little confidence for you. Where is the price reaction? 26K. A major price level. A round number. Let's talk about bullish breaker blocks. Most of the time we only use the last green candlestick before the fall. We already know this. Our first touch, the first possible reaction point. What if we have 4 candlesticks like this? Where is the full breaker block? Can you tell me this? Yes, the same colored candlesticks that stick together will be your true full breaker block. So, in our chart, these multiple green candlesticks are our breaker block zone, our full BB zone. First touch points most of the time are flip points, basically the support and resistance flip. We already know about premium and discount arrays. Most of the time we always want to long the price from discount or at least EQ level. But what if we can't? Let's go back to my trade. When we drove the premium and discount zones to our chart, as you can see, price never pulls down. Where is the best point of interest in this chart? Notice this order block at this point, which also collides with the imbalance. Plus, it is in the discount zone. In my opinion, this was the best POE in this chart. But how did I trade this? Price never pulled back. We will talk about that later. Let's continue to understand super breaker blocks, the supplements. As you know from the last video, a single breaker block is not enough. Not super at all if it is alone. The super word comes from multiple structure collisions. Think about Superman. He can fly, he can shoot lasers from his eyes, he has the super strength. He is the full package of super. When you look at my chart, you can notice this giant imbalance right inside the breaker block, one of the best confirmations for me. Let's move on and find other little confluences. As you know, I love the price when it is filled up, powered up before the big move, the inducement. It is a very important sign of big price moves. When you look at this chart, you'll notice this great micro uptrend line. But these trend lines are everywhere. Which one to use? We mostly focus on the ones that are around the key structures. Why is this trend line forming right above the breaker block, largest imbalance, and support and resistance flip? Is it coded? Is it algorithmic? Keep it secret for now. As you know, we compared high and low time frame entries last week. We talked about the advantages and the disadvantages. Using high time frame entries will basically save time for you, and it will be less complex. The big downside is the profit will be limited. Let's get back to the chart. First, let's talk about where this price can move to. Do we have any clear targets to aim for? Notice these equal highs, significant and clear. There are also imbalances above as possible targets that we can use for runners. Okay, remember my best point of interest, the premium and discount EQ with the order block? I placed a limit order right above it. In my opinion, this was still the best entry point in this chart. Nothing will change my opinion. I also used manual entry for this quick trade right at this point. But why? Price tapped the breaker block. The first touch. Significant flip point. Price tapped the major imbalance after the internal inducement with hunt. So many reasons to enter. So, my idea was simple. 2 trades. If one fails, I will use the other one. If I end up with 1 loss and 1 win, I'm still the best trader in the world in terms of statistics. Let's move on to the low time frame entry models. I want to repeat it 100 times. Combining high and low time frames is still the best method of trading with much higher win rate probabilities. But the problem, it could be quite time consuming. I'm a busy person, so I balance my life between high and low time frame entries. Okay, let me zoom in on this area and open the 5-minute charts. Can we use a sniper trading low time frame entry model? Let's discuss it. Price tapped imbalance, breaker block, and the flip point, and reacted well. You can see the micro MSP here. Where is my full breaker block? These 3 candlesticks and this imbalance in sight. Notice how the price pulls back. Then what happens is the price makes another micro MSP. This time reaction is very powerful. Notice this candlestick. It creates a micro super order block. Then the price flies away from it. A bit complex, right? Well, not for me. I love complex things as a software engineer. My problem is time. You need to have a lot of time on your hands to catch these perfect snipers. Okay folks, I hope you gained some knowledge about how to read the markets and identify the key zones before trading. If you have any questions in your mind, please leave a comment below. I'm happy to answer them. If you liked the video, please subscribe to the channel and leave a like for me. Thank you, take care, and see you soon. Since I got thousands of mails for balanced price ranges, I decided to make a video about it. It is actually an extremely simple smart money concept. Let's take a look at it. To have a BPR, you need at least 2 imbalances presented. What happens is extremely simple. The intersection, the collision area of 2 imbalances will give you the balanced price range. So we consider these areas as special reaction zones. This is where we look for entries. How to identify the balanced price range? Let's have a couple of examples. Look at this chart. Where are the imbalances? You can spot these two imbalances easily. Nothing complicated about them, right? Then, where is the BPR? Yes, the intersection zone of those two imbalances. As I said, very simple. See this example? First, identify all possible imbalances. Very easy to do. Then find the collisions. Here you have your balanced price range. Nothing complicated. Now, what is a BPR? What actually happens? Why do they even exist? The concept of BPR actually comes from failed imbalances. Every trader who learns about imbalances immediately thinks that they found the holy grail and every imbalance should work. Remember, imbalances, order blocks, breaker blocks, supplies and demands, market structure breaks or break of structures, all these can fail. None of these got sent rules. Everything in the world may fail. So sometimes the imbalance will not show any reaction or no market structure break will happen. This is why we mostly try to combine low and high time frames. Confirming a reaction increases our chances and reduces our risks. So basically, there is a switch happening. Like failed order blocks, mostly turn into breaker blocks. The failed imbalance meets with a new imbalance and creates this lovely new special reaction zone. Okay, look at this example. Notice this giant imbalance. Normally, you should be looking for a short here, a reaction from the imbalance, which will push the price down. Let's take a closer look at the reaction and what really happens there. Now we are in lower time frames. Notice how the trend is so strong and never reverses. No reaction at all. No market structure to short it. Now, what is a super BPR? That's sometimes not really common. Imbalances will keep failing multiple times. This generally creates an extremely sensitive area because price misses so many orders inside these imbalances. And when the time is right, there could be a crazy reaction. It may even start rallies by filling all those missing orders inside imbalances. Take this as a secret note for your notebooks. Super BPR requires at least 3 imbalances. But there's no limit. It could be 4, 5, 10, 20. Let's see how the mega rally started with Super BPR. Can you notice where the Super BPR is? Yes, in this daily chart, you can notice 3 obvious imbalances. And how the rally started from 20k to 30k. This is a 50% mega move in a matter of days. I remember this moment, it was crazy. Let's check the Forex. What happens here? Price in a bullish mode. Keep making new highs. So, what you look for is simple. A new break of structures. Price pulls back into discount zone. And finally, finds itself a special reaction zone like Super BPR. You can see the Super BPR here in 8 hours time frame with the pound-dollar pair. The problem is Super BPRs are mostly hidden. You have to go through multiple time frames to see it. They are hidden for a reason. Now, you saw a break of structure method to trade. What about other methods? What can we do with balanced price ranges? Let's have a look. First of all, finding BPR in high time frames is quite effective. This will create a very important reaction zone. Of course, you can trade them with only high time frames without a market structure break. But if you can confirm a structure break at the reaction point, this will definitely improve your winning rate. As I tweeted recently, the more patient and boring you are, your win rate will increase. Trading is a boring job. I think the Buddhists could be the amazing traders. Okay, check out this chart. Price makes a break downwards. Not the best quality, but still it could be useful for us. Where is the balanced price range? Yes, right here. Let's look at the much lower time frames in this area and how the price reacts to this high time frame balanced price range. You can easily spot the market structure and how the price shifts here, getting help from my premium and discount zone tool. Now, here is the quiz for you. If you can find the super BPR in this chart, type BPR in the comment section. I'm waiting. Yes, right here, a tiny one. Not everyone can spot this, but look at it. It is just pure crazy how it reacts to super BPR. Another way to use balanced price ranges is the lower time frame entries. But how? For example, if you can spot a significant liquidity hunt with high time frames or a usable supply-demand area, you can go to lower time frames and look for a low time frame balanced price range and a possible reaction. This is a great strategy actually. Check out this example. Price is in a bearish mode and making mostly lower lows. After this break, price pulls back into the premium zone and become expensive again, and hunts a very significant high in the chart, which is basically a superb quality swing failure pattern. It also collides with this giant order block. What else do we have here? Check the significant inducement. Price hunting all these internal liquidity as well. Let's zoom in on this area. Let's discover what is really happening inside this reaction. Now, let's have an idea about price levels by using the premium and discount tool. As you can see, price wicks the EQ point and clears all this internal liquidity. But what else could we look for? Notice the BPR. How perfectly the price reacts to this BPR. It is magnificent, is it not? Range EQ and BPR combo. Okay folks, with this video we have learned a lot about managing trades and useful trading methods. I believe that it will be really helpful in your trading life. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon. Okay, let's remember how to find really good supply and demand zones and how to combine them with super order blocks. If you remember the drop-based rally lessons in free trading course, you should be able to identify these very natural demand areas after really sharp falls and the countering rallies. As you can see, I do not show any effort to identify a specific structure at the moment, just finding myself an overall demand and supply area. Let's get back to my trade. I think I do not even need to tell you where the most natural demand zone is in this chart. Yes, right at this point. The moment I saw this structure, I knew that it was a precious area to identify as a demand zone. Is everything that simple? Not actually. But finding these natural supply and demand zones are the first step. Just imagine buying a second-hand car. Do you buy it blindly? First you find the car, then you take it to a mechanic to get a quality control check. Yes, we need a quality check. The first thing that I consider is if there is a break, a market structure break possibly. And more importantly, what kind of break is it? A high quality, a powerful displacement, or a very weak break? As you can see in my trade, notice this magnificent break, super quality. Seeing this kind of movement always excites me. Another checkpoint is in the base. What kind of base do we have? Did we clear most of liquidity before the big movement? Or do we have many untaken lows? Remember, price always seeks liquidity. if we have so many open hands, we are putting ourselves into much more risk. Let's check our base closely and see what is happening. You can notice that 2 times liquidity hunt happens here. Price fills up and ignites itself before the powerful break upwards. Seeing these liquidity hunts at the base gives me comfort. Why? I know that this is a more reliable demand zone. You can notice this super order block right here with the imbalance. Okay, we can find much more precise order blocks in under 30 minutes. But next, I'll teach you a couple of secrets about demand zones. Okay, we will look into 4 different demand zones and how to make decisions based on price movement. Case 1. Now, price makes the market structure break above the demand area without pulling into our demand order block. Can I long this? The answer is yes, possible. However, this will not be the best setup in the world. It comes with risks. Case 2. Price pull back to our demand and nicely react. Yes, this is the ideal case for me. The ones that I love so much. It gives me confidence before placing trades. Case 3. How about this? Price pierces the demand, hunts liquidity from the base, and quickly reacts. There is nothing wrong with this setup. This means that the fuel provided with the order block was not enough. It came further down to hunt more fuel. I use this setup quite a lot and I also love this. Case 4. Now finally something I would not long. Price strongly breaks our demand, a high quality break. For me this is a failed demand, a failed order block. It can turn into a breaker block. If I see this, I do not mostly trade it. So much risk. Okay, all great. Everything is clear or not? If you have a question, put it in the comment section. I answer all your questions. Now, where were we? You can see this clear setup. Before going down into my trade, I want to go up with higher time frames. I want to investigate what happened. Is this a fake reaction? What caused this reaction in the first place? Now we are in the 1 hour chart, as you can see. Like an investigator, we are investigating the causes. This special area is the cause of reaction. And notice this flip point. Basically, a support and resistance flip. Now we are inside the area. What do you see here? Tell me. A super BPR, super balanced price range. In the middle, the support and resistance flip. An extraordinary combination is happening here. As you can see how the price reacts to this magical combination. Also, price finds its self-inducement right above this structure. It's like throwing oil and gas into a fire. We keep fueling up. Notice this crazy precision at this point. Price taps the support and resistance flip, which is right in the middle super balanced price range. Not random stuff. Now let's talk about this part, the trade and entry. Let's zoom in and check out the 1 minute time frame. What happens here is a very simple concept, the power of 3. Remember where PO3 happens? Right around the key structures like order blocks, supply zones, or imbalances. I showed probably over 100 examples of this. So basically price accumulates orders, makes its manipulation by hunting liquidity, and then changes the structure. Finally, the expansion phase. Let's look at the chart. The order accumulation, then the manipulation. Notice that it clears these equal lows. Finally, the structure changed and expanded. My entry was a little late. It could have been a much better entry here. I was not paying high attention here. Let's talk about targets and trade management. Obviously, this mega 15-minute imbalance was the first target, which has this flip inside this mega imbalance gave me a precise location to target. Now, as a day trader, what are my priorities? Firstly, I try to find the closest target possible. Then I want to end the trade as soon as possible with that close target, adjusting my stop losses to get at least 2-hour trades. Why do I do all this then? Because trading and markets are so cruel. They are ready to take your money away. All games are rigged. We need to get in and out as quickly as possible in these markets. We are playing with fire here. If you do not know what you are doing, you can get burns. Okay folks, another adventure ends here. As always, all these trading methods are suitable for scalping, day trading, or even swing trading. I believe that it will be really helpful in your trading life. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon. Let's look at the charts and try to understand the price. Remember, if you understand the price, your trading world will change. It is all about the meaning. Notice this imbalance right here and the inducement. What happened after this interaction was that the price heavily filled up and created this insane breakout. It cleared all the liquidity formed above. This is actually how the chart patterns such as triangle pattern come to life. It is all about imbalance and liquidity and created our premium and discount zone. What do I do here? I just read the price but nothing else. I do not think about trading yet. I only try to understand what happened here. Then I check for structures. You can notice the flip points in the discount zones and the imbalance and super order block. I have a simple mind. As long as this price is in the discount zone, I'll be looking for long structures. I get mails constantly about order blocks. People still asking about which order blocks to use. First of all, order blocks are everywhere. I can find 100 order blocks in a single chart. I developed some characteristics for higher quality order blocks, which I call them super order blocks. The first simple approach is the powerful movement after the order block. If it creates a new break like MSP or BOSS, it is an extremely powerful area for me. And if this happens with a couple of same colored candlesticks with a very quick movement, it is even better. Then you already know the drill, the imbalance. Next step is not mandatory, but with my backtesting, if the order block creates an engulfing pattern, it becomes a much more powerful supply or demand area. Another backtesting result, after powerful movement, if it pulls back slowly, it is an even better reaction zone. Key levels could be things like the previous day's low or high, important gaps, and similar stuff. And in my opinion, the first reaction is generally the strongest, but sometimes it can create equal lows or highs over the zone. Time will tell that. This is your simple guidance to find higher quality order blocks. Let's try to understand the price and how to choose right targets. Imagine that we never saw this part and we are just brainstorming. We have our flips and demand areas. Where do you think the price will go? First of all, this top swing high are runner liquidity, our final possible target. Below that, we can see internal liquidity areas where the price can be pulled to. Once you identify the liquidity, then start looking for imbalances. You can notice these imbalances close to other structures. Finally, our supply areas, the famous order blocks. Okay, this zone is our closest possible achievable target. If I take a long, I target this or use it to take a profit. But this is the first place that I will take an action for sure. Then above that, we have our second mid-level target zone. Many structures collided with each other. At the top, there is my home runner. That zone is probably the hardest target to reach. I have no idea where the price will react. You'll never know that until the price reaches one of these zones. Let's continue brainstorming. Right at the EQ point, there is also a flip zone. Notice what happens here. A swing failure pattern with a market structure break. And notice the lovely imbalance right here. Let's imagine that you took this trade and stopped out. There is nothing wrong with this trade and stop loss. People keep emailing me about why I lost a trade or why this setup did not work. Guys, you have no mistake. Nothing wrong with you. This kind of losses are acceptable losses. Remember this. You cannot control the price. You can only control your risk. Later on, the price leaves this extremely high quality target above. Supply, equal highs, and imbalance. It pulls back to my initial and deepest demand. Then I take the enter without even going into lower time frames. I reduced my risk here. My risk is always dynamic. Since it was the weekend, I used the closest target to get out. Nothing complicated here. These are very simple trading methods. Let's talk about when we can take a short from the premium zones. At this point, the price is heavily supplied. Used both imbalances and hunted some internal liquidity and tapped each order block. Let's check the low time frame. First of all, notice the first supply OB zone. Do you see any structure shift here? No. This is why I always say this. You can identify hundreds of demand and supply zones, but you will have zero clue which one will work until the price reaches the zone and shows some reaction. Before looking for entries, I think about targets. Where can the price go? Here's my tip. Ask yourself 100 times daily. Where can the price go? Notice this clear equal lows below. And right above it, there is a giant imbalance. No brainer, this is a target that anyone can see. Price did not react to the first supply zone. What about the second one? Notice the structure shift right at this point. From now on, it is an easy trade. Price shifts, this leaves an imbalance behind with an order block. All of them also collided with the optimal trade entry. This is my sniper entry model. If you have so much free time, you will love this model. I cannot snipe the charts all the time because I am not at home all the time. So I combine casual entries and sniper entries from time to time. So let's sum it up. Let's take a quick look. Bitcoin is in a bullish trend and keeps making sharp movements above. Each time it makes new breaks and creates new premium and discount zones. It is mostly giving us long opportunities, but also short opportunities as well. It is all about demand and supply zones, and the structure shifts inside these zones. Once you observe the price, you'll notice that the same things keep happening every single day. Okay folks, this is it. This is how you fix your mistakes and move on. These are great trading strategies for scalpers and day traders. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon. Okay, let's talk about how to do less analysis and use single time frames to trade. Today I will focus on 1 hour time frame only. We have been following this chart for a long time. Once this very strong break happened, we all traded this super order block a lot, as you remember on Twitter. Now, what do you see here? Obviously a range. Remember, I draw all of these things for you to understand. I do not need to draw a lot of things on charts because with experience, I can see all that with one look. Notice these equal lows at the bottom under the range discount. Price is manipulated right here. This is a manipulation, but it is also range low deviation. You can also see that this nice swing failure pattern. Up until this moment, I never think about trading at all. I'm just trying to understand the price. What did it do? Where is it? Where can it go? Simple questions. Let me zoom into my trade and take a much closer look, removing all other things so you can see clearly. First of all, you can notice the relative equal highs at the top. A nice target for me. Remember, it is also the range high, my natural range target. I think any trader in the smart money trading community can recognize the market structure break right here. Again, why this MSB? It is right after the equal lows hunt. It is the 1 hour order block. It is also the range low deviation. This is not a random MSB. It is at the key point. Notice this full breaker block here and the order block that touches with this nice imbalance. Using the premium and discount tool will help you a lot with entries. This is how I took this simple trade. Right after the intersection of order block, imbalance, and the breaker block. This is an example of casual day trading. Nothing stressful, a large enough stop loss, and enough profit to satisfy me. I was also watching the Ethereum. It was building this extremely perfect range here. Three-top pattern at the top, insane liquidity pool at the bottom. What a great range here. There was also this nice hourly order block at the bottom, which is also a nice FTR candle. Price made a range low deviation and manipulation right here by hunting this massive liquidity pool. I did not check it, but I'm so sure that you could find a great low time frame entry right at this point. I actually expected that it would be a strong enough push to reach to the range high and hunt for some liquidity and then make a big fall. Let's take a closer look at what happened. Price actually made a secondary manipulation here by hunting the liquidity from the first manipulation and got deep into the hourly order block. Here is the deal. I want to repeat one more time. Everything we do here is just educated guesses and reading the price. No one in the world knows what will happen 1 minute later. All these order blocks, ranges, and imbalances are part of backtesting, experience, and education to guess the future. The only thing we can rely on is managing our risk and trusting the statistics. Statistics is the only way to be a long-term winning trader. Here is a nice structure shift after the big bounce from the hourly order block. Price pulls back to this order block and imbalance combo, which I love to trade a lot. It is also forced into the discount zone here. As a target, this imbalance was nice enough. This is another extremely simple 1 hour based trade. Nothing complicated, nothing stressful, and nothing challenging at all. Let's talk about trading styles and how I use them. However, these are my opinions. Everyone is different. First of all, if your entry is under 5 minutes, then you are a scalper in my eyes. If you use over 15 minutes of entry, 30 minutes or hours, then you are a relaxed, casual day trader, like the trade examples in this video. Scalpers should focus on one single asset only and master it. Choose one asset, Bitcoin, gold, Euro USD or NQ futures, but nothing else. One single focus. Now, casual day traders must focus on multiple assets. 2 or 3 will be enough for the most. These pairs are great combos to start with. A scalper should never ever open 2 trades at the same time. It will make you lose your focus and make mistakes. Scalping is the final art of trading. Never forget that. I do a lot of New York Open scalping. Sessions are great for scalpers because they bring a lot of volatility and the price moves a lot. Casual day traders actually do not need sessions a lot. Following structures and waiting for clear trading setups is more than enough for the most. Low time frames are extremely volatile. It is best to end trades as soon as possible. On the other hand, casual day traders first need to learn to wait. A trade could take hours or days. This is why you should trade 2 or 3 assets at the same time to grow your account much faster. Let's talk about what do I do and how I manage my trades. I do both styles. It 100% depends on my time management. If I'm at home, I can do a lot of micro scalping, as I did recently, taking 4 trades on the same day. If I go out for fun or for business, I mostly focus on casual trades with good setups. My main focus is Bitcoin futures. Why? Because it is tax-free in my country. I keep all the profit to myself. I used to trade SPY and QQQ options a lot back in the day. Nowadays, I trade them less, not finding so much time for it. I started to practice my Forex skills a lot in 2023. I only focus on Euro and Pound USD pairs. Now, some people ask me about what I do with profits. I mostly invest the money in real estate, then stocks and some ETFs, depending on the time of the year, interest rates, and economic conditions. I think you now fully understand how I manage my time, my trades, and my money. Remember, everyone is unique. You'll find what suits you by yourself. No one can tell you that. Okay, folks, as always, all these trading methods are suitable for scalping, day trading, or even swing trading. I believe that it will be really helpful in your trading life. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon. If you have completed the free trading course and feel like you have improved your trading skills and you want to move to the next level in your trading life, my masterclass is ready for you. You'll learn liquidity, inefficiencies, and structure mastery deeply. And we will look at forward and reverse trading with momentum super boxes. You will also learn how to confirm your entries with magic alignment system. You will discover the yo-yo strategy and the rally strategy with one free indicator. If you are interested, you can find the links on my website on the descriptions. Take care, my friends, manage your risks, and stay safe.